fractionally higher. We also want to check the bond market this morning, looking at yields. We've seen a downside move when it comes to yields. The benchmark at 4.23, moving a few basis points lower from the level we saw yesterday. The 2-year at 3.62, the long bond sitting at 4.9, same level that we saw yesterday for the long bond. Turning global, kind of a mixed finish to the trading day over in Asia. Taking a look at those moves. The CSI, the leader, up about 1 3/4%. The Nikkei up about 3/4%. Looking at the Nifty 50 out of India, pulling back about 3/4%. Remember, those 50% tariffs went into effect yesterday on Indian imports into the U.S. The Hang Seng down about 3/4% as well. Also want to take a look at the early trade over in Europe. We always start with the stock 600, basically the S&P of Europe. Pretty much flat, just very fractionally lower right now. Your leader is the French CAC, the MIB up fractionally along with the DAX. The FTSE's your laggard, pulling back about 1/3 of 1%. Okay, that is your setup. Now turning back to our top story this morning, that's NVIDIA. Most lofty expectations, but still posting a top and a bottom line beat with sales north of $50 billion for the quarter. Still, shares are hurting, pulling back more than 1 3/4%. The China factor playing a major role in this quarter. The company assuming no H20 chips were sold in the last 3 months, but maintains it is still a huge opportunity.
The opportunity for us to bring Blackwell to the China market is a real possibility, and so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
Global Head of Technology at Wedbush Securities. Dan, good morning. Thanks for joining us.
Great to be here.
All right, I want to start with the same question I asked our Arjun Gopal earlier. We have a lot of notable voices out here that believe that this is an overreaction to the stock, and the stock actually has the potential to go positive throughout the trading day. What was your take on the quarter? Do you think the downside move was an overreaction?
Yeah, Frank, I think the stock's up today. And to my point, I think it's really when you look at the guidance, and that's not even factoring in China. I mean, China could be an incremental $2-5 billion. And they did for the first time. Jensen talked about maybe giving a little sneak peek. China revenue could be 50% growth. I mean, that was just eye-popping. And I think as investors digest this is a stock that's up, and I think a further validation for the AI revolution as well as NVIDIA.
All right. The miss was on data center revenue. It was a very slight miss in all fairness, but it was a miss. How should we read that? I know it doesn't include any China guidance, but the fact that it wasn't a blowout quarter for data center when we continue to see these CapEx investments by the hyperscalers and other companies.
Look, Frank, I view it as noise because in my view, you got to look at the story with China. You can't look at it excluding China. And I think when you look at this quarter, you look at next quarter, and with I think the most important thing Jensen talked about is the 50 billion, the 50% growth. You know, when you're thinking about what China could be. I mean, you put it all together, this is a story that is actually just going into acceleration mode. So there's nothing here that makes me less bullish. I mean, I actually think you're more bullish as a validation point in terms of what you're seeing without China.
All right, Dan, we know you're one of the biggest bulls when it comes to tech on the street, but there are some other factors here. First, we had a report yesterday that China's trying to triple its chip output. Arjun Gopal mentioned there was a Chinese chip company and saw its profits increase by 4,000%. So there seems to be some rising domestic competition, and the Chinese have also voiced some concerns about security issues with these H20 chips, and also just, I guess, some hurt feelings about some things that the Commerce Secretary had. I mean, aren't these some real issues for this company's ability to sell in China and grow those revenues that they forecasted, but aren't there some real headwinds along the way?
Yeah, look, no doubt. I mean, Jensen's going to have to play that 10% politician, 90% CEO, the back and forth between DC and Beijing. Look, the biggest chip on this poker table is NVIDIA. But it comes down to, in China, they want NVIDIA chips. It's the only, you know, to me, not just game in town, it is the chip fueling the AI revolution. And I think as you start to see this play out, you're going to see that China market continue to expand massively because they're years ahead relative to any other competitor, including Huawei. And I think that is just the reality as this all plays out. You know, there's going to be a lot of noise, But at the end of the day, the top of that mountain is the godfather of AI, Jensen, NVIDIA.
All right, let's talk about investing right now. It's hard to call this buying the dip because this stock's run up about 35% since its last earnings. It's only pulled back right now about 1.75%. But when it comes to NVIDIA or even the NASDAQ, again, hard to say buy the dip because the NASDAQ futures are just very slightly in the red. Do you see this as a buying opportunity? And if you thought that the stock was frothy before earnings, isn't it still basically kind of frothy?
Yeah, I mean, to that last point, I mean, I actually think it's cheap relative to where I think numbers are going. I think Street's underestimating numbers 25-30% next few years, especially when you factor in China, what ultimately this could look at. And in my view, you combine this with what we saw from the hyperscalers and what we're seeing in terms of overall earnings, what you've seen from Snow, what you've seen from MongoDB, you combine that all, of course, Palantir. This now, the story is playing out. The next phase of AI revolution is playing out. And that's bullish not just for NVIDIA, but for tech. And I think tech stocks rally more into year end.
All right, Dan, I'm going to ask you a tough question, at least for you. Is there any part of the tech landscape that you're seeing weakness in following this report? Like we see CoreWeave up, we see some other stocks just fractionally lower. Is there any part of the AI tech trade that you have questions about following this report related to the data center numbers or anything else?
Look, it's not necessarily on that side, but like when you look at Adobe and you look at software, I mean, this is just further shows like what could be eating their lunch, right? That it's putting more software on the defensive. Salesforce, Adobe, I think Salesforce will actually be able to come out of this strong. But look, I think this just shows this AI arms race is not slowing down. It's accelerating. And there's one person that when he talks, you listen. He's wearing a black leather jacket. His name's Jensen.
All right, we're going to leave it there. Dan Ives, great to see you as always. Thank you very much.
Thank you.
All right, coming up on Worldwide Exchange, betting big on Win, the new bullish call on the gaming giant that's out this morning. We're going to have that and much, much more when Worldwide Exchange returns. Win shares up just about 2% right now. Stay with us.
Round out yours.
Welcome back to Worldwide Exchange. Time now for your morning call sheet. We got UBS upgrading its rating on Wynn Resorts to a buy. UBS citing higher estimates around Wynn's Macau operations and a more bullish view on its UAE resort. BMO initiating coverage on Service Titan, giving it an outperform rating and a $129 price target. It calls the stock an attractive opportunity and says the cloud-based software platform designer is a category leader. All right, coming up here at Worldwide Exchange, retail earnings back in the spotlight with several high-profile reports today. The names our next guest says are a buy, and the names that he says that you should avoid. As we had to break, a quick check on two retailers that are on the move this morning on the back of earnings, looking at Urban Outfitters. You can see shares are falling more than 5% despite beating street estimates. The company warning that higher tariffs will eat more of its margins. Then we got Five Below shares. Those are rising. They're up 4.5%. It's forecasting current quarter revenue above expectations, also raising its full-year revenue outlook. We'll be right back after this.
With Shopify.
Welcome back to Worldwide Exchange. The so-called de minimis exemption, which allows goods worth less than $800 to be shipped to the U.S. duty-free, that ends tomorrow. The closing of this loophole will increase distribution costs for e-commerce players in Asia like Shein and Temu. But as Courtney Reagan explains, some major U.S. brands and retailers have also relied heavily on that exemption.
We're at Cart.com's Florence, New Jersey fulfillment center. The third-party logistics provider stands to benefit as the de minimis exemption expires because retailers using the de minimis exemption to ship are now turning to U.S.-based third-party logistics partners to fulfill those under $800 orders. Cart.com accepts goods made all over the world and then fulfills for brands like Janie and Jack, Hatch, Adidas, Guess, Bare Minerals, and others. It just signed 2 new clients and says more are interested as the de minimis loophole closes. Many brands utilizing the de minimis exemption often use warehouses in Mexico, in some cases Canada. Then trucks make daily milk runs, driving pallets of shrink-wrapped merchandise to shipping facilities built for this reason just across the border.
These brands were taking advantage of a 30 to 40% cost arbitrage by shipping out of Mexico, and then on top of that, getting another 25% arbitrage because of customs and duties, and that made it worth for them to ship out product 1 to 2 days later and pay the extra cost in shipping because they're now zone skipping, right? But as these brands now come to the U.S., the cost of operations is going to be higher.
Tapestry says the elimination of the de minimis exemption will have about a 20-cent drag on earnings for fiscal 2026. Barclays estimates around 14% of Tapestry's total sales will go from paying zero tariffs to 30%, and says Lululemon will be impacted too. Direct-to-consumer apparel company Ministry of Supply has been transitioning its own supply chain for 6 months in preparation of the de minimis expiration. CEO Ayman Advani tells me some brands are panicking. They've been using de minimis because it's smart, it's common, it's legal, and it's safe. Frank?
Earnings season rolls on today with several retailers on the docket, including Dollar General, Dick's Sporting Goods, and Best Buy. It's been kind of a tough year for a lot of these names, as worried shoppers may be holding back on some of their discretionary spending. Let's bring in Scott Mushkin, founder and CEO of R5 Capital. Scott, good morning. How are you doing today?
Good, Frank. Good to be with you.
All right, I want to hit some of the companies with earnings today. One of them is Best Buy. I think this one's interesting. You have a $67 price target. You have a sell on it. Is that due to tariffs, or is there some other reason why you're seeing this name as a sell going into earnings?
Yeah, it really has nothing to do with tariffs. What we see, we're out in the field a ton, Frank, and so we're in a lot of stores. I was just in some stores up in Massachusetts. The stores are empty. They're struggling to understand what to put in those stores. Amazon obviously has a big share of electronics. You know, Costco's been growing very quickly. So the model itself, we feel, is broken. And, you know, when you walk into a store, there's empty end caps, there's empty space in the store. It really gives you a pause about the model and where it's going from here. One good thing I would say, their customer service is good. But besides that, we worry that Best Buy doesn't really have a big place in retail going forward. And that's what drives our sell rating.
All right, I want to go to another name that you also have a sell rating on. It's pretty interesting. We were showing this. This is one of the winners when it comes to retail. Dollar General, you actually have a price target of $82. This is a company trading right now at about $1.13. You have it declining very significantly. What happens to this company going forward that you see it moving to the downside?
Yeah, I mean, so on the good news side, we had a sell on this company for a long time and then took it to a hold earlier this year, then back to a sell. So the good news side is they're actually executing better. But after you get through that, the news is really bad in our opinion. Pricing, we think, in everyday essentials is starting to come down. Good for the consumer, not good for companies like Dollar General. They're also facing increased competition from Dollar Tree, which is adding in a lot of consumables in their multi-price point. A lot of competition. Amazon announced their rural expansion. That's bad news. And then, of course, Walmart, who they compete with more than anybody, with their Walmart Plus. We do think Walmart gets more aggressive on price. And so we think there's a lot of downward pressure on some of these products that DG sells. I mean, in the end, it's almost like a supermarket. And then the other thing I would say is their pricing. It's kind of weird to say, hey, Dollar General doesn't have good pricing, but all our pricing surveys flag the idea that they are priced well above Walmart, especially when you get out of some of the packaged food areas. So yes, we don't like Dollar General at all. What we're expecting this quarter might be okay. Some of these trends are very, very recent and are going to be developing over the next 12 to 18 months. If it's a good report, we tell investors to sell the stock.
So, Scott, it's really interesting that you're seeing these potential headwinds when it comes to Dollar General. You kind of see the big rise in the stock, then it flattens out. It sounds like you're saying that's partly in due to pricing and some share going to other retailers like a Walmart. Right. As we go ahead, we showed Dollar Tree as well. We see big rises in both of those names as we saw more, I guess, budget-conscious consumers in the beginning of the year that were concerned about tariffs and other economic issues. What retailers do you see benefiting in the back half of the year, as I still think we see a pretty budget-conscious consumer?
And we do. And there's not much, I think, as I look at, you know, I've done this for almost 30 years, as I look at our coverage, and I was talking to one of my associates yesterday, we don't like much, which is kind of a weird place
wow,
to be.
Scott.
A lot of sell ratings. Dollar Tree's the exception. And it really has nothing to do with the tariffs or the macro. It really has to do with their multi-price point strategy that they're rolling out. It's something they very much stumbled on until this year. So we think they're making a lot of traction that can drive sales, that can drive traffic. And then, of course, as the consumer, you know, seeks out value, that's good. That's kind of the icing on the top of the cake. But we think Dollar Tree is very interesting over the next 12 months. And we think their earnings are going to rise very rapidly as they roll out effectively, finally, multi-price point.
You know, I know you don't like everything, Scott, but in all fairness, you do have a buy on Dollar Tree, TJX, Walmart. Just give us some of the names that you do like. But it sounds like you're saying it's going to be a pretty tough outlook for retail. Scott Mushkin, great to see you.
Yeah,
Thank you very much.
Thanks, Frank.
All right, coming up on a worldwide exchange, we're going to tee up the trade day ahead as investors they try to shake off those concerns around NVIDIA's latest earnings. You see futures right now a bit mixed. The NASDAQ under some pressure. The Dow looks like it would open about 90 points higher. The S&P just very fractionally higher. And if you haven't already, follow our podcast. If you miss Worldwide Exchange, check us out on Apple, Spotify, or other apps. We'll be right back after this.
Now.
Welcome back. As we close on the 6 a.m. hour, a check of a few big stories that we're following this morning. The Trump administration revealing it's fired CDC Director Susan Menares after she refused to resign. Menares' lawyers say their client's being targeted for her pro-science stance. Four other top CDC officials also announced they were quitting, checking pharma stocks on the back of that news. In the green across the board, Merck up about 0.25%, Pfizer up about 1/3%. Bloomberg's reporting that Mexico plans to increase tariffs on imports from China after pressure by President Trump to do so. The report adds that tariffs, which will take hold next month, will impact cars, textiles, and plastics. Meanwhile, Japan's top trade negotiator has canceled a trip to the U.S. scheduled for today over issues related to trade talks between the two countries. Officials say the move was made due to certain points in those talks requiring further technical discussion. They also added Tokyo will urge the U.S. to amend its order on reciprocal tariffs. Tesla's European sales falling 40% from a year ago in July, according to new data from that region. Meanwhile, Chinese rival BYD saw its sales surge 225%. This marks the 7th consecutive monthly decline for Tesla at a time when overall EV sales are rising in Europe. And Google announcing it's reached a short-term extension with Fox to prevent its channels from going dark on YouTube TV. Google did not specify how long that extension is for. It comes as Fox is set to air a very highly anticipated college football game this weekend between Texas and Ohio State. A lot of anticipation about Arch Manning taking over as the QB of the Longhorns. All right, turning back to the markets, another check on futures right now. As we mentioned, kind of mixed. The NASDAQ under a bit of pressure following NVIDIA earnings. The S&P and the Dow both in the green. The S&P very fractionally higher. The Dow looks like it would open about 100 points higher. We're also watching NVIDIA shares on the back of those earnings. Last check, they were pulling back about 1 3/4% Right now, I believe they're hitting their lows of the morning, pulling back just about 2%. For much more, let's bring in Vance Howard, CEO of Howard Capital Management. Vance, good morning. Great to have you here.
Hey, good morning, Frank. Good to see you again.
What do you make of NVIDIA earnings? I know you're not a chip analyst, but what do you make of what it says about market sentiment right now? NVIDIA only missing on one segment when it came to data center revenue. The rest of the report, very strong. Do you think it was an overreaction? How do you see the markets reacting today?
NVIDIA is one of the best companies that's out there right now. I mean, you look at their earnings, you look at their revenue growth, you look at what's going on over there. It's an A++ company. So, the market's a little bit dull right now. It's just sort of flat. I think a lot of players sort of got the summer doldrums right now, but they'll come back and they'll start playing pretty hard. The market's in a solid uptrend. I think this is a great buying opportunity. I'd be buying NVIDIA. I'd be adding to our positions, which we already have.
So just in all fairness, Vance, and I was hitting this with Dan Ives earlier, you're not really buying the dip right here. I mean, it only pulled back about 2%. It was up over 30% going into earnings. So it still, had a big run up this year. It trades at about 35 times forward earnings. Is this stock frothy? Is the market frothy? Is that what this pullback's really about, that everything was priced to perfection and it just wasn't perfect?
I don't think so. I think these little stocks that are having these 1, 2, 3 percentage point pullbacks, I think they're buying opportunities to add to really, really good positions. Our short, intermediate, long-term view on the market is this market's going much, much higher, Frank. I think that 5 to 6 years from now, I think you can see the S&P double. So when you look at things like NVIDIA, any opportunity you can get to buy on a 2 or 3, 4, 5% pullback, add to your position, looking at a year, 2 years, 3 years out, I think you're going to be very, very satisfied.
All right, what about some of the second derivative plays, data centers, other chips, energy players? Any questions about any of those?
No, I think a lot of the market's going to go higher. You were talking earlier with one of your producers about one of our top picks. Interactive Brokers, I think, is looking incredibly strong right here. And one reason I think Interactive Brokers is looking so strong is that you've got so much. I think the market's going to do so well over the next 5 to 6, 7 years. You're going to get more and more investors that are using that tool to trade different stocks domestically and internationally. And it just got added to the S&P 500. So every time somebody buys a share of the S&P 500, they're buying a little piece of Interactive Brokers. So great company. I think it's got a great story going forward the next 3, 4, 5 years for investors to add to a position here and do very, very well.
Yeah, being added to the S&P has been a tailwind for quite a few stocks that we've seen added in recent months. So You're so bullish. I got to ask you, your word of the day is flat. What's flat?
Well, you're looking at this. I think what it is just a little Spanish pause, as we say in Texas. When you hit these summer doldrums, people are just now going back to school, so you don't have as many people that are trading right now. I think over the next 2 or 3 weeks, you'll see this start to firm up. I think the market's building up steam to have a last quarter that's going to be incredibly strong. Our case, I told you that we thought the S&P would be around 6,500 at year end. We've actually raised that to 6,700 on the S&P. I think that we'll get a really strong fourth quarter going into the last part of the year. And I think there's so much cash on the sidelines. There's $7.4 trillion in money market right now, and it keeps going up day by day by day. And if the Fed ever drops rates, by a half a point or a point, you'll see some of that money come flowing into equities, which is going to push it higher.
All right. We got your stock pick with Vance. We got to go, but really quick. Texas or Ohio State? Which one you picking?
Oh, you got to go with Texas, man. Come on.
Come on, that was a layup, Vance. Vance, great to see you.
I went to A&M.
Your pick for us today, Interactive Brokers. Always really good to see you. Thank you very much.
Good to see you, Frank.
All right. One more look at futures. As we mentioned, kind of a mixed picture. The NASDAQ under some very slight pressure right now, pulling back. The Dow looks like it would open about 100 points higher. The S&P very fractionally higher. We also want to tell you what to watch today. We get initial jobless claims, the latest look at Q2 GDP and pending home sales figures coming up this morning. We're also going to hear from Fed Governor Christopher Waller later on in the evening. And then on the earnings front, a lot of retail names. That does it for us. Squawk Box starts right now.
Good morning. We have a new read on the AI economy courtesy of chip giant NVIDIA. A complete breakdown of the second quarter earnings straight ahead. And the Trump administration moving to fire the director of the CDC. Her lawyers now saying that Health and Human Services Secretary Robert F. Kennedy weaponizing public health for political gain. And Tesla sales plunging in Europe as an Asian rival gaining market share. It's Thursday, August 28th, 2025, and Squawk Box begins right now. Good morning and welcome to Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilford Frost, in for Becky and Joe. We've got a big show. The week continues to be crazy in terms of just the amount of news coming at us, guys. But before we do all of that, let's get everybody caught up on U.S. equity futures at this hour. It's an interesting picture. You're looking actually oddly at the NASDAQ down. We'll talk about that for a second. But Dow up about 108 points. We also have the S&P 500 up a little over a point. Treasury yields right now, you can look at the 10-year note and the 2-year note. We're looking at the 10 right now at 4.2. You're looking at the 2-year at 3.6. The big news of the morning, though, is this. NVIDIA shares falling despite the AI giant beating analyst estimates on the top and the bottom line for the second quarter. CNBC's own Christina Partsinevelos joins us right this moment to break it all down because it's the one number that everybody has been looking at.
Yeah, it was a busy day yesterday, that's for sure, and today will be the same because despite beating estimates, investors really are right now focusing on the few weak spots. The $54 billion October guide did beat consensus, which is great, but buy-side whispers actually wanted $1 billion more. Data center revenue also missed for the second straight quarter, but there could be a good reason according to management. CFO Colette Kress said missing H20 shipments to China cut $4 billion from sales, and that's causing that 1% sequential drop. Still, they managed to salvage about $180 million by selling inventory to a non-Chinese customer. I literally texted NVIDIA late last night asking about that customer. They wouldn't tell me. China remains, though, out of the picture right now. Like AMD, NVIDIA excluded China from its $54 billion outlook due to export uncertainty. But management's pretty optimistic. If regulations ease, H20 chips could generate, according to them, $2 to $5 billion. CEO Jensen Huang isn't sweating White House approval either. On the earnings call, he said, quote, "I think the opportunity for us to bring Blackwell to the China market is a real possibility. We just have to keep advocating the sensibility and importance of American tech companies to be able to lead." Translation, keep lobbying the government. The AI demand, though, story does hold, no doubt. Blackwell Ultra, which is this next iteration of chip, just started generating tens of billions of dollars in this July quarter. Their next version is called Rubin. It's on track for the second half of fiscal 2026. Hyperscalers doubled CapEx to what they're saying is $600 billion a year. This is according to Jensen Huang. Plus, sovereign AI is rising, and NVIDIA is getting a huge chunk of that. And so that's why you have a mixed reports. You have Evercore and Baird calling this tiny pullback, albeit only 2% down, a buying opportunity, whereas others I'm reading right now, TD Cowen saying it's underwhelming, but by recent exceptional standards, and UBS saying that there's still some headroom for growth, but maybe right now is a pause. Guys?
So, Christina, the one question I have is we all look at NVIDIA as this bellwether about almost a reflection of how big the AI ecosystem can be, how much it's going to continue to be propping up the sort of larger economy given the domino effect. It's hard to look at that, even if you think that they missed in their own non-missing way. It's hard to look at that and think anything's slowing down. And in fact, doesn't it suggest at some point that maybe it's just actually spreading to other chip makers?
So for your point about growth, it is decelerating. So growth for revenue was 56 year over year. 2 years ago it was 100%. So some people will say, oh, it's slowing a little bit, but they're still growing. And to your point about expanding beyond just the hyperscalers, on the call, they actually said that they got $20 billion from sovereign, building the sovereign funds, specifically around AI and stuff like that. So that's an opportunity as well. And then you have to think about enterprises that are going to be building all of these databases on location. I didn't highlight the numbers, but Jensen Huang did speak to that as well, that so many companies are going to have to put forward these types of infrastructure. So there definitely, no doubt, is opportunity. It's just, if you're an investor, do you want to get in now when perhaps a lot of the upside has been already priced in? And you can see that by the analyst estimates. The spread from the whisper numbers to just the sell side is narrowing even more. So it's just we're not going to see those magnitudes of beats anymore. It seems to be the consensus in a lot of these reports this morning.
Christina, my question is on how much supply they've got, how quickly they can ramp up production. Because I don't know if you saw this statistic, which really jumped out to me. Across total Q2 revenue in data centers, 2 companies, which they call in their report Company A and Company B, obviously they don't reveal who it is, were responsible for 44% of the revenue. I mean, that is absolutely mad when you consider the scale of this this revenue? Presumably it's Google and Microsoft. In any other business, that would be seen as a massive concentration risk. But I guess the upside argument here would be that it would be more broad and there'd be other players buying tons of these chips if they could meet the demand. I mean, is that a factor here, or is it a concentration risk problem for them?
That is an excellent question, and I tweeted this late last night, and it got way more attention than I anticipated overnight. Why? Because I tweeted there are now 3 major customers. The first one contributes 23% of total revenue. So you have the concern of concentration, which is what I alluded to, but the other flip side of it is that NVIDIA is catering to the large hyperscalers right now because they have the billions of dollars in money, and they're the ones that are going to be spending right now. But eventually that, you know, that portion of the pie will start to spread out amongst all of those enterprise firms. But to your point, on the call yesterday, Jensen Huang did say the 4 largest cloud service providers that are their customers do contribute 50% of data center revenue. So you can, I guess it just depends on, are you a bull or a bear for NVIDIA? If you're a bear and you think that the stock is not going to go anywhere, you're going to say, oh, if one of these guys doesn't spend anymore, it's going to hurt this company, and you're going to see a massive stock drop in just, you know, the subsequent quarter or like the few months that follow that commentary. Or you would say, oh, well, no, NVIDIA's just catering to the big guys because they have the money right now, and eventually they'll start giving out the GPUs to all the other players that are scrambling to get just some of those chips.
Christina, I want to thank you for some smart analysis early in the morning and some late night tweets as well. Appreciate it. Leslie?
The Trump administration firing the director of the CDC hours after she refused to resign. In a statement, a White House spokesman said Susan Menarez is not aligned with the president's agenda of making America healthy again. Menarez's lawyers said she would not resign and had been targeted for refusing to, quote, rubber stamp unscientific directives at the CDC and get rid of health experts. They accused Health and Human Services Secretary Robert F. Kennedy Jr. of, quote, weaponizing public health for political gain. At least 4 top government health officials announced their resignations after Health and Human Services posted on X late yesterday afternoon that Menarez was no longer CDC director. She'd been in that position less than a month. The Washington Post is reporting Menarez had faced pressure to change CDC vaccine policy. Earlier yesterday, the FDA approved the next round of COVID-19 shots for the fall, but only for a smaller high-risk group of people. Obviously, this has implications for vaccine approvals. It has implications for insurance. Obviously, this is the latest string of firings we've seen over the last few weeks.
I was going to say implications for pressure on various appointees, and something we'll definitely be discussing throughout the day here on CNBC. I nearly said Sky News there. On CNBC, on Scorebox. Now, at least 21 Federal Emergency Management Agency employees have been put on leave after signing an open letter criticizing the Trump administration's disaster preparedness and response capabilities. The founder of the organization behind the letter confirming the administration's move to NBC News. The letter highlighted FEMA's overhaul after Hurricane Katrina, but said the agency's current course reflects a departure from the intent of that reorganization. In response, FEMA spokesperson said it was not surprising that the same bureaucrats who presided over decades of inefficiency are now objecting to reform. We're watching now shares of HP Inc. They also had earnings out of 75 cents per share. They beat estimates by a penny. Revenue also beat estimates, and current quarter guidance was in line with expectations. On tariffs, HP said it's adjusted to using manufacturing facilities outside of China for almost all of its products sold in North America and has raised some prices, but said it was able to mitigate the majority of tariff costs in the quarter. It's down 1.4% in the pre-market. Right, still to come, is the independence of the Fed seriously threatened in the United States? Former Cleveland Fed President Loretta Mester will join us on a big week of headlines on that topic, and of course ahead of a couple of key bits of data over the next 2 days. We'll be right back.
Favors the bull.
What about President Trump's attempted firing of Fed Governor Lisa Cook, pushing the issue of central bank independence to the forefront of investors' minds? I spoke with Fundstrat's Tom Lee about this issue on my podcast, the Master Investor Podcast, and asked him whether intervening in the Federal Reserve would be good or bad for equities if it led to a more dovish Fed.
The main one of the week, Fed interference, for example, or if anything, does that spur equities potentially?
Yeah, Wilfred, Fed independence is really important because the Fed is the single most powerful entity in the world, right? Because what the Fed says triggers an instant response across all markets and CEOs and policymakers everywhere and even government. So that being independent is critical. I think that we're going to ultimately find that the administration does accede to what markets rationalization is, and I think the markets don't want to see a non-independent Fed.
The Master Investor Podcast available wherever you get your podcasts. Let's discuss all of this now with the former Cleveland Fed President Loretta Mester. She's now a joint professor of finance at UPenn's Wharton School and a CNBC contributor. Loretta, great to see you. Long time no speak. It's so interesting hearing someone suggest, the markets will ultimately decide where this goes. Do you think the fact that markets have been calm this week, the dollar, various bond yields, is a surprise given what we've seen from President Trump towards Lisa Cook?
Well, there has been some reaction in the markets, probably not as big as, what we saw when the tariffs originally were announced and other disruptions in the market. I think markets are focused on short run. And of course, the upcoming meeting in September of the Fed is kind of where their focus has been. This is going to affect the economy in the longer run sense, right? We're going to have a potential bias to higher inflation. We're going to have to see higher long-term bond yields because investors are going to want to get some protection against that higher inflation bent. And so I think right now the markets are focused on the short run and not the long run, which is precisely why you want to have an independent monetary policy making central bank. The central bank focuses on the longer run and setting interest rates, or the short-term interest rate, to help the economy meet price stability and maximum employment goals. It doesn't focus only on the short run. And that's because monetary policy affects the economy in the long run. So the fact that the markets haven't reacted strongly actually underscores the need to make sure that we maintain an independent Fed and in terms of their monetary policy making.
More broadly, what was your reaction? I'm sure you also still speak to a lot of your former colleagues at the Fed, but what was your reaction to seeing that letter sent from President Trump to Lisa Cook? Does it send a sort of shiver down your spine that one way or another, from now on, the government's going to be really pressuring Fed members?
Well, we saw earlier in the year that the president took a pretty unprecedented step in floating the idea that he was going to fire the Chair Powell. And this is an escalation of that kind of pressure. I think we've seen in the past, and we've read in memoirs of Fed chairs, that they've been pressured by their presidents. What's different this time is the vitriol, the public nature of this aggression, and the fact that steps are being taken based on allegations, innuendo, without any facts on the table, without any due process about this event. So this is bigger than just going after one governor, Governor Cook. This is really about trying to influence who's on the board before the terms of those officials are up.
Right.
And by doing that, right, if the president ends up being successful, and of course it's going to go to the courts, of really removing someone just based on an allegation, a rumor, an innuendo, without any kind of facts on the table, then we have lost Fed independence, because anybody would be subject to that kind of arbitrariness. And so this is a very serious escalation of attacking the Fed for its policy making, not for other purposes. And that's what's so I think, unfortunate about this. And it's going to affect the American economy, households, businesses. We're going to be worse off because of this. And even if Fed policymakers, which I firmly believe, are going to set any of these kind of influences aside when they're making policy, just bringing up the possibility that they may not be, that they may be influenced by the politics of the situation, affects the markets, affects the economy. So that's why this is so unfortunate.
Loretta, I want to take this whole thing one step further, and then I want to go back and talk about Lisa Cook for a moment. But the president made a very interesting comment earlier this week where he talked about trying to get a majority, talked about a majority on the board. Historically, I don't think we've ever heard a president or anybody really talk about a political majority on the board the same way people had described a political majority, if you will, on the Supreme Court, for example. But one of the reasons this becomes uniquely important later on, actually within the next 12 months, frankly, next February, the 12 Federal Reserve presidents come up effectively for what I think is described as a reappointment. That happens by the board. And so if the board is somehow a political entity, is it possible that they could decide that the 12 other presidents that are in those roles today then get replaced themselves? And then what happens? Because then you're talking about a significant and almost generational change on the Fed.
Well, that idea has been talked about. You know, a lot of people are talking about that. That's one of the possibilities. There is a process, a reappointment process that, of course, involves the boards of directors of each of the reserve banks, right? So, you know, I went through the reappointment process, and your board of directors, the chair of your board, runs the process. And you're right, the board of governors then takes that information and then makes a determination. So there is a process in place that's supposed to rely on, you know, an objective performance evaluation based on what your board of directors gleans from talking to constituents in your district, talking to other people in the Federal Reserve about whether you're doing your job in terms of policy making, in terms of engagement in the community, in terms of actually the operational running of your reserve bank. So that's in place, and presumably they've started that process already because it takes a while to get that information together. But I think
just to put a fine point on it, if this Federal Reserve Board is somehow red and not blue, could they decide, look, Austin Goolsbee, lovely guy in Chicago, used to be an Obama guy, we can't have that? Meaning, how can this actually how far can this go?
Well, we're in uncharted territory given where we are. But there wouldn't, in a normal case where Fed governors are doing what they're charged to do, they wouldn't not reappoint someone based on a whim or based on they don't like your policy views. There would have to be some substantive issue. Now, if we're going to have people on the board of governors who basically don't do the job that they've been asked to do, right, then of course things could happen. But I don't believe with the current people on the board, right, that we're in any danger of that, right? The people who are on the board, whether they've been appointed by a Democratic president or Trump or another Republican president, they've always took their job very seriously, and the current crop of governors takes their jobs very seriously. They do not allow politics.
Loretta, let me ask you one final question. Do you believe it is incumbent upon Lisa Cook to publicly defend or not whatever took place with these mortgages? Because putting aside the legality of this all, do you believe there's any kind of moral obligation as a board member of the Fed representing hopefully the public? And I ask because we have not really heard a full-throated defense at all from her about what took place.
Well, I don't blame Lisa Cook at all for listening to what her legal counsel has told her to do. We're now beyond sort of what the normal case way of process would go. right? The normal way the process would go would be there would be an internal investigation if an allocation of impropriety comes up. And we've seen that with some of the investment rules, when that was viewed. And then, perhaps an action would be taken or not. But now we're beyond that. The president sort of circumvented all that by moving it into a situation where it becomes a legal case. And so at this point, I would be listening to the counsel. I don't think this is the right time for bringing this even more into a quid pro quo going back and forth, right? You have to now, we're in a different world now. We've got to, follow this process, which is a judicial process. It'll go to the courts. We'll find out how the courts rule. But I think we're in a situation where if it's true that a president can remove someone based on an allegation, an accusation, without any facts, then we've lost Fed independence. And that's what's so damaging about this.
Loretta Messa, great to see you as always. Thanks for joining us.
Thank you.
Okay, coming up, but right after this, we got a lot more on Squawk Box. Some tough new sales numbers, I should say, for Tesla coming out of Europe. We're going to get you caught up on that next. And a reminder, you can get the best of Squawk Box in our daily podcast, including all these conversations we've been having all of this week. You can do that on your favorite podcast app. Listen anytime. We're coming right back.
C.
Welcome back. Sales of Tesla vehicles in Europe plunging in July. The European Automobile Manufacturers Association saying the company's new car registrations totaled just 8,800 last month, down 40% year over year. It was Tesla's 7th consecutive month of European sales declines, even as the industry data showed overall sales of battery electric cars rose. China's BYD saw a 225% surge in new European registrations in the same time period. So BYD clearly picking up a lot of share and then some, it seems like, from Tesla. You're on the ground in the region, so you see these things firsthand.
Yeah, and you're really suddenly seeing more of them, particularly for like Ubers as well. And I think you get much lower tax in London if you're an electric vehicle as well. So you're seeing a lot of increase in that sense.
The price point for BYD relative to Tesla in Europe
is way lower.
Tens of thousands of dollars.
Yeah, Tesla's like comparable to, buying a top-end Mercedes or a top-end, other electric vehicle cars. So yeah, the prices are wildly different. I actually think the EU has a higher tariff than the UK does on BYD cars on Chinese automakers, but it's not as high as the US automakers is on those cars. And guys, I'll just bring it back.
Is your sense, though, that these vehicles are so good? I mean, the thing that everybody talks about in the US is that maybe our cars, even though we like to think we've got great cars, will never catch up or be as good as the vehicles coming out of China.
Definitely. I mean, look, I've never driven one, but I've sat in the back of them. And, in terms of a functional car, for the price, it's off the scale. And I think, that's the other point. We touched on this a little bit yesterday about does the policy of containment, whether it's on chips or autos, work? And we're in a crucial different position now when these European countries, UK or EU, are facing a combative US administration. Again, you can say this is right or wrong. They are more likely today, as much as the US is amping up its clashes with China, more likely to allow these Chinese-made products in because they're questioning whether they can rely on the US in that sense. And again, just the quality of the price is really quite impressive. The UK is in a slightly different position to the rest of the EU because, alas, our auto industry is much diminished from where it was decades ago, and it's much more focused on the very high end. So that's Jaguar Land Rover, it's Aston Martin. Even though Bentley and Rolls-Royce are now owned by German automakers, they're made in the UK. So letting in cheap foreign EVs isn't as much of a political threat as it is certainly in the US or in Europe, where you've got a lot more, Peugeot, Citroën, and all the German automakers.
Yeah, you're not taking an Aston Martin Uber.
Exactly.
In Europe.
Although I think they should introduce that. The 007 Uber.
Ooh.
Be quite nice.
5 stars.
Yeah, 5
What kind
star
of premium would you pay for that?
I mean, it's James Bond branded. You could have me pretty easily. 10x or 7x. How about that? There we go. Anyway, coming up, new data on how Americans are struggling with debt. We'll get you into that story next. And as we head to break, a look at yesterday's S&P 500 winners and losers. We'll be right back.
Good morning and welcome back to Squawk Box right here on CNBC. We got a lot going on. Let's show you the futures right now. We got this NVIDIA news last night, earnings, but bit of a mixed picture, oddly enough. We'll talk about that because the numbers looked good, but maybe not as good as some people had wanted. You look at the NASDAQ off about 8 points this morning. The Dow, though, up about 84 points. The S&P 500, we'll call it basically unsure, just maybe 1 point up. Take a look at Treasuries, the 10-year note. Despite all of the questions about the Fed, sitting at about 4.2 still, you're looking at the 2-year at 3.6. Leslie, what do you got?
Thank you, Andrew. CNBC has exclusive data from the National Federation for Credit Counseling and the Harris Poll showing how Americans are struggling with debt and how it cuts across all income levels. Sharon Epperson joins us now to break down this data. It sounds a little concerning.
It is concerning, Leslie. Data shows that many Americans are missing the mark on executing financial basics like budgeting, building emergency savings, paying bills on time, even though they give themselves top grades on their knowledge of personal finance. According to the National Foundation for Credit Counseling survey that was conducted by the Harris Poll, more than half of Americans do not have a budget. 2 in 5 carry credit card debt month to month with an average balance of about $6,500. And while lower income households are most likely to worry about paying for basic expenses, new research shows Americans face a serious debt dilemma regardless of how much money they make.
It really doesn't matter on the income level. It's really about the debt level, because when you reach the tipping point that the interest expense exceeds what you can afford to pay, that's what gets the consumer into trouble.
There's several signs consumers' debt struggles are getting worse. The latest NFCC survey found the percentage of people who said they made a credit card payment less than the required minimum in the last 6 months rose to 13% in August, up from 8% in the spring. There was the same increase in people who transferred debt between cards, and the share of borrowers who consolidated credit card debt into a personal loan doubled to 8%, up from 4%. Other data from VantageScore shows more consumers are failing to pay bills on time compared to a year ago, and payments that are more than 90 days late are rising.
The employment environment, that's worsening, and we're seeing that in late payments. But the reality is another trend that's been going on for some time is inflation and sustained high interest rates. Those are the other key drivers of that change.
VantageScore's Tavares says an across-the-board increase in late payments over the past year shows signs of financial strain even among the most credit-worthy borrowers. For strategies on dealing with debt and easing that strain, subscribe to my free Money 101 newsletter series. You can use the QR code right there on the screen or go to cnbc.com/money101. Leslie.
Sharon, how are lenders reacting to the growing debt dilemma? Are you seeing them kind of failing to extend credit? Are they pulling back at all?
They're certainly tightening their lending standards, and we saw that in the latest Fed survey looking at some of that data, and also from VantageScore's Tavares saying that we are definitely seeing tighter lending standards with car loans, home loans, but also consumer demand for those loans is not as great. And when you think about this latest Experian survey looking at auto loans, with 1 in 4 consumers paying as much as $1,000 a month for their car loan, you understand why people may be deciding maybe I don't want to get a new car loan.
Yeah, I think it was surprising from your report to hear that even the higher income levels are struggling with debt at this point in time. Why is that?
It starts from the basics, like having a budget. 62% of people that make $100,000 or more, according to this survey, do not have a budget. 20% are worried about being able to make their payments. And so when you look at that data and also look at the fact that some of the quote, negative credit card behaviors that we've seen over the past 6 months, whether that is failing to pay the minimum balance or transferring between cards, that's the same percentage regardless of whether it's low income or higher income individuals. So I think the pain is being felt across the board, and there's a real squeeze kind of with the middle income consumer.
Yeah, that's really fascinating, especially, we talk all the time about just this bifurcation in terms of who's holding up from a borrowing standpoint.
Exactly.
We often think that, when we see these normalization levels come it's because there's an aggregate level here and that the higher income is doing better, but clearly
they're doing it differently. You know, people are still spending, but those at the lower income are spending for basic necessities. At the higher income, they're spending on big ticket items, but they're pulling back on that a little bit because of the tightening of the lending standards for car loans and auto loans and things that are really, you know, high prices.
Yeah, important implications there. Sharon,
Sure.
thank you.
Great to see you, Sharon. Next up, President Trump's attempt to fire the director of the CDC leads to a wave of resignations. After the break, we'll speak with the former Obama administration health policy director, Dr. Kavita Patel. Scorebox, back in a couple.
Welcome back to Squawk Box. The Trump administration saying it has fired the director of the CDC, but attorneys for the director, Susan Manera, is saying she's being targeted for refusing to, quote, rubber stamp unscientific directives. Joining us right now is former Obama administration health policy director, Dr. Kavita Patel. She's a primary care physician, also an NBC News and MSNBC contributor. Good morning to you. You know, we keep having these scenarios where somebody's getting fired by the administration and then saying that they're being unjustly fired. I'm curious, as you're watching this out, because this is playing out in your world, what's your initial impression, and what do you think has to happen before we even get into the implications of all this?
Yeah, I do think that, Andrew, there are a couple of things to keep in mind. This is actually a pretty historic CDC director because it's the first ever Senate-confirmed CDC director. Previously, didn't require Senate confirmations. It didn't have to go through that process. That means that she got support from Republican senators, had to do the testimonials in front of Congress, the whole 9 yards, which is just an additional hurdle, but also creates a little bit, I think, of what came as a groundswell of support from both the public health community and bipartisan politics, which is not necessarily easy to do. So I do think that that's important for the context. That, and keep in mind that we've got August 8th, the tragedy that struck the CDC on her watch, meaning not her fault, obviously, but certainly something she had to deal with just weeks into her tenure, a shooting at the Atlanta campus that's still resonating and reverberating for the staff. So I do think that backdrop, Andrew, is important because it's a unicorn event, these things that could only happen on top of what you just mentioned about other Trump officials.
Dr. Patel, let's talk then about the implications as you see them from a health perspective. Obviously, we're walking into the fall. Lots of folks hopefully taking the flu vaccine. I know there's a question about taking the COVID vaccine and everything else.
Right. Yeah. So let's talk about the public health implications. Yesterday was also significant, and obviously these are not coincidences, but yesterday we saw the FDA change the label on the COVID vaccine to be pretty restrictive, to basically say that if you're not 65 or older, you must have a high-risk condition. How that gets enforced, what happens on the ground in my clinic and in pharmacies, that's, I think, left up to all of us. But the CDC is going to bring their advisory committee, which was, by the way, mostly 99% replaced by RFK Jr., by the secretary. They're going to meet in September, which is actually unusual to be so late because guess what? We're already seeing a spike in COVID cases, and we're seeing the season hitting us as we would expect, the respiratory season that's hitting us right now. So implications are confusion, people not understanding what and exactly what they should receive. Meanwhile, you've got major and prominent medical organizations, American Academy of Pediatrics, American College of Obstetrics and Gynecology, and others that I assume will follow quickly, making different recommendations than what's come out from the FDA label and what stands as CDC language today. So that'll create confusion when you're walking into your retail pharmacist or into your doctor's office, and we'll have to.
Well, that's my question to you, which is what do you recommend to those who are watching right now as it relates to these issues? And also, I was actually speaking to a doctor about this a couple months ago when we were talking just about CDC language and everything else, about whether it creates any kind of liability for doctors who ultimately recommend against what the government recommends.
Right. So let me handle the first one first. What's happening right now? So I am telling patients what we have today. Most of us in our clinics are waiting for the new shipment of the revised COVID vaccine. And we haven't gotten, Andrew, in the DMV, the Maryland area, we haven't gotten our updated flu shots yet. So we're waiting for those. We're on order and we should get them imminently. But you can walk into a retail pharmacy if they have the supply and get the older version of the COVID vaccine. I know that there are a lot of people, myself included, traveling, school starting. We just want to take that precaution. I think that's completely reasonable to go ahead and do. And then what I'll say is that because of this FDA label changes, that September CDC meeting, there could be an insurance change where you might not have coverage. Medicare and Medicaid usually follow immediately following that September meeting, but most private insurers will change coverage, if they do, in January 1st of 26. So you do have these months to wait for the updated vaccine. So I've given people a couple of choices. Flu shots, I resoundingly recommend. And then we've got RSV season. I want to make sure that people eligible for that, 50 and up, also get the RSV shot if they can be eligible, and the pneumonia shot. So that's a lot of shots, Andrew, but we have to kind of walk through that for people. Second, to your liability point, that's just blatantly not true. I've got malpractice coverage. This is something that their implication was that if we go off label from what the FDA has and that we recommend a vaccine, that somehow we will have this immediate trigger or potential trigger on liability. I think as long as you go through the informed consent, which is what all of us do for vaccines, should be doing, that we do not have to worry about that liability coverage. What does come up for liability, though, and it hasn't been spoken about, is a little bit of a different permutation. There's a vaccine injury coverage protection program put in by the federal government for vaccine injuries. There's a chance that may not cover you if you received the vaccine outside or off-label from FDA CDC guidance. So there are serious implications here, and I don't want to minimize them, but there's more confusion about everything from the top, because if you go to a government website, you're not sure that you can trust the clinical information they're recommending. And I think yesterday's departure of not just the CDC director, but other staff confirmed that.
So then how quickly do you think this void can be filled at the CDC? Senator Bill Cassidy, who is a Republican from Louisiana, said that CDC's high-level departures will require oversight by the Senate Health Committee that he runs. What do you think he means by that? And, you know, how unprecedented is that type of Senate oversight over the CDC?
Yeah, Leslie, so, you know, I'm getting old. My job before I worked in the Obama administration was a staff director for that very committee under Ted Kennedy. So I know exactly what the senator is talking about. We had oversight staff. We conducted oversight hearings. We conducted investigations on an ongoing basis. That's what he's referencing. I think that is the bare minimum. Let me just say, I can authoritatively tell you that that's the bare minimum of what a committee can do. A committee can actually advance, and because this is a Senate confirmed position, a committee can actually advance, and the senator himself could advance a slate of nominees. We did that on a regular basis. The White House doesn't have to take them up, but putting out a daily call for replacements, giving names, asking for answers, not just through oversight hearings, but you can imagine having actual daily roundtables. Doesn't even need to be hearings, roundtables. I just want to point out that R.K. Jr., the secretary, is due to testify in front of the Senate Finance Committee September 4th. We'll see if that happens. That might be the first chance that we get to kind of hear from the administration about this.
Okay. Dr. Patel, I want to thank you. This is fascinating. Fascinating, and lots of things to think about this morning.
So to come here on Scorebox, sports fans get a temporary reprieve ahead of a big weekend as Fox and YouTube TV hammer out a short-term deal. That's coming up next when we return.
favors the bully.
Welcome back. Google says it has reached a short-term extension with Fox to prevent the media giant's channels from going dark on the YouTube TV streaming service. The development comes as college football season picks up and fans look forward to a matchup this weekend between top-ranked Texas and reigning national champion Ohio State. FCC Chair Brendan Carr weighed in on Tuesday, posting on X that Google should work to get a deal done. It's unclear how long the temporary extension will last. But for Longhorn fans, I guess it's good news.
Interesting stuff. By the way, the AI skills that kids need to know as the technology rapidly gains ground. We're going to talk about that after the break. We're going to be joined by the CEO of a groundbreaking mentorship startup. You don't want to miss it. Squawk Box, come right back. Mentorship platform Curious Cardinals was founded during the pandemic back in 2020 and now serves more than 1,000 students every week with 700 mentors across the country. You know, we have a program, but we have a conversation on this program a lot about students and what they need to learn in the day and age of AI and what we should all be majoring in and everything else. And joining us to have a discussion about that, the skills that actually folks need to have that are actually in demand now that artificial intelligence seems to be making a big way into our society. Audrey Wish is co-founder and CEO of Curious Cardinals. Want to thank you for joining us this morning. Help us with this, because everybody, you know, we all have kids. We're all trying to figure out what's supposed to happen. And if ChatGPT is going to be smarter than all of us, how this is all supposed to work.
Well, thank you so much, Andrew, for having me here today. And great question to start with. Let me start here. which is Albert Einstein in a pre-digital age said, don't memorize what you can already look up. Yet, we are in an era where you can access any piece of information at your fingertips, and we still teach kids to absorb and regurgitate what they read in a textbook. So, working with thousands of young people, K through 12 to college, I am AI optimistic because I believe this is a call to action to raise the bar for how we cultivate critical thinking and problem solving, research and questioning, storytelling, and frankly, most important of all, the ability to adapt and learn, because we know that that is not going anywhere.
Audrey, but let me ask you a question about that Einstein quote, because here's the thing. Part of reasoning and thinking and being able to make an argument at some level requires knowing information that you can be connecting dots between. And I fear that if we're not supposed to actually know the underlying information, we're not supposed to memorize that at all, it's very hard to actually be proficient, be more than proficient, being able to make that argument about that information.
Yeah. No, I absolutely agree with you. It's not that foundational base level knowledge needs to go anywhere. It's more AI necessitates that we raise the bar. And so I think the real shift is so many students are passive consumers, doom scrolling on TikTok, checking the boxes, going through the motions, joining generic extracurriculars like Model UN or robotics, not because they're actually interested in them, but because they think they have to. And what I encourage parents to think about this back to school season is how can you empower your kid to be an active agent of the change they want to see in the world, an active engager in their learning, and go from, again, just going through the motions, checking the boxes, to engaging with critical thinking, researching, communication, collaboration. So that's the big shift.
What does that mean in a day and age where, you know, a kid goes to school, they've got homework, they've got sports, they got this and that, and they say to themselves, you know, this project would take me 2 hours if I actually did it the old way. This project could take me about 20 minutes if I did it the new way, but I may not learn as much in the new way. Or are you suggesting you think that they can learn just as much?
That is the misunderstanding. AI is a tool to amplify, not replace. And I think so many people are misconstruing AI as something that kids are using to cheat and to write the essay instead of them. We need to teach kids how to thoughtfully use AI. If we are not teaching kids how to use AI to solve real problems, so many kids struggle with executive function and study skills. AI can be a tool rather than to cut corners in their learning, to help amplify and build those skills. So this Sunday, we hosted a Timeless Skills in an AI Era pitch competition. We had tons of kids apply. We chose 12 finalists who epitomize the timeless skills in an AI era. We had everyone from an incoming freshman at Harvard to a third grader, Armand. This third grade boy invented a copper soap that never expires and doesn't require water. He was conducting science experiments in his room, working with his Stanford mentor the past year. And at the end, he said, thank you to my parents, my mentor, and ChatGPT. This is not a boy who was having ChatGPT do the research for him. He was conducting science experiments in his living room, critical thinking, problem solving. He used AI as an accelerant, not to cut corners. And that's the core difference we need to teach kids.
Audrey, it's a longer conversation. We'd love to have it. I appreciate you joining us. You're doing very, very interesting work on all of this stuff. And we look forward to talking to you again very, very soon.
Thank you so much for having me. And check out Curious Cardinals. It's back to school season.
Thanks. Meantime, it is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost, in for Becky and Joe on these final 2 days of August. But nonetheless, busy ones. Among today's top stories, NVIDIA shares, they are trading lower right now. AI chipmaker, that chipmaker, beating analyst estimates on the top and bottom lines for the second quarter. We're going to talk to an analyst that just changed his price target on that stock in just a few minutes. The Trump administration firing the director of the CDC. This is just hours after she refused to resign. The White House spokesperson saying that Susan Menares is not aligned with the president's agenda of making America healthy again. Menares' lawyer saying that she would not resign and has been targeted for refusing to rubber stamp unscientific directives and get rid of health experts. And sales of Tesla vehicles in Europe plunging in July. The European Automobile Manufacturers Association saying the company's new car registrations totaled just 8,800 last month. That is down 40% year over year. It was Tesla's 7th consecutive month of European sales declines. And Wilf, we've been talking a lot about what's going on in Europe, given you're sitting in the back of all those BYD cabs.
Well, you know, the added point I'd say is I'm afraid you don't see many American-made cars either. They're just not there.
Yeah, with important implications for the reworking of the trade world order right now. Let's take a look at the futures at this hour. The Dow, the outperformer here, implied to open about 81 points higher. The NASDAQ down about 22 points. Of course, NVIDIA in focus. Let's get to Dom Chu with a look at this morning's pre-market movements. Good morning, Dom.
Good morning, Leslie. Good morning, Wilfred. Good morning, Andrew. We're going to start with shares of Snowflake, which are going the opposite direction, climbing about 14% after second quarter results topped expectations, and the cloud-based data company reported stronger revenue guidance on the earnings call. Snowflake's CEO said recent AI offerings have been met with enthusiasm, and the company is planning to increase the number of AI products that it offers, so all of that leading to a 14% gain in Snowflake shares. Pure Storage, also a big mover. Those shares are up more than 15% right now after the data manager beat on earnings and revenues for its quarter. Their CEO crediting strong enterprise performance and momentum in its core software and service offerings as well. So overall, a 15.5% gain for Pure Storage. Next up are shares of CrowdStrike, which are down by just roughly 3 to 4% after its revenue guidance for the current quarter came in below some analyst estimates. The cybersecurity company citing the fallout over its global service outage for that forecast, saying it expects the incentive programs to retain customers, and it will have a $10 to $15 million revenue impact each quarter for the rest of its fiscal year. So those shares down 4%. And we're going to finish with shares of Five Below, higher by roughly 5% after the discount retailer reported better than expected earnings and revenues for its quarter. It also raised its guidance, saying it has passed on higher costs from tariffs onto its consumers. This morning, analysts at Telsey Advisory Group upgraded Five Below to outperform from a prior market perform, and they raised their target price to $170. It was $144 before. That's an implied upside of roughly 17% from yesterday's close. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers can get full access to the detail and analysis behind those big upgrades and downgrades each morning, Leslie. I'll send things back over to you with Five Below up 5%.
We'll be sure to check that out. Thank you, Dom.
Let's dive deeper on shares in NVIDIA, of course, lower, as Don was pointing out, only by about 2 or 3%, 1.6% in fact in the pre-market. Following their earnings last night, Ben Reed says the Melius head of technology research, who just raised his price target, joins us now. Very good morning to you, Ben. Thanks for joining us. Headline, quick snapshot on these numbers.
Well, I thought they were very solid. I think that the reason the shares are trading a little lower is that they didn't include China in their guide, and that, you know, some people were hoping there was some China sales in there, maybe a little firmer stance that China sales could get going. And then the sales of their new Blackwell chip were actually a little below what some folks estimated because it takes time to ramp that product. But their guidance was really solid. The core growth outside of China is just really good, mid-teens growth. And then there should be more great growth in the fourth quarter. So I think we're all systems go. And then one final thing, Will, they did mention on the call a very huge TAM, total addressable market, by the end of the decade. This is something we've been calling for. That really implies revenue by the end of the decade, if they grow along with the industry, to be over $600 billion, which is just a huge number, which means the stock can even double from here, if not more. So we're pretty excited about the results, although we understand why it probably taking a breather. But we're not a day trader here.
I'm really interested in touching on that TAM point, and it comes back to another question I had, which is at the moment, the scale of concentration of their customer base, which, you know, they don't break out who is who, but we were discussing this earlier with Christina, 44% of the data center chip sales were two customers, probably Google and Microsoft. Can the TAM really grow to be that big based on the advantage that those 2 or 3 customers are going to have building their own products over the next couple of years. If they're the only ones grabbing these chips in large numbers, do you think that in fact the TAM's going to be a lot smaller because there's only going to be 2 or 3 buyers in a few years, because those hyperscalers competition is going to evaporate if they can't compete and get their hands on the chips in the short term?
Yeah, well, it is something we grapple with quite a bit. The customer concentration and being like half the sales being 4 or 5 customers. But the worst thing that would happen is if one broke away and won. So if one company were running away with AI, and then maybe one company would be able to hoard all the spending and whatnot. But it doesn't look like that right now. There's very healthy competition among the top 4 and then others. OpenAI is there, as well as a few other mega startups that really aren't startups. They're actually almost hyperscalers themselves. And then there's the notion about sovereign AI, where you see these huge Middle Eastern and European economies needing to invest in their own infrastructure due to not only national interest in their economies, but national security. So I see it being very big. I don't want one company to run away with the thing so that they hoard all the spending. And it doesn't seem like it's going to be like that right now. So that's a good thing. And customer concentration hopefully actually broadens over time with the sovereigns and some of these emerging companies like OpenAI, Anthropic, and others that are going to be well capitalized for a long time. A lot of folks, if these companies IPO'd, there'd be a line down Wall Street to invest. So, I think we're going to be okay. But yes, it is something we monitor quite a bit.
Ben, what do you think NVIDIA's future looks like in China? I ask because they said on the call that the Trump administration still has yet to codify the 15% of sales that they have for some of those chips that are purchased by China. Beijing has encouraged a move away from U.S. technology and AI systems. So, how do you see that all playing out?
Well, there's probably in the stock a little bit of optimism around China still, and the stock ran up on that, but it's not in anybody's models mostly, or it's in some folks' models for the next few years, but most of the street doesn't have it in there. And so the risk you have in not owning the stock is that street numbers go up over 15% over the next few months if things calm down. Now, that being said, most of the numbers on the street are going to reflect everything outside of China, which is still very robust. And so with regard to China itself, it does seem like there's tensions a little bit like on both sides where right now it does feel like a lot of this, for the H20 at least, is in the CCP's court, where there was some reaction to some comments and whatnot that they were going to be using some of the lower end chips, and whether they want China to and the companies there to be buying the lower end chips after someone said something about it, et cetera. And I just think that the two countries will work this out. I think that there's likely a trade deal coming, and this will work itself out. I think President Trump is very commercial regarding Jensen's views that the world needs an American stack that can dominate the AI world, not just the United States, and that it's international interest actually to do so that the Chinese don't create a Chinese software stack that runs AI that they can export to our allies. So I think it will get worked out. I'm not sure if it's by the fourth quarter or some point next year, but we're optimistic that it happens. And we know there's some hawks in the Trump administration. But it does seem like President Trump is working with Jensen actually commercially on this. I just hope the two countries work it out and we can see it kind of materialize at least by the fourth quarter, because then that's another positive.
Ben, here's just maybe it's philosophical, maybe it's technical. The idea that NVIDIA sells into China and that somehow pushes Huawei out, I accept that it would push out their market share. The question is the mother of invention. Do you not believe that Huawei and some of these other chip makers will ever be able to catch up, and that therefore the incentive won't be there for them to do such a thing, nor that the Chinese government would want to almost incentivize them to do such a thing? That's the question about this sort of central issue around whether we should be selling in or not to China, and whether we actually, if we do, we somehow push them out.
You know, Andrew, the world of AI is about developers. And the reason we, a few years ago recommended NVIDIA and what we saw, or at least what we think, is that they have the most developers developing AI applications on their platform. You win the developers, you win the race, okay? Apple won the mobile race in terms of profitability, not because of market share, but because they had the best app store that monetized application developers' ideas. In a way, NVIDIA's like that. They have the best ecosystem where you will monetize your AI applications if you use an NVIDIA stack, period, full stop. You win that, you win the race. And, Huawei and Chinese companies probably don't have the same advantage that NVIDIA has. And these little decisions NVIDIA made maybe years ago turn out to be huge outcomes later in a natural market environment. And we would like to see that proceed. And I think Jensen is advocating that the world running on NVIDIA's stack is a safer place. China's developers, while they could get pressure from their government to do a certain thing and try to use something else, if the NVIDIA stack monetizes AI, they will use it. And that's what we're risking here. Would you rather have NVIDIA control the AI stack globally or somebody that may not be on our team? And I think that that's the question here.
In the last 20 seconds, just sum it up. What's your price target?
Price target 240, and we'd be buyers on weakness and think they're on track. The sequential growth shows that there's probably not much to worry about here.
Ben, great stuff. Good to see you. Thanks for joining us.
Yeah, take care, Will. Thanks.
Dick's Sporting Goods just out with a quarterly results, earnings coming in at $4.38 per share, 6 cents better than estimates. Revenue of $3.65 billion was just ahead of expectations. Same-store sales increased 5% during the quarter, much better than the 3.2% increase the street had been expecting. Dick's Sporting Goods is also raising its guidance for earnings and comp sales for the full year. Those shares up about 0.75% right now. And check out earnings of $1.86 per share for Dollar General, coming in much better than the $1.57 the street had expected. Revenue grew 5% over the prior year to $10.7 billion, just ahead of estimates there. Same-store sales increasing 2.8% for Dollar General during the quarter, also ahead of expectations. Dollar General is also raising its full-year guidance, and those shares up more than 6% at this hour.
Okay, we've got a lot more on Squawk ahead. Let's tell you what's going on next. We're going to be hearing from 2 regional bank CEOs about the state of the consumer, the future of interest rates, and regulations. And we're going to go behind the scenes at the low-cost EV maker Slate. The company is backed by Jeff Bezos. We've got an exclusive interview with Slate CEO in the next half an hour. Don't go anywhere. It's a very cool car. We'll come right back.
You download Dave.
Welcome back. Let's take a look at the state of the consumer now with two regional bank CEOs coast to coast. Joining us now is Ira Robbins, CEO of Valley Bank, which is more centered on the East Coast, and Brent Beardall, CEO of WaFd, more on the West Coast. Thank you both for joining us. Brent, let's start with you. In terms of the state of the consumer, we heard a report from Sharon Epperson last hour, which talked about basically the difficulty that consumers are having on all ends of the income spectrum in paying off debt right now. What are you seeing in terms of your customers, in terms of loan demand? How would you characterize the state of the consumer?
Yeah, I would agree. The customer's having a hard time dealing with these higher rates. It seems like it's been a while since the Fed increased rates, but the magnitude of the increase with the Fed going up 500 basis points, that's really set in on the consumer, and it's overwhelming to them. And then you combine that with housing affordability. That's the real issue we're seeing for our consumers at this point. Typically, businesses are doing quite well, though, and it's actually fun to see the optimism grow in the economy after these new tariffs set in.
Yeah, when we talk about tighter financial conditions as a result of where rates are, that's what we talk about. Ira, I know that the two of you came together on this idea of reforming deposit insurance. One of the key trends in the regional banking space right now is just the discrepancy between regional banks and bigger banks in terms of grabbing additional deposit share. The bigger banks have been more aggressive on that front. How do you see deposit insurance changing the game there? This was something that we talked about a lot after the 2023 failures. There was a big FDIC report in May of 2023, and then basically nothing happened. So I'm curious how you see this as filling that void or filling that gap in terms of competition between the regional banks and the larger banks.
Yeah, and I think it's a great topic and something Brent and I feel very strongly about. You actually mentioned that the larger banks were more aggressive. I would argue that the system's actually broken, and the larger banks are just taking advantage of what the system is creating now. They have an implicit guarantee over deposits. If you look at their market share back to the great financial crisis, the largest four banks' market share from a retail deposit perspective has doubled since 2010, since 2008, 2009, 2010. That was not the intent of what Dodd-Frank was. When you listen to Bernanke's testimony back in 2010 to Congress, commentary surrounding severe moral hazard with too big to fail. So deposit insurance is broken, and it's important that it gets addressed now. We saw in 2023 SVB fail, and 87% of those deposits left regional banks and went to large banks. The challenge with those deposits moving from regional banks like Brent's and mine into the larger institutions is there's no funding available for Main Street. We look at PPP as a perfect example. The larger banks only provided 1.6% in total of PPP loans across the entire country. It was our banks, Brent and mine, that are there providing loans to Main Street when Main Street needs it. But unless deposit reform is addressed, that's not going to happen.
And Brent, there's another potential competitor that's waiting in the wings here, which is stable coins. And that's something that even the bigger banks have been concerned that they could see a deposit flight as a result of some of the recent regulations surrounding stable coins. Is that a concern of yours, or how do you think regional banks can remain competitive given the threats to and competition kind of from all spaces?
Yeah, and that's really one of the things we wanted to talk about is this deposit insurance reform, because stablecoin is real. And I think it's going to be across the spectrum. It's going to be with the big banks. It's going to be with the regional banks. It's going to be with the fintechs. But as Ira pointed out, you look at the biggest banks and what they do, they're more of a hedge fund than they are a bank, where you bring in the deposits and you loan it out. I have the utmost respect for JP Morgan. But their loan to deposit ratio is 55%. At WaFd, we're 98% loan to deposit ratio. And it's not a fair playing field. So right now we have two senators, one from the Republican side, one from the Democratic side, that are proposing meaningful reform that would level the playing field.
Ira, I have another question for you about commercial real estate. I know you've been diversifying the bank away from some of the CRE concentration you've had in the past, but you still do have exposure to office and multifamily in the New York City area. How are you feeling about the upcoming mayoral election, Zoran Mondani, and some of his proposals surrounding the city?
I'm not sure those proposals make a lot of long-term sense for New York. That said, I think New York is one of the most resilient cities that we've ever seen, and we have unbelievable people that want to live in that market that will make things happen. We can't have a government hand that limits what developers and what landlords can charge. When on the other side, as Brett mentioned, there's been massive inflation. It just doesn't work. So we need to find a solution there as what's going to work for both sides. I'm optimistic that we'll get to the right place here. But once again, New York is resilient.
Can I just have a quick final question, Brent, in terms of the extent to which you think AI will allow you to cut headcount over the next decade? Are we talking 10%, 50% more?
I think it's more the latter. I think it's around 50%. And it's one of the things we talk to our customers about that they're most encouraged. We have a labor gap between what's available and what our customers need. And it's true for Ira and myself. And we think AI will allow us to bridge that labor gap. I think really there's going to be two sides of it. Those that are afraid of it, that stay away from AI, and those that embrace it and take advantage of the opportunities it gets. But I think it is meaningful, especially for the back office redundant type jobs.
All right, Ira and Brent, thank you both so much for being here and talking about a wide range of competition and issues facing the industries, but we appreciate your perspective.
Thank you.
Appreciate it.
Okay, coming up, time is running out on the de minimis exemption for retailers. And Courtney Reagan is going to tell us what she has coming up for us. What's going on?
Hi, Andrew. So we know a lot about how Shein and Temu take advantage of the de minimis loophole to ship packages inexpensively and avoid tariffs. But you know that U.S. retailers use it too? I'll explain what that means as of tomorrow and some who are finding opportunity in that change. It's coming up on Squawk Box.
Time now for today's Aflac trivia question. Who served as the first CEO of Netflix? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. Who served as the first CEO of Netflix? The answer, Mark Randolph. Randolph was also the co-founder of the company, along with Reed Hastings.
Welcome back to Squawk Box. The de minimis exemption that allows goods valued at less than $800 to enter the U.S. duty and tax-free, it ends tomorrow. While it will drastically increase the cost of distribution for Asia-based e-commerce players like Shein and Temu, some U.S. brands and retailers also happen to use it. But there will also be some benefiting from new business from all of this. And Courtney Reagan is live in Florence, New Jersey to explain what is going on. Courtney.
Hi, good morning, Andrew. Yeah, so this Cart.com fulfillment center is just one of 18 locations that's working to make space for more retail goods as the de minimis exemption expires tomorrow. CEO Omar Tariq tells me that he's seen hundreds of millions of dollars in gross merchandise value come into his business as U.S. brands rush to find new domestic fulfillment options. Now, Tapestry says the elimination of the de minimis exemption will be a 20-cent drag on earnings for fiscal 2026. Barclays estimates around 14% of Tapestry's total sales will go from paying 0 tariffs to 30%, and says Lululemon will be impacted too. Now, many U.S. brands utilizing the de minimis exception have been doing so by using warehouses in Mexico, in some cases in Canada, then sending trucks on so-called daily milk runs. They take pallets of merchandise to shipping facilities located just across the border, where then orders under $800 are shipped to U.S. consumers duty-free.
These brands were taking advantage of a 30 to 40% cost arbitrage by shipping out of Mexico, and then on top of that, getting another 25% arbitrage because of customs and duties, and that made it worth for them to ship out product 1 to 2 days later and pay the extra cost in shipping because they're now zone skipping, right? But as these brands now come to the U.S., the cost of operations is going to be higher.
Direct-to-consumer apparel company Ministry of Supply has actually been reworking its supply chain for the last 6 months in preparation of the de minimis exemption expiring. And CEO and co-founder Ayman Adnani tells us some retailers are panicking ahead of this. Andrew, Leslie, Will?
It is fascinating, Courtney. Thank you.
Thank you.
Coming up, Facebook co-founder Chris Hughes warning about the threats to the Fed's independence. He's now co-chair of the Economic Security Project, and he will join us at 7:50 a.m. Eastern Time. And as we head to break, check out NVIDIA and some of the chip stocks.
invest.
Welcome back. Best Buy out with quarterly results, earnings of $1.28 per share. Excuse me. 7 cents better than estimates. Revenue of $9.4 billion, also topping expectations. Comparable same-store sales increased 1.5%, and analysts had expected a 0.5% decrease. Best Buy says it's just affirming its guidance for the full year due to uncertainty of potential tariff impacts, just down, 0.5% so in the pre-market. We're going to take a quick break here. When we return here on Squawk Box, we'll be on the road with a low-cost EV. Phil LeBeau is going to be telling us about that story.
Well, take a look at the Slate EV. This is what you get for $25,000. A bare bones, and I mean bare bones, electric vehicle that you can customize. How does that happen? And more importantly, can Slate make it from prototype to production? We'll talk with the CEO next on Squawk Box.
Welcome back. Let's get out to Phil LeBeau now with the CEO of EV maker Slate. Phil, over to you.
Thank you, Wilf. Chris Barman, CEO of Slate, joining us in front of two of your prototypes here. The basic Slate that you get for $25,000 and a wrapped one. And we'll talk about the wrapped one, the customization in a bit. What makes you think that you can go from prototype, which you have right now, to delivery and production by the end of next year?
Well, first, Phil, thanks for having us on. Really great to be here to be able to share the blank slate with you. We are in our prototype phase right now, and with that prototype phase, we've already built 70 vehicles. So we've got confidence in our design, and we're really in the industrialization phase. And we have you here today for our reopening event in Warsaw, Indiana, where we will be building the vehicle next year.
This is an old, basically, printing plant. They made phone books here. You're going to be putting together your EVs here. The price point of $25,000. That has long been what many people in the auto industry, and you come from Fiat Chrysler, years at Fiat Chrysler, you know people always have said, get it under 30 and people will buy it. What makes you think that you can be successful, first of all, at manufacturing and selling at $25,000 and therefore can bring in the audience that you think that other automakers have tried to and have been failing to do?
So we're coming to market in a very different way. Many other companies tried to come in at the high end. We really want to solve the problem of the affordable vehicle. So we started at looking at what can we do to make it a very efficient package. So we've taken everything out that's not a car.
Including the radio.
We've taken out the radio. You also have manual windows, so we don't have that into the cost of the vehicle. But we've designed the car such that it can be added in later. So we do have an app so that if you want your streaming audio, you want your navigation, that's how you can bring it into the vehicle, and it's tech that you already know and love. But also, if you want to have power windows, we offer that as an accessory. What you see behind us here with the blank slate, we build every one exactly the same, in the same configuration, but it can become this SUV that you see over here. And that's all through accessorization. We've designed it to be easily done, and in many instances, DIY by the owner.
Chris, what you're telling me is a different story of a similar but different. I've covered a number of EV companies over the last 10 years, and they all say we're different. We do something different. Our costs will be lower because of X, Y, and Z. And yet, there's a graveyard of EV startups that have not made it. Why do you think you will make it?
We've gone back to first principles and basics and looked at what are the things that we can do to make this cost effective. So our exterior panels, for example, are a composite material. And in doing that, we're allowed to put in a gray color so that what you see here, and so we mold in the color. What it means to us is we don't need a stamping operation, which keeps our costs down. We don't need to paint the exterior panels, which helps not only our investment costs, but our operational costs are much lower. And how we know that customers want to have color on the vehicle, and by having that color, we do it through wraps. So like you see here, we've wrapped this one with a little bit of a flavor of the state of Indiana.
But you're also coming into a market without a $7,500 federal EV tax credit. And let's be clear here, the momentum towards EVs is not there. It's moving away. The market is moving away from EVs. How do you win that buyer over? How do you get people to say, yeah, I do want an EV, even if I'm not going to get that $7,500 tax credit?
Yeah, we do have it on an EV platform. We often think that the EV is the least interesting thing about it. We like that it's on an EV platform. But the fact that it's built as a configuration of one to help keep our costs down in our manufacturing operation, but the fact that you can accessorize it and change it, and we're able to offer it at that price point in the mid-20s is going to be very attractive to individuals because they can get this vehicle and it changes with them over time. It's not a commitment at the price of purchase. They can change it as their budget allows, as their preferences allow, and it can be many different ways, shapes, or forms over the life of the vehicle.
SK On is your battery manufacturer, but you're actually going to be putting the packs together here in Warsaw, Indiana. There are so many folks that are focused on these battery manufacturers who, yes, they're in production now, but let's be clear, the Trump administration is not exactly favorable when it comes to the EV industry. Any concerns there?
SK On is our partner. They're very well established. They have a plant in Commerce, Georgia, where they're delivering today to many in the auto industry. We will be receiving our modules from that location, and we will be assembling them into packs here in Warsaw.
And we start production, or you start production, end of next year and deliveries next year?
Our plans have us starting production and delivering end of next year.
Chris Barman, CEO of Slate. Gotta say, guys, it's interesting. It's an interesting concept. 25 grand. It's basic, but you can wrap it as you see with the one that is over here behind Chris.
And a fantastic concept, Phil, Chris, both thank you so much. Really great conversation in Warsaw.
And we got a lot more coming up right here on Squawk Box. The efforts on Capitol Hill to ban congressional stock trading. We've been talking about this one for so long. Representative Chip Roy of Texas, he's going to tell us about the bipartisan bill making its way through the House. It's coming up at 8:10 Eastern Time. Don't go anywhere. Squawk Box is coming right back with a big hour ahead.
insurance.
Google has eliminated more than a third of its managers overseeing small teams in the last year. That's according to audio of a company meeting reviewed by CNBC. Google CEO Sundar Pichai also weighed in at the meeting, saying the company needs to be, quote, more efficient as we scale up so we don't solve everything with headcount. A person familiar with the matter said the 35% reduction number refers to the number of managers who oversee fewer than 3 people, and that many of those managers stayed with Google as individual contributors.
Okay. Thanks, Leslie. Coming up, the future of the Fed's independence. It is the big topic. Our next guest, raising the red flag on President Trump's attacks on Chairman Powell months ago. Facebook co-founder Chris Hughes, now co-chair of the Economic Security Project. He's going to be our special guest. Squawk Box coming right back. Don't go anywhere.
Do it well.
Welcome back to Squawk Box this morning. Our next guest sounding the alarm. This is now months ago on the dangers of the Trump administration attacks on the Fed. Joining us right now is Facebook co-founder Chris Hughes. He is co-chair of the Economic Security Project and author of the book Market Crafters. It was published in April, which covers how the Fed has shaped markets over the last century. His April New York Times op-ed warned that the president's attack on the central bank undermined Fed independence, and we want to get into all of it. Chris, though, I want to start with this. You know, I think that when I last saw you and I read the book and was reading these op-eds, there was a feeling that if the independence of the Fed was genuinely challenged, that the markets would react, that the bond market would react, perhaps the equity market would react, that would be the governor to some extent on any challenge to the Fed's independence. And yet, for whatever reason, and I'm curious what you think the reason is, we have not seen that.
That was the hope, but I think it's true that the markets reflect the conventional wisdom. And right now, I think the conventional wisdom is that Trump's team is a lot of talk and not a lot of substance, first off. And then secondly, it seems pretty clear that this firing is illegal. And I think markets expect that there'll be a preliminary injunction at the district court level and that the Supreme Court will hold it up. And perhaps there's even one more reason for market optimism, which I don't necessarily share, but that's that the idea that the administration is recognizing that they can only fire a governor for cause. I mean, back in April, we were all worried that they could just fire governors just like they've done at the FTC and elsewhere. Now, I think that the reality is that this is the most aggressive assault on Fed independence that we have ever seen. I'm a historian of the institution, and there's been all kinds of jawboning, all kinds of threats, even leaks from the president to smear the chair. This is in a totally different league, and I think that we should all be significantly more concerned than the markets seem to be.
Chris, here's the question, though. If, in fact, Lisa Cook did something that was illegal or even immoral, does she have an obligation to step down on her own? Putting aside whatever you think the president's doing, could we hold both ideas in our head, which is to say, you could argue that this is a weaponization and a challenge against the independence of the Fed in terms of how this is being orchestrated. At the same time, there have been members of the Fed board that have stepped down for doing things that may not have even been illegal, but raised questions and eyebrows. And for the credibility of the Fed, there was an argument to be made that they needed to step away.
Not for a paperwork error that was made 5 years ago that has nothing to do with how she's executed her time on the job. Listen, we know exactly what happened here. The president made threats for the chair. They didn't really work. So then it seems that he asked folks in his administration to go find some dirt on governors. They found a paperwork error, which seems important and something that needs to be rectified. However, it does not go in any way to Lisa Cook's ability to be a governor of the Federal Reserve and to execute her responsibilities effectively. You got to tell me that people like Scott Bessent, Howard Lutnick, these are very wealthy folks who have reams of complicated tax returns and mortgages. These guys have never made any error in any of that paperwork ever. This is an attempt to find some dirt and then to aggressively prosecute a case. And Lisa Cook should say, no, this is not for cause, and I won't step down.
A paperwork error, if that's what it is different from intentionally misleading something, though. I mean, I guess if that is indeed what happened, do you think she'll come out and publicly clarify that before too long? And if she does, do you think this will go away or not?
She should. I mean, for this to actually be mortgage fraud, which is the term that the administration is using, you have to have the intent to defraud. And I suppose it's theoretically possible that that's true, but it seems very unlikely. I've talked to a lot of folks in Democratic and some Republican administrations who have made similar errors, even marking a residence as a principal residence, moving to DC to work, renting it out, and not changing the designation on the form. So, the idea that she was, trying to falsify documentation seems to me to be fabricated. And it's part of this pattern of finding these errors in order to prosecute a case that is really quite thin. And I think the courts will see that.
Chris, let me ask you this then.
Oh, go ahead, Andrew.
Go ahead, Will. No, go ahead, Will.
Well, it's not on the Fed. I just wanted to move on the debate a little bit, so maybe we'll finish back up there with Andrew. But a topic we were discussing yesterday, Chris, interested in your take on this. It stems from this very sad case, but the question at hand is whether or not the next decade will see the big tech players that dominate, the AI names, be classed as publishers in legal frameworks or indeed just common discourse in a way that obviously Facebook and other social media platforms weren't. Because a machine that they own and developed are telling you things, are the owners of that machine responsible for the content?
They are, and they seem to know that. So there's the law, Section 230, which many of your viewers, I'm sure, have heard of, passed back 25 plus years ago in the late 90s, which says that if you are a platform, you're not responsible for the stuff that people post on your platform. In other words, that's not original content that you are responsible for. That's something that those folks posting it post for, and that gives blanket immunity unprecedented, doesn't exist in any other industry, to companies like Facebook and Google. Now, it's been questioned in the courts in recent years, but so far that still holds. However, for the AI models, because it is original content, each time that they give you an answer, they are formulating an original novel one. That's the whole idea, that they're not giving you the same web page that they would give to anyone else. They are liable for that information. And it seems so far that the models are being trained because the companies realize that they have that liability and don't want to tell people how to build a bomb, let alone create photos of a teenager that could be circulated for cyber harassment and bullying. And so I think it goes to a testament to the fact that Section 230 should no longer be the law of the land, even for the social media companies, and should be repealed in general overall.
Chris, I need.
We have just lost a connection with Andrew there. Andrew's back now. So Andrew, just start your question again there.
I just wanted to ask you one more time, and I'm sorry for the ping pong on the different topics, but on the Fed, there's one topic that people are talking about. We talked with Loretta Mester about this earlier. The idea of, and you know the history of the Fed, the idea that if you could get a quote unquote majority of the Fed in almost a political way, the way that the president has described, that come February, all of the Fed presidents need to be quote unquote renominated. And whether you think that entire process could get upended.
The short answer is it depends on the level of integrity of Governor Waller and Governor Bowman. So Waller's speaking today, so I think we'll all be watching those remarks. But in theory, it is true. On years that end with a 1 or a 6, all of the Reserve Bank presidents have to be, their terms expire and they need to be reappointed. As the monetary policy body at the Fed is the FOMC, 12 different votes, 5 of whom are Reserve Bank presidents. So in theory, if the president got control of the core group of 7, got a majority there, it could decide not to reappoint all Reserve Bank presidents and effectively say to the Reserve Bank boards, only bring us candidates who are going to be deferential to the administration. That could happen. Now, to get to 4 of 7, you'd have to have Chris Waller and Michelle Bowman, the 2 current governors who tilt towards a looser monetary policy, agree with that. And I think that these folks have spent much of their lives dedicated to this institution, so I think that's unlikely, but it is possible.
Chris Hughes, we could talk to you, as I said, for a very long time about so many different topics. We appreciate you joining us this morning. Thank you.
Thanks for having me.
You bet. It is just past 8 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost, in for Joe and Becky this week. And among our top stories, Trump administration firing CDC Director Susan Maneras after she refused to resign, accusing her of opposing its health agenda. Her lawyers say she resisted political pressure to push unscientific directives and remove experts. 4 top health officials also resigned. She served less than a month. Reports said she faced pressure over vaccine policy. The FDA, meanwhile, limited the latest COVID shots to high-risk groups. And Tesla's European sales dropping 40% in July to 8,800 vehicles. That marks the 7th straight monthly decline, even as overall EV sales rose. Meanwhile, rival BYD surging 225% in registrations, and we've been talking all morning about this very issue. And Microsoft firing 2 employees who broke into Vice Chair Brad Smith's office during a Gaza war protest on its Redmond campus. The company called the act unlawful, citing policy violations, said it's working with law enforcement. Well,
wow. Let's have a look at the futures this hour, which are mixed. The Nasdaq down slightly, partly because of Nvidia's couple of percent slide lower, and the S&P and the Dow are higher. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
Good morning, Wilfred, Leslie, and Andrew. Lots of retail earnings reports this morning, so let's start with shares of Dollar General, higher by right now just about 6% after a beat on profits and revenues for its most recent quarter. It also posted better than expected same-store sales growth and raised its full-year guidance. Those shares, by the way, are up more than 50% so far just this year-to-date period, so keep an eye on DG. Next up, you got shares of Bath & Body Works, lower by just roughly 6.5% after reporting slightly worse than expected profits and revenues that were in line with expectations. The company's raising the lower end of its full-year profit outlook, but not enough to boost those shares that are down more than 20% so far on a year-to-date basis as well. So keep an eye on Bath & Body Works. And we'll cap things off with shares of Best Buy, lower by just around 3%, despite better than expected earnings and revenues for its quarter. Comparable store sales did increase 1.5%. Analysts had expected a 0.5% increase or decrease there. Best Buy also said it's just affirming its guidance for the full year due to the uncertainty of potential tariff impacts down the line. Those shares, again, down by about 14% so far in 2025. So, Wilfred, earnings reports for retailers, very much in focus. I'll send things back over to you guys.
Not just the tech names. Great stuff, as always, Dom. Thanks so much.
For more on the markets, let's bring in our next guest, Andrew Slimman, Senior Portfolio Manager, Morgan Stanley Investment Management. Andrew, I want to ask you about NVIDIA and its role in this market and a test of sentiment here. This is a company that trades at about 59 times earnings, historical earnings, about 1.5 times the level of the overall NASDAQ, of which it comprises a substantial portion of. Given we saw earnings yesterday, there's a lot that's been made of just the overall AI trend and what the future portends there. How are you thinking about sentiment and some of these mega trends like AI and how they filtered their way into the market?
Sure. Welcome. Thanks for having me on, Leslie. So look, first of all, you made a statement that I just want to address, which is you said stock is trading at 59 times forward earnings, and one of the errors,
historical earnings, sorry.
Historical. One of the errors, never forget, stock prices don't care about what's happened in the past. They only care about the future. And the future for stocks is looking pretty bright right now because earnings estimates in general are going up. And I think, and certainly the AI sentiment and the very large companies in the S&P that are very much focused on this, that's where the best earnings revisions are coming. So I think the stock market is acting very rational here in terms of rewarding the best fundamentals, and the best fundamentals seem to be in these very, very large companies. And so I am surprised that sentiment is not higher than it is currently because corporate earnings have come in very strong this year, and estimates should be being raised across the board and for the S&P, and yet they haven't. That suggests to me that there's a dislocation between sentiment and fundamentals.
So then what do you think is creating that ceiling on sentiment relative to what we've seen with earnings and what we've seen in terms of forward projections there? Do you think it's the macro picture and the uncertainty?
Well, I mean, I can make guesses, but I've made a career, a very successful career, out of focusing on sticking with companies that are doing well and blocking out the noise. And I think there's a lot of noise, as evidenced your previous speaker. There's a lot of issues that are going on right now that are keeping people from focusing on, in my opinion, the fundamentals, certainly Washington, D.C. being one. But look, I think this is all very good, Leslie, because ultimately, I would argue that, the old saying, bull markets die in euphoria, and euphoria happens when people are just over the moon about stocks, and there's fundamentals don't matter anymore, and they just chase whatever is going up. Jim Cramer has touched on this, and to the extent that people are concerned and sentiment isn't too giddy, that means we're not entering that final stage yet. That's actually good for the extension of the bull market. Ultimately, all these people that are on the sidelines, I think they're going to get pulled in, and we will get to that euphoric stage yet, but we're not there yet, and that's a positive for equity investors.
So you think that the return of the meme stocks and the SPACs and potential IPOs with less profits, I mean, that's not concerning to you in terms of, whether or not we're experiencing euphoria right now?
I think there is some of that, but when I look at the sentiment polls, it's very surprising to me that there's more bears than bulls. We're at 2.5 years. We've had 2023, 2024, and now a good year again. Why aren't people more optimistic? They should be. That's the norm. So I think, yes, there are some signs of euphoria, but then there are some signs that we're not quite there yet. Ultimately, I think we will get there. And I do think that it's a great opportunity for investors to stick with companies that are producing results, because there's so much focus on so many other things that are pulling investors' opinions away from that.
All right. Little glass half full at 8 a.m. this morning. Appreciate it, Andrew.
Absolutely.
Okay, coming up, Congressman Chip Roy of Texas. He's going to join us to talk about his run, Texas AG, and the stock ban bill that he's been working on in Washington. It's a huge topic, lots of debate. Squawk Box, we'll be right back.
And make it count.
Welcome back to Squawk Box. Congress is going to be back on Capitol Hill next week in a bipartisan bill to ban congressional stock trading. Behind all of this, Chip Roy.
Joining us now, Texas Republican Congressman Chip Roy. He's a co-sponsor of the Transparent Representation Upholding Service and Trust in Congress Act. Congressman, thank you very much for being here. Tell us about what brought you into this topic. Why are you coming up with this initiative?
Sure. Well, in my first term in Congress, I joined with a Democrat friend of mine. We shared a belief that members of Congress should not be trading stocks, enriching themselves, in essence, while they're voting on these important issues for the American people. And that's why the legislation has the name, the Restore Trust in Congress Act, right? It's the Trust Act. And we've been having continued conversations now over these years, and it keeps getting slow walked and it keeps not getting to the House floor. And now there's a group of us on a bipartisan basis who are saying, look, time is now. You know, I told Republican leadership I was going to give them the benefit of the doubt to get through the big, beautiful bill and to make sure that we could move forward and advance the president's agenda. President Trump agrees. Secretary of Treasury Bessent agrees. They have both publicly stated that we should ban congressional stock trading to make sure that the American people can believe in their representatives to make the right decisions. You can't be sitting on, say, the Judiciary Committee, like I serve on, and make good decisions about, say, antitrust and whether you're going to break up, say, a big tech company or You can't be on a committee and be having conversations about health insurance, or maybe you're on armed services, or you're having votes on the military. You can't keep doing that while you're at the same time, as Congress did last year. 115 members traded 7,000 different times, or 7,000 different stocks and like 100 and something thousand million trades. So it's just absolutely crazy.
There's so many areas we could take this to, Congressman. It's really interesting. And can I just clarify? This bill you're proposing will restrict members of Congress. Why shouldn't those same arguments apply to members of the executive branch as well?
Yeah, I believe they should, and we've got ideas about potentially adding that into the mix. We came out with a targeted bill because we're in Congress. We felt like we should lead by example, making Congress clean so the American people can trust us. Do I think we should restrict that for the executive branch as well and align all three branches of government? Yes, I do. And we might amend it that way. Our legislation focuses on Congress. I think we ought to move that bill through committee. We can offer amendments, have debates, but that's my biggest problem. Let's get this bill moving. And by the way, we should be including spouses and children, again, dependent children, because it's important that the American people trust us for making the decisions that matter. And I've heard some of my colleagues complain about it. And say, well, I have a right. I earned this stuff, and I should be able to trade it. We're not saying you have to completely, get rid of all of your holdings. No, you should put it in a broadly held fund, a mutual fund, an S&P 500 fund, etc. If you want to day trade, then leave Congress. There's 435 of us, but there's 330 million Americans. If you want to sit there day trading, go get another job.
I was going to ask about that. What scale of the pushback have you had from colleagues? Are they furious with you?
I'd say it's kind of an even mix, right? There's a number of colleagues who totally get it. They're on board. Our legislation has the most co-sponsors. I think we have 60-something Democrats, and we have, pushing 20 Republicans. And the legislation that I think we're going to be able to put out next week on a bipartisan basis is going to merge 4 or 5 different ideas. So I think we can build the coalition, and it aligns a lot with what the Senate passed out of committee right before we broke in July and came out in August. So, but there is a block of Republicans who stand back and they say, well, you can't do this. We have a right to be able to continue to trade stocks. This is our money. And I'm like, well, look, but when you want a job like being in Congress, when you want to represent the people, I just think, you have to view it as that sacrifice. You don't sit there in Washington for 30 years, moving up the chain and also enriching yourself in the process. Go serve for a few terms and then go back home. That was the whole idea of a representative republic.
Congressman Roy, I want to ask you about a slightly different topic as it pertains to taking stakes in stocks, and that is Intel, with the government taking a stake there and the possibility of future investments in other American companies. What do you make of this as a Republican and as a congressman, and do you believe that this is in the best interest of American business?
Yeah, so I'm a believer in free markets. I do not like it if the government is taking stakes in corporate entities that are supposed to be in the free market. But I'll also say there are two kind of problems here, right? Through the CHIPS Act and other things, you've got the federal government doling out massive amount of subsidies, and I'm against subsidies, right? And so all of these dollars are going out kind of in a one-way stream. So I think what the president's saying is here is, hey, if we're going to be spending, hundreds of billions of dollars, and if Intel's going to be taking capital from the taxpayers, then shouldn't the American taxpayer have a stake? I understand that logic. I would rather just get rid of the subsidies. I would rather just say, guys, you got to go out and compete. I don't want government to be interfering in the market. And I certainly don't want the government to be taking in stakes in these massive companies. And then you end up in problems that a lot of us complained about back in 2008, 9, about, quote, too big to fail. And now we've got massive investment, huge banks. We had, the government intervene with, General Motors, what we might joke around and call government motors. I don't think that's the right way to do business. And so I would prefer that we just end subsidies and return to the free market than having the government take stakes in corporations.
Well, I think there are two things there. Number one is there's the intervention of the government when companies such as General Motors or some of the banks during the financial crisis were at risk of failing and what that would do to the broader economy. That's kind of one idea. The other is looking at companies, say Intel, that are perceived as being of national security importance and taking a stake in that, or MP Materials, for example. Do you believe that the government should not be doing either of those things, nor should it be giving grants, which I believe we give out about $181 billion in grants every year to incentivize companies to build and create jobs and so forth?
Yeah, I'm not a big believer in the government, doling out grants and trying to manage the market through government funding and taxpayer funding, and more importantly, borrowing. Look, I think we need to keep an environment where you've got maximum competition. One of the things why we should, I mentioned earlier when we're talking about the congressional stock trading, maybe we need to look at some of the antitrust and look at the fact that we've only got 1 or 2 major companies rather than 4 or 5 or 6 or 7 competitive companies, particularly, say, for example, in defense contractors, right? I remember when growing up as a kid, I mean, how many different, manufacturers of airplanes did we have? Lots. Then those all end up consolidating sort of into one. And now you got basically 1 American and 1 European, and you're getting kind of limited on what you can go to. And I think you need a expansive market with significant competition, and then they can bid, and then we produce the best. We're able to defeat the entire, Nazi machine through an unbelievable supply chain and the imagination and the innovation of the American entrepreneur in the business industry in this country. Yes, I get that there were some national government, intrusions during World War II. What I'm getting at is I don't like the government taking stakes in private corporations. We should be trying to find other ways to make sure that we've got chip production by incentivizing manufacturing here rather than incentivizing it abroad.
Congressman, though, what do you make of the idea that the President has espoused around a sovereign wealth fund? The idea that the American taxpayer is not, and I don't agree with this, but that the American taxpayer is not benefiting from all of these businesses that the government effectively is standing up, right? So that so many of these businesses, 80, 90% of their revenue, sometimes 100% of their revenue comes from the government, and he's saying, we want a piece.
Yeah, but again, I think the problem here is that we've built up through the broken system in the swamp, this world in which these corporations depend so heavily on government. When in fact, what they should be doing is producing a product and competing in the market, and that you've got, requests for proposals, you've got bidding, and then you have to compete in the market in order to provide services if the government wants those services. What I don't like is taking up stakes in private entities. And in terms of the sovereign wealth fund, look, we've got massive amount of ability to produce, wealth and to be able to produce capital in this country by virtue of free enterprise. No country in the history of the world has been able to manufacture as much innovation and change the world as much, from the light bulb to the airplane to space flight to defense. We've done it. We've led. And now in the area of tech and AI and everything else, we've done that through our innovation and through private enterprise. We do not want to go down the road of government ownership of these things. And plus you start getting into political action and you start getting into government ownership. The fight right now between the PGA Tour and LIV, where you've got the Saudi Arabian, wealth fund over there that are trying to compete effectively with what we had here in the United States with the Tour. That's a sports example, but now we're getting into real important issues in terms of defense and other areas. Look, I appreciate the argument, and I do understand the president is rightly recognizing, and a bunch of his advisors, that we've got such significant problems with respect to our, corporations and whatnot that are dependent on government, and the swamp that has allowed all of this continued funding through the appropriations process and through Congress. We need to clean that up, restore competition, but I don't really love the idea of government, getting in the game that our private sector can produce.
Okay, Congressman Roy, I want to thank you for joining us this morning. Appreciate it very, very much.
Thanks, y'all. Y'all have a great day.
When we come back, more on the firing of CDC Director Susan Menarez, plus just in time for football. YouTube TV and Fox huddling up and moving the ball over the goal line. For now, we've got more details on all of that in just a couple minutes. And a new partnership just announced in the last few minutes. Uber and Dollar Tree teaming up. The retailer will bring 9,000 Dollar Tree stores to the Uber Eats platform. It is the app that's going to be getting all that access this morning. Family Dollar made a similar deal, we should say, with Uber earlier this year. Squawk Box, come right back.
Flash Plus.
Welcome back to Squawk Box. This morning, the Trump administration firing the director of the CDC just hours after she refused to resign. Angelica Peebles joins us with more on the move. Angelica.
Hey, Andrew. Well, the White House firing CDC Director Susan Menarez, saying that she's not aligned with the president's agenda of making America healthy again. And lawyers for Menarez are fighting back, saying in a statement that she was notified by a White House staffer and that as a presidential appointee confirmed by the Senate, only the president himself can fire her. And her lawyers are saying that HHS Secretary Robert F. Kennedy Jr. and HHS have set their sights on weaponizing public health for political gain, and that Menarez refused to rubber stamp unscientific, reckless directives and fire dedicated health experts. She's been in the position for only a few weeks, so that's quite a big shakeup. And we also saw 4 other CDC officials resigned along with this. And so one of them, the head of the National Center for Immunization and Respiratory Diseases, posting his resignation letter on X, saying that he's unable to serve in an environment where CDC is used as a tool to generate policies and materials that do not reflect reality and are designed to hurt rather than improve the public health. And just yesterday, the FDA, remember, approved COVID boosters for a narrower group of people, reserving the shots for people who are at higher risk for the disease, also the elderly. And it's also requiring Pfizer to run 2 placebo-controlled trials as a condition of the approval. So that's a much stricter standard than what we've seen in the past. Andrew?
Curious if you could just tell us, what is the industry saying about all this?
You know, it's quite early. We have to see exactly what they have to say. I haven't seen any reactions yet. I don't think anyone is jumping out to get in front of this, but clearly there is quite a big change because you've seen, you know, these narrower approvals for the Pfizer and the Moderna COVID vaccines, and that of course has big implications for the use of those vaccines and also other companies, right? We're going to see more vaccine approvals coming down the pipeline over the next few years. And the question really is, will you be able to get those vaccines through? And also beyond that, you know, the industry has been very reluctant to criticize the Trump administration. But now if you do have this air, even if it's not truly a political influence, if just this air of politics interfering with these approval decisions, you have to wonder if you're going to start to see industry leaders start to be more vocal about that.
Angelica, I want to thank you. Appreciate it. It's a lot that we're going to continue to follow. Meantime, we are now just seconds away from jobless claims and getting the latest GDP data. I want to get over to our good friend in Chicago. Rick Santelli is standing by. Ahead of that, you got the Dow up about 40 points. All this could move around, though. You got NASDAQ off this morning. Rick, what should we be watching? What are you thinking about?
Well, I'll tell you, I think a lot of attention being paid to issues that I don't pay a lot of attention to. I'm a market guy. All the talk about what's going on in the Fed, once it starts to move the markets, it's something that I think I'll pay more attention to. Right now, I think for many it's a distraction, as many of the indices are near or at record highs. Interest rates certainly haven't paid attention to some of the issues, and believe me, it's something I've never seen. The interaction between the Fed and the administration, it's something interesting. I'm sure it'll be in the history books. But until it's market moving, I continue to monitor things that are coming out in about 18 seconds. Our second walk around the block on GDP will underscore the tug of war in the economy between quarters that are weak and quarters that are strong, import, exports, tariffs. We have a lot of push and pull based on some of the issues of the day. We are expecting this number to improve slightly, and the revisions, our second look at second quarter GDP, are now hitting the wires. 3% was our last look. It now jumps up to 3.3%. But from a comp basis, that would still be the best quarter since September of 23, third quarter of 23. Consumption, always important in a consumption economy, it remains strong. 1.4 our first look, 1.6 our modified look. 1.6 would be the best consumption since the last quarter of 24, when it was well above. It was at 4%. Now, the pricing index, maybe this has more relevance considering all the issues of the day that presses on with the Fed. While it remains at 2%, no changes there. How does 2% stack up? Well, 3.8% was the last first quarter of 25. The last quarter of 24 was 2.3. That pretty much gives you some good insight. And finally, let's look at the core side of the equation on the price index. 2.5, so it remains exactly at 2.5. No change there. The first quarter was 3.5. The third quarter of 24 was 2.2. Initial jobless claims have been awfully well behaved. Nothing changes there, Andrew. 229,000 from a slightly modified 235 that turns into 234. Now we subtract 5,000, end up at 229,000. 229,000 once again just dovetails right in. I think the most important issue is we have 250,000 right on the nose on the first week in June. You have to go to October of last year to find a number above 250,000. So it's hard for me to get worried about this. And if this is considered the best real-time evaluation of the labor market, there's no issues that it's sending. It's not sending any smoke signals. Obviously, we've seen slowdowns in other areas, and there's lots of anecdotal evidence. Continuing claims, 1,954,000, another number that's stacked in there. Basically, all these numbers comp back to November of 2021. That's the last time we've seen numbers higher than this. Interest rates really haven't moved much. 423 and a 10 is minus 1 basis point. 363 and a 2-year is unchanged. Actually, I take that back. That is up 2. We closed at 361 on the late close in the cash market. We want to continue to monitor the stories about the Fed, the stories about Cook, and then look at things like what's the percentage of the market and a quarter point cut for September. It's still in the 85%. It's hardly flinched while all the press is going hog wild over these stories. Back to you.
Okay, Rick, thank you for that. I want to get straight over to Steve Leisman, who joins us with more. He's crunching the numbers. What are you thinking?
I'm thinking that we don't get enough credit, Rick and I, for how we think alike. People like to emphasize the differences, and they're maybe more fun, but I'm focused on some of the exact things Rick is focused on. Let me just give a little detail. First quarter, second quarter GDP is still sort of highly polluted by the front running of the tariffs. Inventories were plus 2.6%, adding to GDP in the first quarter, minus 3.3 in the second quarter. Net trade, minus 4.6, reducing GDP in the first quarter, adding 5% in the second quarter. So we average them together, and it's a little bit hotter. We got a little bit more on the consumption side. That's good. So it wasn't quite as weak as we thought in the second quarter. We're running, and I was just checking this, it looks like 2.2% on the Atlanta Fed GDP now in the third quarter. That's a better measure. The other thing I was going to emphasize, and Rick already did it, is this dilemma for the Fed that it's supposed to be cutting rates based upon supposed softness in the job market, but you have these very, very low claims numbers. We talked about this yesterday with New York Fed President John Williams. He looks around, he says, hey, the job market is solid, and one way he looks at it is in ratios, and I'll give you one number Rick didn't give because he doesn't know if we give it, it's fine. It's the 1.3% in average, it's the rate of insurance, unemployment insurance claims to the total number of employees, and it's very low. He gave you the continuing claims numbers, went down very low. Hard to find that weakness in the job market using the most contemporaneous, and by the way, not a very heavily revised series of weekly jobless claims. Maybe it's out there, but we have this huge dilemma, Andrew, that we need to talk about one of these days, perhaps at length, which is you bring down the labor force and you reduce the number of employed and unemployed, and your ratios are the same. So this immigration deportation thing creates a dilemma for the Fed of figuring out what is the right break-even rate for payrolls. And boy, are we going to be talking about that next week. Is it next week? Yes, it's next week when that jobs number comes. And tomorrow, very important information where we get the PCE numbers from the Federal Reserve and the inflation rates.
I just wanted, before we let you guys go, Rick, I want to come back. You're saying everyone's talking a lot about the Lisa Cook issue, but the market's not reacting, which obviously I totally agree with. We've pointed to that all week. Fast forward for us. If the president was successful, Lisa Cook left. When the president is successful replacing the Fed chair in 9 months or whenever it is, do you think that will start to significantly move the markets or not?
No, I don't. I think what's really going on here is I think that market participants, which is reflected in all the market prices we see on a moment-to-moment basis, have an opinion on the economy and what the Fed ought to do and what rates are, what inflation is, what the horsepower of the economy is. And I do think that many would like to see lower rates, but there's a couple things they acknowledge. There has been some stickiness towards inflation. We have seen the labor market, as Steve and I pointed out, holding out better than expected. And until some of these stories regarding the Fed put them at odds with what investors see as the future of how Fed activity ought to go, then the market will pay attention. I really think that the cycle of easing will start in September, no matter if the relationship between the president and the Fed was better or worse or as it is. And I think that condition is why the market is paying very little attention.
Rick, Steve, as always, a pleasure. Thank you very much. And I'm sure we will see you both tomorrow for that all-important PCE inflation data, which we look forward to. And we are going to talk about all of this with the one and only Mr. Sherman from Double Line. Forgot the name there. Got there in the end. We'll be talking about that in a second. Don't go anywhere.
Only in theaters.
Welcome back. Let's discuss all things bond market with Jeffrey Sherman, Double Line Capital Deputy Chief Investment Officer. Jeff, long time no speak. Good to see you.
You're good to see you, Wilfred.
Let's start with the big story of the week, even though Rick just told us it's not the big story of the week. But are you surprised markets haven't reacted more to Lisa Cook's firing, or are you unsurprised?
Well, I think it's this thing where the market has slept off a lot of the news when it comes out of this administration. But I think it's, we would expect it to see a little bit sharper movement. You did see the initial kind of visceral reaction to markets where rates kind of went up a little bit. You saw some softness in the dollar where there's just this questioning of authority and autonomy from the Fed. And will the president and the administration get their way of, just trying to stack the Federal Reserve Board of Governors with folks who are going to be significantly more dovish and try to facilitate that rate cut. But again, we were a little shocked to see that the market didn't respond a little bit more. But obviously, as trading went on throughout Monday, it just essentially reversed. And so I think at this stage, the market is so wedded to the Fed cuts. I think they're just really focused on Jay Powell's speech from last week, where he didn't really assure a rate cut, but he said he's opening the door and there's the ability for them to move in that direction. I think this is what the market's been wanting, really for the last month or so. But when you rewind the clock, Wilfred, and you look back, and let's just use like the 2-year Treasury, for instance, we're really trading, kind of at the lows of the year for the 2-year Treasury, hence pricing some more of those cuts. But when you go back to where you saw, let's say late last year when we were rolling into that election period, that's where rates were really at these low levels. And so when I say the rates, I'm talking about that front of the curve, which is talking about Fed cut pricing. But I have to remind everyone out there that we also have to take it for a grain of salt right now, because we get the jobs data next week, the following week we get inflation data, and it's really going to be those things which I think drive the Federal Reserve in the direction of whether or not they're going to deliver a cut the following week. But when I talked about rates, I just spent this time talking about the 2-year, but it was that back end of the curve that was the kind of more sharp response to this headline news. And so that is potentially, pursuing a more dovish policy while we're dealing with really the supply of treasuries that are coming due to the fiscal policies and a lot of the uncertainty on that side. So in general, what you have is this, there's something for everyone. Do you want rate cuts? Look at the front of the curve. If you're worried about kind of those longer term implications, look how the back end of the curve has been responding really over the course of the last month or so.
Well, let's talk about that a little bit. And I know it was a few months ago, but clearly Treasury Secretary Scott Bessent kind of spoke about trying to do more short-term issuance rather than long-term. Is that going to work, or are you implying that because of the amount of debt that comes due over the next couple of years, that long-end rates are going to rise regardless?
Well, it's hard to say regardless, because at this point, obviously, the economy matters still. And so assuming that we stay kind of in this area and we go back to kind of this potential growth rate in the, call it low 2% real GDP growth, then I would agree with you that just this amount of supply of treasuries out there. But if you have a Fed that is pursuing a dovish policy, and while we're still getting this kind of uncomfortable levels of inflation. And again, we're not talking about the 9% inflation we experienced 3 years ago, but significantly above the Fed's target. Then ultimately, I think the bond market will sniff this out and say that, hey, you can't be pursuing these policies, and we will make it more punitive as investors for Treasury and issuance. So for all the talk the Treasury Secretary has done about getting the 10-year yield down, he hasn't been very successful thus far, and that's because those are market forces which are beyond his control. Now, the one way that the Fed could ultimately control, the back end of the curve is to get someone, or appoint more folks at the Federal Reserve Board of Governors that ultimately want to do yield curve control, right? They want to do quantitative easing, and they want to try to manage that. And that's not a great policy, of course, especially when market forces are going in the other direction. But it is potentially something that's on the table that investors have to think about when we go to next year and we have a new Fed chairperson.
Yeah. At what point, Jeffrey, in this process that we're going through and questions surrounding Fed independence, do you say, you know what, I'm going to diversify away from U.S. bonds for a bit. I'm going to look elsewhere around the globe that's offering better yield, maybe a little bit more credibility when it comes to fighting inflation. Are we there, or at what point in the process do we get there?
Jeffrey, there's some nice yields on offer in the UK. Just if you can help us out.
Yeah, Wilfred, there has been for a while. The problem with the UK and the US, Wilfred, is you're well aware, the rest of the world is converging to us, right? And so this does, Leslie has a great point there on that. The UK is not without its own fiscal issues as well. But in general, if investors are looking to make that bet, like I don't want to go to Japan. I know you can get, you can buy long-term JGBs there. It gets you in the 3 yield. When you hedge the currency back into dollars, you can get close to a 7 yield, but that's fraught with lots of volatility as well. And so, Leslie, if you're looking at that type of trade, and something we've done at Double Line over the last couple of months, is we've actually started to buy local currency emerging market bonds. And so we haven't really went in size in this. We've started to kind of nibble our toe in the water there. But we think that area of the market, because as you point out, Leslie, there's also yield that accompanies it. Yes, there are risks out there with those trades. But in general, you're talking about things that, without having to deal with all this kind of currency hedging and stuff. And yes, you're taking the currency risk. You can put together a nice portfolio of local currency emerging market debt that actually gets you in kind of this low 7% range. And you say, okay, well, that's significantly better than US. But as our emerging markets portfolio manager said at our asset allocation meeting 2 days ago, was that a lot of our policies in the US are looking EM-like. Right, we have state-owned enterprises now. You have the government taking pieces in Intel. We're talking about privatizing, parts of our markets, and so you're starting to see some of this convergence. And so maybe that means that U.S. yields should be a bit higher if we're going to pursue those type of policies as well. So I think it's a great point, Leslie.
Just quick final question, Jeffrey, having mentioned the UK in jest, but a serious point, whether it's UK, whether it's Japan, maybe it's France. If you see one of those bond markets like crack in a really big way in the next 6 months or so, will that affect US yields at the long end or not?
Well, I think you've seen still a coordinated policy for so long in the developed world. The global interest rates in the developed world have been highly correlated. And really the one break there was Japan, right, where they did not want to pursue the rate hiking policy. And so it kept their yields depressed for a very long period of time. And so you've seen as they've started to try to release that policy that the market forces have taken hold. And so I do think there is some correlation there because, again, investors are going to see, even though we all have our own challenges, there is some fungibility when you talk about the global sovereign world. Yes, there still is the rule of law. There are these things that kind of keep you in the safety, whether it is the UK, whether it is France, whether it's the US. I would be avoiding the JGB still at this point, just because, again, that's the one central bank that likes to throw curveballs, right? They're the ones that don't like forward guidance as much. In fact, I feel like a lot of times the BOJ is trying to trick us in the market where they're leaning one direction and then do the opposite. And so I think what you're seeing now is letting market forces take hold. And if that's indeed the case, without managing that with the supply of just global sovereign debt around the world and high debt to GDP ratios, and again, we don't have this controlled inflation rate, that means ultimately rates probably should be at these levels, especially in the back end, if not a little bit higher than what we see today.
Jeffrey, great to catch up again. Thanks so much.
Welcome back, Wilfred. Good to see you on this side of the pond.
Up next, NVIDIA beating on both the top and bottom lines and says there's a real possibility the company brings the Blackwell processor to China. Lots of questions about China. We'll have more on the stock move and whether or not the U.S. government will allow the company to have access there. We'll discuss next.
stocks.
Welcome to Squawk Box this morning. NVIDIA shares, they are flat right now following a modest beat in its second quarter results. This comes as China pushes to triple its AI chip production for tech self-reliance. Joining us right now is Chris Miller, Tufts Fletcher School Associate Professor and the author of The Chip War. Good morning to you. I think the big question this morning is, what do you think the prospect is really that NVIDIA is going to be able to sell into China? And if they are going to be able to sell into China, whether it's the H20 or this more advanced chip that they'd like to sell, how much they may have to pay or revenue share effectively with the U.S. government?
Well, the challenge NVIDIA faces is that they're squeezed on the one hand between Donald Trump and the other hand Xi Jinping, and they've got to navigate demands of both of those governments. The U.S. government has signaled they're willing to let NVIDIA sell, but China's now investigating NVIDIA's H20 chips for alleged security issues. You know, the Chinese tech firms want to buy NVIDIA's chips, but the Chinese government, they're driving towards self-sufficiency in semiconductors. And so long-term reliance on NVIDIA is something the Chinese government doesn't want to see.
So when you hear, for example, Jensen Huang say that he wants to sell into that marketplace, even with his more advanced chip beyond the H20, do you say to yourself, that's a good idea? That's a bad idea? If you were President Trump, would you allow that to happen? And that's putting aside whether you think the Chinese government will want that or not.
I think the U.S. government right now is trying to strike a balance between enabling NVIDIA to sell, capture that revenue, and also trying to restrain China's AI companies like DeepSeek or ByteDance or Alibaba, which have benefited immensely from the ability to buy high-end chips from the United States. And there's a really active debate right now in Washington as to what the right balance is to strike. The president, I think, has taken an unexpected turn in arguing that if there's a revenue share component, that will address some of the security concerns. And I think we're beginning to see in Washington and Congress, for example, skepticism about whether revenue shares really address the core security concerns that are brought up by the growth of China's AI ecosystem.
You know, what do you make of the revenue share idea, if you will, and how do you think that changes the dynamic for a company like NVIDIA, not just in China, but frankly for other countries and other tech firms?
Well, it does muddy the waters in terms of whether the U.S. regulations are about security or are about economics and revenue generation. And I think for tech firms, it's a dangerous road to go down because it ties them more closely to the U.S. government at a time when they're trying to argue to their customers that they're independent actors, responding to regulations, of course, but otherwise trying to sell their best products to any buyers around the world. And so for tech firms, they don't want to have to be closely tied to governments. They don't want to have to be in a position where their sales are directly adding to one government's revenues, but both Trump and Xi want to pull NVIDIA in their direction, and they both got tools to do that.
Well, speak to this, though. How much of this is about trying to persuade President Trump to allow NVIDIA chips to effectively be exported versus what it sounds like is now becoming the bigger issue, especially if we have a revenue share, and I don't know how you think that changes the dynamic, whether the Chinese government, despite whatever protestations it may get from Chinese firms, to say, we don't want these chips here?
Well, I think the Chinese government has never wanted foreign chips in their market. The challenge is that they can't produce enough domestically to fill that gap. So there are firms like Huawei that are trying to race ahead as rapidly as possible to produce enough high-end chips to fill the Chinese market. They're not there yet. Right now, they're pretty far away from meeting domestic demand. But the moment they can, the Chinese government will have no concern whatsoever about locking out Western tech firms, as they've done in every other market, automotive, solar panels, machine tools. They're waiting to they can get self-sufficient in chips, and the moment they do, they're going to cut out any Western firm from that market.
Chris, want to thank you for your perspective this morning. Appreciate it. We're going to be right back on Squawk Box after this.
It has been a busy show this morning. There was some breaking news on Squawk this morning. Uber Eats has a new deal with Dollar Tree, putting 9,000 stores on their platform. YouTube TV's got a temporary deal to keep Fox channels on the service despite a fee dispute. Walgreens has appointed Mike Motz to be its CEO, effective immediately. He was the CEO of Staples US Retail, which is in Sycamore's portfolio. Sycamore is taking Walgreens private, of course. And jobless claims fell by 5,000. Preliminary GDP hit 3.3%. The data on that crossing, of course, just moments ago. As we sit here, futures at the moment are pointing to a mixed open, of course. In fact, NVIDIA is now allowing the NASDAQ to be flat. S&P's also flat, Dow's also flat. We are pretty much out of time here on Squawk.
Yeah, NVIDIA came back. Make sure you join us tomorrow. Squawk on the Street is next.
The opportunity ahead is immense. A new industrial revolution has started. The AI race is on.
NVIDIA's Jensen Huang talking AI demand on last night's earnings call. Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. NVIDIA's down slightly pre-market, but off the morning lows as futures have also recovered some. A lot of beat and raises from names like Snowflake, Dollar General, Burlington, and some other retailers. GDP does get revised up a bit, and claims are steady. Our roadmap begins with NVIDIA reporting record sales, upbeat guidance, and this massive stock buyback. We'll get the Street's take on the results.
Tesla sales plunge in Europe. This is Chinese rival BYD sees its sales triple. We are going to discuss the road ahead for Tesla and, of course, its CEO Elon Musk. We've also got a number of retailers reporting earnings this morning. Best Buy is higher. Dollar General and Victoria's Secret also rallying, that is their stocks, in early trading off those numbers.
Let's begin with NVIDIA this morning. Top and bottom line beat. AI demand fuels this 56% jump in data center revenue. That result was just shy of analyst estimates. Current quarter guidance slightly above consensus, although the company says it did not include the H20 chip shipments to China. Also unveiling the $60 billion share buyback. Jim, a lot of discussion about the lack of codification on the H20 stuff and whether or not how that gets resolved.
Look, I think that was the most opaque moment on an otherwise terrific conference call, because it's up to two different governments, and a lot for some of the numbers that you saw that they allegedly disappointed is because they did have something in for China and there was nothing in for China. Look, China's not a sideshow. It's very, very important, because you'll buy the stock at 190 if it comes out today what they're going to do. But David, I think I'm going to posit something that kind of I think could help viewers at home. When we saw Microsoft go to $4 trillion, we said, fine, it's software. That's what happens. In the old days, when we saw Exxon become the #1 company, what's oil? That's what happens. At one point, we had Merck. Okay, what's pharma? Right now, we have to accept the fact that this is hardware with a software component, and it's changing the world. And the most important number is that they're talking about a total addressable market that's going to triple in the next 4 years. And if that's the case, then revenues could triple. And then you'd say, well, even though it's hardware, this is the greatest growth story ever told.
You would. And by the way, you'd also look at their margins at 72.4% and 72.7%. That's GAAP, non-GAAP. And you'd say, wow, that's a business I wouldn't mind being in as well. And those margins continue to improve.
Incredible.
But let me throw a couple of things at you I've heard this morning, Jim, and have you respond. The stock is really not doing much of anything. It was a very strong quarter. But all right, there are those who say sequential numbers weren't as strong as you might have hoped.
Blackwell was 17% sequential. That's $4.9 billion added off the 28 basis. Oh, okay, that's bad. Go ahead, that's one.
Then the guide is obviously doesn't include any China at all.
Right.
That said, it didn't overly impress perhaps some who came into the quarter looking for more and therefore are not inclined to own it.
These are not pieces that they're making. You can't make them and just say, okay, you know what? Let's make another billion pieces. You can't. This stuff is hard to make. Everything was sold out. Everything.
All right. Well, all right. And that's the final thing I wanted to get your opinion on. A big bowl. You're seeing finished goods inventory up. And there was a bulge in that you don't usually see. Is there an answer on that side?
All sold.
So then why would it be up so much?
Well, because you can't. These are things you can't just ship like this. Now, you know that when you hear that they talk about CoreWeave, which is, by the way, up 6, because CoreWeave is going to be the one that has the ability to put them in. If you listen to Sridhar Ramaswamy, we'll get to that on Snowflake, he would tell you, look, you can't just say, you know what, send me a couple of Blackwells, let me get to work. You have to send the Blackwells first to, in this case, he says Azure. And then you can work with Azure on behalf of the customer. And it's very hard for people to figure out actual demand other than the fact that Azure will take everything they can get. And that matters to me. Now, Wilf asked a very important question. Say, listen, if there's only 2 companies that are buying everything they can, well, when one wins, then isn't that the end? And of course, in this conference call, they talked about the vast multitude of companies that want these. But CoreWeave is just the quickest in demand because they're very close to my client trader and he knows how to assemble. He's the CEO of CoreWeave.
Our Christina Ports-Nevelos actually had a nice tidbit on the customer concentration. 3 customers now account for 29, 19, 14% of accounts receivable.
There are probably 7 or 8 customers that would like to be.
Right.
But you can't, you don't give the smaller guys, you don't give, sovereign AIs could be really big, but you don't just say, you know what, I'm going to go shaft Azure and I'm going to give it to Iceland. I like Iceland. Don't you?
Do we think that Blackwells could go to China? And if so, could the White House get a cut of that?
No, they're not going to do Blackwell. There'll be something that's less than a Blackwell. But I mean, I think that, again, this comes back to who do we want to have. The term is right. It's really confusing. To who do we want the developers to write on to take advantage of it? Jensen did say, look, the Chinese have more writers than we have. We really want to try to control this. It would be great if we controlled it.
That is going to be a big delta there. I mean, it's a $50 billion market, the Chinese market, growing incredibly quickly to the extent they're able to sell into that market. And their guidance, again, doesn't include any sales to China at all. And they had none, by the way, right?
No, and that was part of the so-called disappointment. Yeah. But David, I would tell you that if you're trying to game your model like these guys do, and then today you see Jensen at the White House. He's not there, but I'm just saying, let's say I'm positing that. Well, and you think that it's going to happen. Well, you're going to say, wow, I sold it at 178 last night. I guess I got to get back in.
Right, that's all potential upside.
Did you like the call? Did you like it? I mean, just in terms of the greatness of it, the robotics.
I don't usually weigh in the same way you do in terms of my sentiment or level of enjoyment.
You were incredibly excited this morning. But that was
I was excited to see you.
No, that was me. We
had nothing to do with NVIDIA.
It was because the Mets crushed the Phillies. That's what he gets.
No, we swept is the proper word. Swept the Phillies.
That's got to hurt, Jim.
And a shutout yesterday. So yes, I was excited about that.
Can I talk about long thinking, or is that what Jensen says is about long thinking?
Long thinking? What does that mean?
Okay, so I had to get off that because I've said
of course, I'm happy to move on.
Okay, so one of the things you have to understand.
So are the Phillies.
You're creating a factory. This is AI factories, okay? That's one thing that was a theme throughout, which is that's like an Eli Lilly needs a factory to be able to put together all the different studies in GLP-1 to come up with the right molecule. That's number 1. 2, you want to build a ship where you need to have an AI factory to get the ship right. I thought the most important thing that Jensen was talking about was that the next generation, GB300, which CoreWeave's putting together, and Vera Rubin, the stock's going down, it bothers me, is that we're now engaged with long thinking. And long thinking means you're not, like right now you put in something into a prompt, right? Tell me everything you know about the Mets beating the Phillies. You know, it comes back with like, well, this guy won 3 in a row. He's never done that. It gives you that stuff.
Right.
Now what it's saying is, I want to figure out, we're taking a case. I mean, this is what you would really do. That fellow who's defending Lisa Cole. Give me all of the things that I can say in defense of Lisa Cole, and it's going to be better than most lawyers. And then you can have a long-thinking discussion with Vera Rubin that will be better than talking to any associate that you pay a huge amount of money for. And that is what's happened. That long thinking was the most important term that Jensen
he used. We're not there yet, though.
No, we're not. That's but Vera
and
Rubin's
obviously, all right, but they're relying on the companies that provide the service, which is not NVIDIA, right? It's OpenAI.
Right. It's Snowflake in conjunction with OpenAI.
You can, but if we're talking more about those that have it's Grok, it's OpenAI, it's Gemini, that's who's going to be interacting.
Right, but I'm saying that the interaction right now is child's play. It's child's play.
Right, he's saying it's child's play.
This is like dial-up modem, is what you're saying.
Yes, it's a miracle online.
Right.
Yeah.
Right.
That's that. Right now, it's
In its day, it was a big deal. Remember?
I know,
how
it
excited
was
you-
huge.
life-changing.
You don't
Yeah.
want that. You don't want Pittman back telling you this. You owe me
Is he
money.
still
I
at
don't owe you
iHeart?
money.
I think he might be.
iHeart, nothing.
Yeah.
But I do iHeart Dollar General. What do you want me to say? But I think the long thinking was really important. And then a discussion that Colette Kress, who's just this amazing CFO, talks about, which is that this is about a lot of this. The next iteration is robotics. So it's long thinking and robotics. We're all going to have robots. Now that's something that Amazon has talked about, but it's happening sooner than we think. If you get the total addressable market of the gigantic addressable market, that involves. Remember that you were talking about the $3-4 trillion opportunity by 2030. That's because you'll have a robot, not because you'll be replaced. Because I'm keeping you.
Oh, good.
I'm keeping you.
But you just went through a situation in which you wouldn't need an attorney.
Right.
Well, you want to argue with. Like right now, let's say you're at a law firm and you call in your 3rd, 4th, 5th year associates and you say, look, let's bounce this around. Now you don't call them because they don't work there anymore. And they were really expensive and they're gone. And now they work at Hormel, which had a really bad court.
Yes,
But is the court going to be able to allow the robot to argue in court for you? Will that be something that can be done?
I know that they have a big contract with Disney. I mean, you could probably have, I don't know, William Jennings Bryan.
The Hall of Presidents.
Clarence
Remember
Darrow,
that?
yeah.
I remember when I was a kid, that was the coolest thing ever. Remember
Yes.
when you watched Lincoln stand up and you
Hall of Presidents?
The Hall of Presidents.
Yeah.
Lincoln that game. I'm not taking that.
A lot of two handles on targets of NVIDIA today. Amelia's 240, JPM goes to 215. Jensen did talk specifically about China last night. Take a listen to that one.
We're talking to the administration about the importance of American companies to be able to address the Chinese market. And as you know, H20 has been approved for companies that are not on the entities list, and many licenses have been approved. And so I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
I don't know whether he's going to get Blackwell.
Yeah, there's some arguments this morning, Jim, that maybe some got the sense that Jensen's patience is being tested a bit by the White House.
Oh, gosh. That wouldn't surprise me. Jensen did come on when I felt there was no chance whatsoever for China. Jensen came on Mad Money and he said, listen, we have it. We're going to get it.
And he did, but they've sold nothing there. And meanwhile, no clarity at all on the 15% of revenues as well.
No, it's too early. I mean, we like it. I mean, look,
in
if you
terms
own
of the
this-
U.S. government, the president saying we're going to get 15% of the revenues
We're from the PRC.
of China's sales.
That Hopper's the
15% of the Chinese sales by NVIDIA. Just I want to make sure I'm clear here.
Right, well-
but we don't have any language around it.
Look, Jensen knows, Jensen knows it's coming better than anybody. I mean, I think if he had said, listen, we're going to have some version of Blackwell, didn't use one, I guess use the term H20, I think will be approved. I wish he hadn't said Blackwell. I think that there are people within the White House who are saying, listen, we really have to be careful what we give them.
So you think it's going to set off the China hawks, is what you think?
I think the China hawks are relentless that Jensen's a globalist, and that a globalist doesn't seem, still out in favor with the White House. But Jensen has said, no, listen, not only am I not a globalist, but we are going to make the Chinese work on our platform. Almost jingoist, not globalist.
Understood. $60 billion buyback. Of course, maybe we've mentioned that. Jim, I do want to come back to you on the one thing that has come up a number of times, and again, you answered it, but I want to make sure we're clear because I'm looking at the inventory was up 93% year over year.
But it's all spoken for.
And that is obviously 93% is far more than the 56% incredible growth that they had. And you're talking days of inventory outstanding of 106 days.
No, it's absolutely right, David. It's just when I talked to the company about that, specifically mentioning David Faber, which I thought was actually funny. I said, they kept on, listen, what can we tell you, Jim? We're making everything we can and everything's sold.
Right.
And I don't know what to say. I mean, now, I could argue that
because that's going to be seized on by those who are perhaps less than positive as a sign that things are slowing or demand is maybe slowing.
And as I said in Twitter, go ahead. sell it and go buy some T-bills. Go, please buy T-bills. I want you out of this storage stuff.
Don't buy a lot of corporate debt right now because spreads have never been slimmer. Yeah.
Wow. Yeah, it's really, I mean, on that front, it's not about corporate spreads, it's about sovereign spreads and sovereign steepening.
Absolutely true, but I'm just trying to say that you're either skeptical that Colette Kress, one of the great CFOs, is not necessarily being as, is painting a very rosy picture of sales. Or you can say, as I do, as someone who, needless to say, liked the stock early,
right,
has maintaining my faith in the company, and I'm saying own it, don't trade it. That's all.
You have not been wrong. That is fair to say.
Notice he didn't say you've been right. He had to go use the doctor. Right?
The opposite,
I did the
opposite of wrong.
Right, you're not going to give it to me. But one day, David. I don't know what day that's going to be.
It's like saying, yeah, I don't disagree.
Right, that's very good. But I'm curious to know where you get that. It's imitation view.
Oh, I see.
Yeah, okay.
Yeah, thank you.
Well, I'm curious yellow, if you want to really.
That's a deep track. Are there other halo effects then on the NVIDIA news today?
Well, look,
we'll watch for Dell and Marvell, right?
Yes, I do think that what they did when he just says, listen, CoreWeave's got the 300, that figures. CoreWeave is the assembler. I mean, people, if you go to a data center, and David, one day I'll take you to a data center. It's kind of like going to Citi Field.
I have been, but I'm looking forward to going to more data centers. I've got more data centers in my future.
Okay, well, some companies are ahead of others, and that's this one.
By the way, that's important. Now, you mentioned CoreWeave. Look at that. That's going to help them on the core scientific dispute, by the way, as well. Given the what happened? Remember all the worrying about selling? They got past it, and now look at that stuff.
You know that I wasn't wrong about.
You were not. You were not.
But,
you were not wrong
but I will
about
say that I
CoreWeave.
like Dell off of it. I like Snowflake off it, which we will probably.
Good morning, retail traders. We're at number 4. We broke a double top yesterday and more. Right now we're at number 4. So how do I mean, this really looks bullish, but I don't know. You got a head and shoulders. Could wait all day for it to pull back and hit the top of the orb. Right before it, maybe. 646. $646.17. Now let's go down a little. Right there. 646. Federal Governor Lisa Cook files lawsuit and contests the Trump firing. She looks crooked. She looks very crooked. So does he. He don't look too hot. And the bags under his eyes. Steve Leishman. Good morning, retail traders. It's a singing day, trader. How are you today? I'll be in today for a bit. La 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 la. Click, click, click. She looks crooked. God, she looks crooked. I wouldn't trust her with a 10-foot pole. AMD bounced. Stocks come back with vengeance. She looks so crooked that she couldn't walk a straight line. It amazes me how many people cheat on their real estate. Politicians. And they sued Trump. He did nothing wrong. I didn't think the earnings were bad at all on NVIDIA. Microsoft knifing a little bit. We might have a correction first thing in the morning. NVIDIA's backed up my resistance channels that Jimmy called yesterday. That megaphone. We're inside the megaphone right now. Good morning, Robert M. Good morning, Seamus. Good morning, Matey. On YouTube. I keep going to the store wanting to buy something extra and buy something extra. Like today, I'm going to go out and buy I don't know if I want to go out and buy a silver necklace for my pennant, or if I should just wait and buy me an island necklace when I get there with all the shells. So I lived in Hawaii and I loved wearing them. I always wore a necklace, but I haven't had one on in a year. Even I wear it to sleep, I wear it to eat. I wear it mowing the lawn. I wear it up to dawn. Woo! Slow down, man. Your sense of humor just. I'm real excited about this vacation, more than I've ever been. Usually, I don't go into this kind of ritual, but I had to skip mine last year because my mom got sick and I lost like $1,600. Whoa. Oh, Jim, you're not clocked in. Oh, dang, that came by fast. SPX broke double top, new high. We got the VWAP for support. We've hit it twice today. And we have this previous high right here. So let's bring that up a little bit. Right about there. On /ES. Come on, man. Don't give me this 2-second delay crap. Well, right out of the gate, they broke out. That SPX did. Get ready to get a put. Total nonsense. Today's the 28th. And they're very expensive. Very expensive. Here comes 6,500. The 6470s. Putsville. Snow's up $25. And it came down and hit the 63 right at open. And the 50 SMA. AVGO's up 581. Google. Volume leader is NVIDIA. Just had a new high today. SPX puts are at 370. I'm just going on a hunch right here. SPX is 6470s at 370. We're at 420. I'm up $50. Randy's favorite number. 440. 430. 450, baby. $470, $490. I got to get out of these here. Woo! Yeah. Thank you very much. I'm out. 540. It's a good way to start the day at Coco K. Are you going to miss me when I'm gone? My legacy is what? What will my legacy be if I don't come back and I find me a senorita? I think you need to put a poll up, Magnificent. Will you miss Jim when he's gone? Yes or no? I'm done. I've hit half my goal already. It goes $1,000 a day. We're coming to the VWAP. Prepare ye in the name of the Lord. Right above the 200. Get ready for calls. You understand? Right now. So I move these over to 6505s or the 6510s. I can buy 4 at 6510 or 3 at $2.75. Oh, that was it. I was supposed to put SPX in there. Put SPY. 275. Come on, you bitch. This really sucks. I don't like this hesitation, man. Come on. Jesus Christ. Jesus help me here. Jimmy called the VWAP. And the /ES hit the VWAP. And I'm just using the VWAP as an example here. I'm trading off the take a chill pill and relax. /ES NVIDIA hit the 200, read it open. We could drop more. This thing don't start bouncing. I think it's going to be a fast scalp. I don't want to play around with this one because we're inside the Kettner channel. Could be a little risky because we could drop down, hit the 63. I've almost grabbed some at 235, but it didn't let me take it. Come on, let's go. We got a head and shoulders up here. Okay, I got my 235. We're about to hit the VWAP on the /ES. About to get stopped out. Okay, it was triggered. We got the 200 here. And we just hit it. $275, $235, and $175. IWM looks like it's at a support. If we don't hold here, I'm going to get out of this trade. Because I think we could really fall. We're not respecting the 200 EMA. We are still, but we almost didn't. We're squeezing right now. We're going to find out something real short. IWM's about to double bottom. Get the wrong number. It's 214 average. Okay, 214, that's dead. We got a fallen wedge. No, we don't. Yeah, we do. They can drop more, according to this wedge here. Right there. That's about it. Can't go no more. Yeah, it just did. Puts are looking nice. NVIDIA down 268. I hit my first support on the SPY, 646.03 that I called this morning. Let's just see, our WV was up. What did it have? Begins coverage on bullish note. So there's no reason. Analysts are no longer bullish on this stock. Top 3 downgrades on Thursday and it's up. Looks like a big flush out this morning. I don't like this thing being so slow. Zim's at 1379. I think that's down at my support level. JP Morgan maintains overweight and Zim integrated shipping raises price target to $9.80. Jeffries maintains $17. I nailed that support on NVIDIA yesterday at 172.12. And right now we're at a pivot point area. Disney drama. NVIDIA's definitely at support right here at 177.32. It kind of needs to hold to maintain its value. AMD at the 200 right now. We got a double bottom on Meta. It's a flush. I don't know when it's going to stop. Big massive dumps. NVIDIA is getting close to a support. I don't know if it's going to hold, but we're definitely getting close. I don't know what it's going to be like being not trading for four days in a row. God darn it. $175.60. Amazon had two big old red candles on the 5-minute. AMD has three black crows on the 5-minute. Tesla bounced off the 200. We got a head and shoulders. NVIDIA, I got 175 something. 175.60. Hmm. 30-minute time frame. We're not quite to the 200 yet on the /ES. And I think that could happen. Plus we got a head and shoulders right here. right off the orb, and a double bottom would be off the 200. $64.71.53. So we're definitely at a support level. Didn't quite hit it. I gotta stick a Q-tip in my ear. Okay, if we break, we're at resistance right now on the SPX. We got to break the 21 for it to become bullish. $64.76. Three black crows on AMD on the 5-minute with a tweezer bottom off the 63. We got tweezer bottom on Amazon with 2 crows. We got 3 crows with a hammer on Nvidia. And we have a head and shoulders on Tesla. And we hit the right shoulder twice. So which means it has to break out here if it's going to be bullish. Run it up to a double top. Would be a 1, 2, 3. So all of them look like they're at support right now. Slash ES kind of added support on 30-minute. We hit that this morning. Around 64.80. And we're coming up approaching the 63, which a little bit far out of the money here on mine. Might have to do some a little too far out of the money. Nvidia has a tweezer bottom on the 15-minute per tight. Yeah. Come on now, let's go. I'm just going to round that up to $50. You got to break this wall. So far, we've nailed the bottoms on the tech. IWM hit the 63. AMD's got to break the 9 on the 5. We just broke a head and shoulders resistance pre-market on 115. Spy's getting to the VWAP. Spy's getting to the VWAP. The Nvidia's at the 63 and the 50, or the 9. More drama on Tesla. I think I'm going to go into scalping mode here. On the 1 minute, we hit the bottom orb. What was support now becomes resistance on the /ES. So if we break that, I think we'll have a good chance of moving up. And /ES has a tweezer bottom on the 30 minute. And we're squeezing between the 9 and the 21 on the 2. Magnificent Seven. Google is the hot one today. Three reasons not to panic about NVIDIA earnings. That big share buyback is probably one of them. The company is still growing over 50% on their guidance. I mean, that's incredible to me. Especially not adding to China. Google's about to hit a 1, 2, 3. IWM 63 again, double top. Apple's about to hit the 200. So we're coming up to some resistance levels. I charted the SPY this morning. And what time frame was that on? I think that was on the hour. Yeah. So I had two major support, 644.16. We've got a 1, 2, 3 right here. $644.16. I like to smell that cologne. Look. Be careful. Snow really got it off. You can go more. We broke the pivot point, which was the 200 EMA on the weekly or the monthly. Each one of these candles represent a month. We broke the 200 EMA. So I'm going to put a support right above that. Or alert. And raise it up just a little bit. Okay. I would like to leave today with a bang. Yesterday was a bang, but I want a bigger one. Thought about doubling down here on my SPX and time here. And the time's right. I think it would have to be once we broke the orb, or we break this trend line right here, which is now. We got 8 contracts. I scalped the 85s and I got back in them. 85 to 120. It might take a little work to get even on this one. IWM's got a snake breakout, pulled back. We hit a double top, pulled back higher low right here. IWM. A little bit higher low, not much. And we got a triple top. Symmetrical flag, a wide mouth one. So the 63 is resistance if it wants to break. Tesla new lows. Got a double top on Amazon coming up on the 5-minute. And percentage gainers today opens up 34 cents. Snow, the big leaders on percentage gainers. Can I get this right? Huh. Snow's nuts. CWD, what the hell is that? Trading higher if the company announced it has adapted a digital asset strategy. That'll drop. That's a pump right there. D-Dog. CrowdStrike is set to report earnings. Tiger. What is that? AEO. I'm surprised I didn't take advantage of this one here. Cracker Barrel, and then we got Kava. And what was that? Trade Desk. It's almost gone on too long. Almost 3 weeks. 3 weeks to be. 1, 2, 3 plus. So we created a newer low. We got a fallen wedge now. On a IWM. Still wide mouth. Hello? Funk's not touching anything. Randy, what are you seeing? It's a bloated pig. I'd say that. You've not made a trade. I've made 3, and I'm in 1, but I've been scalping this. I'm down about $300 on my SPX now. Clean this up so I can see it better. I just don't like using this orb on the we got a head and shoulders on the IWM, and we got a quad bottom, triple bottom, quad, one or the other. We got to break the 21 to run it back up to the top. If the 21 breaks, I'll jump in it. I'm gonna go get my soup on. I don't plan on being around probably for another couple hours, and I'm gone for the day. And I'm kind of nervous about not being on this trip. We got a megaphone on SPX. Tomorrow I'll be sitting on the beach, holding a girl will be in reach. Gonna have a margarita, yeah, but daddy. My feet will be in the sand. One girl on the right, the other one hold my hand. And wait for this market to bounce again. Sun is shining and I'm gonna get a tan. Got one girl holding my hand. There we go, break 200 EMA. Come on, baby, let's go. Got a megaphone. I got a megaphone all alone. I can bring my guitar with me. I'll have a bunch of girls hanging around me. One blood, I might bring my ukulele. That's not a bad idea. We're starting to show a little bit. I like that big candle right there, but we hit it once before like that, and she pulled back, created a head and shoulders, and we could go lower. So we really got to break this orb. I think that's the hard resistance, not the 200, which we did hit here and hit here. But it comes up and breaks the orb, I think we'll move up. And that's when I'll jump in it. So 60. 30,000 contracts on the 6490s. And there's 6500s. Oh, I like the 6500s. I'm going to look at the 6500s here. Kind of princess. I'm on my way. Punta princess. Senorita won't be there. We got a 1, 2, 3. So let's do this. I'm gonna give it a shot. Think the market's really that shook up? We got the snake breakout pullback into an inverse head and shoulders with a 1, 2, 3. So I got 3 reasons to get in at 120. I just did it. $6,500's at 120. Actually got a 1, 2, 3, 4. If I want to count that as one. Come on, you beast. I'm gonna raise my alert on snow. That pre-market high. We're at 140. Let's go. Oh, I remember a guy named Bill Snow I used to work with. There's 150. I should go ahead and sell them right here. But if we break out, this is going to be a big winner. Where's 170? Yeah, take it. There's the orb. If we break the orb, we go up too high. Sold some at 190. I got 5 left. I should sell them all. Just get the fuck out of them. Ready, set, go, baby. If you can count to 4, you might make a little bit more. go. We're above the 200 EMA, so we're squeezing between that and the orb. And if we break the orb, I'm not too concerned about the 200 SMA. Although we did almost hit it. I could be concerned. I'm going to put a resistance line right there. Right on that wick. At 64.81. Oh, yeah! So you people on YouTube, I got a strategy. It's called, if you can count to 3, you can trade with me. But if you can count to 4, you just might make a little bit more.
Count to 3 and trade with me, but count to 4 to make much more. Count to 3 and trade with me, but count to 4 to make much more.
I'm going to Punta Cana. Let my feet in the sand. Now we're definitely bullish. I'm going to hold on to these a little longer. My feet in the sand. Come on now, don't do drama, mama. We're retesting right now, so this is going to tell us if we're going to break out. One bits, 2 bits, 3 bits, 4. Let's make a little bit more. As long as we hold that trend line on that flag out of a snake. I felt pretty confident about that trade. We had a tweezer bottom on the 5-minute on the video. Amazon had a new high. I'm now at 210. Let's get this thing to $3 to $4. Let's get back up to here. dear. I still have 5 contracts here from 120. $64.89.72. I think I will go out and get that silver necklace now. I gotta have something on my neck when I go out there. This is what I'm gonna put on it, this silver pennant that I got in Mexico 8 years ago. 7 years ago. It's a Mexican hat. Okay, we're retesting the old resistance, the 200. I still think we're going to make it to 64.89.72. Come on now, don't do it. Come on, let's go. Don't stall on me. You should come with me, baby. I got my soup ready. I'm gonna call this joint up, see if they got a necklace. We're at 2:30. I can get out here if I wanted to, but I want to see if we get up here to this resistance level. We just now creeped above it just a little bit. Yeah, I was wanting to call to check in on you to see if you had an 18-inch silver necklace that I could stick a pennant on. 18, not a real big one, but something that shows up on my neck when I get it on it. It's got a good latch. You do not? Okay. I appreciate it. Yep. 235. Should have grabbed more of them instead of just 10. Should have grabbed 20. I really like that setup. See, that could be a wedge. I call it a symmetrical flag, but it had to break here. If it didn't break, I wasn't going to stay in the trade. Then it retested that resistance line. So I think we can shoot up. Loftus, where are you located at? West University Street. Yeah, my name's James Howard. I'm looking for a silver 18-inch necklace to wrap around my neck that I can put a pennant on. If you call me back, 417-814-0672. 417-814-0672. Oh, I know where this is. Yeah, is this Springfield, Missouri? Oh, okay. Okay, thank you very much. I was trying to get a hold of them. I'm looking for a necklace. Okay, thank you. I'm still holding up. Not no more. Retesting the orb. Did you write it down, baby? Yeah, I was checking to see if you'd happen to have a 18-inch silver necklace that I could stick a pennant on. Okay. Yeah. Yeah, I was calling to see if you happen to have about an 18-inch silver necklace that I could stick a pennant on. Not real thick, you know, but for a man. Yeah, 18-inch. Okay, well, thank you very much. There goes that idea. Come on now, let's break. We're waiting patiently. I think I'll have 1 cup of coffee. I can't believe how I used to drink, a lot of coffee. Every single day. Good 7 cups. Not no more. Anybody have a stock they want me to look at? We got NVIDIA hanging out at resistance. Amazon's really on fire. I leave tomorrow. Microsoft. We got to break the 200 right now if we're going to go higher. That's right around 507.75. We just broke it. So we got a 1, 2, 3. Right around 509. And for it to stay bullish, we got to hold 507.26 for today. $507.27's got to hold. We got a head and shoulders. I'm saying pivot point area right here at 508.78. 76. So those are my 2 resistance levels. And that's make it 3. And support to hold today 507.27. Belch. 507.27 and then 508.15 to break. For it to stay bullish. I'm at 205 on my call. $210, come on, baby. Here we go. It's kind of losing a little bit of value. I'm here. Let's go. Oh gosh. Bingo. Nailed it. Woo! I mean, look how pretty that is. Jim, how did you do that? I'll show you in a second. Right now, I gotta... What's Funk say earlier? You nail it. You sure nail it good. Woo! Right to resistance. So I'm going to walk through this trade and tell you where I found my resistance at and how confident I was in this trade. So I'm all out at 3. You just stood up there and said, "Take it, Jimmy, take it." God, that felt good. Okay, so here's the chart. We had snake, breakout, pull back into a head and shoulders, and then it broke out and hit the 200 EMA and then started to create a flag. So I counted to 4 and took the trade on these 3 black crows with that inverted hammer. And it was a higher low. It hit the trend line, the wick, but the body was higher, which kind of tells me that we could start having a little breakout. And then she broke out, came back and respected the old resistance And then it respected it again, the 200 EMA. And we had a double top, came back down again. And then my resistance level was this here peak right here. And I just drew a line straight across. And that's how I come up with that price line. And I felt good about it because we kept staying above the old resistance. If we went probably below the 200, I would have got a little bit worried. The 200 EMA, but we didn't. And then I go in there and I get my coffee ready. And I hand out my phone number. So if y'all got my phone number, give me a call. I only answer to women. Jim's massage parlor. May I help you? My schedule's kind of busy right now, baby, but I can get you in here right around midnight. Man, that was like, bam. Imagine if I'd have held of all them, all 10 of them. It'd be like $1,800. Now we're pulled back to support here, so this should hold at 160. The 6500s. We're at the 200. I think this is going to hold. So it's 160. Come on, bitch. If this doesn't hold here, I'll get out. I got 5 contracts at 160. This is the old resistance that we retested before, so one more little candle. I could add 5 more, but I must leave it alone. No. $115 and $160. If this doesn't hold, I'll get out. Oh, come on now. Shit. Not again. Now we're kind of bearish. You gotta hold this dollar or I'm gonna get out. Oh, no, 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 no. Oh. They keep saying I want to get out, but I never do. It took so long. I think I'm in the same stage here. What I say on the video. Let's go. I'm gonna get my coffee. Right now I've got a 138 average. When we break the 9, I should be about even with the 200. And then I'm gonna head out pretty soon, go get a necklace. Guess I have to go buy a new one. How big is that? We got to break resistance. There we go. Yes. Now I'm even. So now I'm at the 50. Question is, are we going to break it? We got a double top. We got a head and shoulders right there. That's it. I'm going to take it right there. 64.84.75. And that's a little shy of the double top of the head and shoulder here. And that's another one right there. What's recycled sterling mean? Is that real silver? Seven things you need to know about recycled sterling silver. There has been something of a recycling revolution in recent years. How does melted down silver work? There we go. We're now at 155. We got one more candle to go. There it is. Now, when you're approaching your resistance, you either make a business decision and sell it while you're in heat, where's my... Bam, right there, 165. Thank you very much. Uh, 165. It could easily go higher. It's amazing. He did it again. And see how it pulled back right there? Perfect. Yeah, I'm nailing it. If I'd have waited for this up here, I would have never got out of it. But as I approached my resistance level, I said, and I didn't touch it. But as I approached it, in fact, I think I could have hit it. Watch this. Take the body right there, is that body? Run it down to that body. Bam, right to it. So I wasn't even precise. So recycled silver don't sound like real good stuff. Is recycled sterling silver as high quality and non-recycled sterling? Uncertainty is no purity is lost in the process of extracting silver, sterling silver, from used silver items. After the melting down of the sterling silver piece, the clot of silver produced at the end of the process is still pure silver. So if 925 sterling silver jewelry is recycled, 92.5 pure silver is extracted. In fact, if you need further proof, collectors often melt down large amounts of silver into molten silver and reset them in blocks. which I got right here. Into blocks, as this is more cost effective rather than trying to sell an individual items. Okay, well, I think I'll get one. I'm going to try it out. Through. Rope chain necklace from solid stainless steel. God, I don't want that. We're bouncing off to 63 again. So let's go through my watch list. Tesla has a new low. So let's find support on Tesla. So what we're going to do is we're going to first look at the daily. We definitely like it off the 200 EMA. So if it ever gets back down to 308, where I called it last time, and we definitely like resistance to be out here at 352. 77. So I take it to the one out. Well, let me see. We're bullish. We're still above the 9. So I'm going to put a trend line for right now at the 9. We could be a support right here. What's going on? SPX says it's going up. Oh, we're at support. Let's see here. 115. I'm going to do this all day long. You know what? It ain't going to stop me from losing. We're back at 115. Snake, breakout, pullback. At 115. time to open up a can of whoop ass. We'll go get my coffee. We got a sample of some Ralph Lauren, Ralph's Club New York, Ralph Lauren. Then I'll try on the chicks down there in Punta Cana. Come on, baby. Come smell me. There's 135. Take it. That's $200. I missed it. So good. Okay, get ready. Do you think we can make an ascending triangle out of here with a double top? You think we can hit that right shoulder one more time and get 140, 150 out of this? I also got to look at the time. It's almost noon in New York right now. And this fat cat's already had lunch. Soon, I'll be putting suntan lotion on my body tomorrow. I already got my day planned out. I'm going to go sit by the beach under a straw hut with a margarita. Then I'm going to go take a bath in my hot tub. There's 140. And then I'm going to dry up. I'm going to go have some fondue. Then I'm going to go to a white party in a strip bar. Then Saturday, I'm going to sit by the pool. First get up, have some coffee and watch the sunrise. Then I'm going to sit by the pool for the foam party. I'm going to go topless. Then I'm going to have me a lobster by the beach. And what am I going to do after that? I'm going to go to the disco club. Then I'll go home and clean up. Put on my Coach cologne. And go to the steakhouse. Then go to the disco club. And I got 6 new pair of underwear I'm going to try out. Then I'm going to go get a good night's sleep and wake up the next day and watch the sunrise again. Then they'll have the barbecue by the beach. Then I'm going to go to the Mexican joint, or maybe the Italian joint. I'll go to the food bar first, then come back and sit at the pool and go to the spa. Then I'm going to get a massage. I'm waiting for this thing to break out. The big long snake there, Tesla. Come on, break out. I can get out of here at 1:30. Now, Funk did a chart, and I was going to look up support here, and I didn't do it because I got involved in this stupid trade. So we're going to go to the 1 hour, and we don't want to use the orb chart because that never works. Let's look at the 1 minute here. I'm going to pull up a different chart. Not that one either. That one. Tesla's at the 9. $140, baby. $140. Thank you very much. Has anybody got anything to say?
In his hand,
50, yeah.
Don't chase the hype, let the setups cascade. Goose nods, sharp eyes on the prize. He's dancing with the market, watching lows and highs. Cap squeezes lurking, keep it cool. Respect the levels, that's the golden rule. The market's a jungle, it's a beast to tame. But Goose and Jim, they're ahead of the game.
Hour 50.
Trades hit clean, it's a money making scene.
Could go higher. I ain't no liar. Sitting by the fire. Sneaky snake, going to break. Take it out to the beach Saturday night. White party. Boom party. Scooby-Doo, yabba-dabba-doo. I'm not through. Boo, 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 boo. Boo, 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 boo.
Washboardjim's got the rhythm of the trade. Chase the hype, let the sauce cascade. Goose not sharp, eyes on the prize. He's dancing with the market, watching lows and highs. Never squeeze lurking, keep it cool. Respect the levels, that's the golden rule. The market's a jungle, it's a beast to tame. But Goose and Jim, they're ahead of the game. Candles flicker, green and red glow. Goose rides waves like a pro super slow. Drops like a fiend, hit it on the screen. Trades hit clean, it's a money making scene.
Got my groove. Watch me move. Whoa! Damn! People used to pay money to hear me play. Did you like that, Angel? Say yes. I know you're probably changing the kids' diapers right now, but all you gotta do is say yes. Oh yeah, I'm a charting it up right now. Okay, so we don't want to use that. We want this. We're at the 9, so that 9 was support. And we're going to put a price line right at the 9 at 340.18. We'll go to the hour. Let's see. This is on the daily. So yeah, that's a really good spot. So we'll go to the hour. And we're at the 200 on the hour. So your target today, once we break, is going to be right around 345. And you got a double confirmation of the 2-hour candles right here. So then we're going to take it to the 15-minute 5-day. And again, you're at that resistance that we had after hours. And your first channel of resistance is going to be right there at 343.53. So now you take it to the 5-minute. And we've got a snake. So we've got to draw up the snake. And we're just now breaking out of that channel. So we got to break the 9 EMA. On the 5-minute. That's going to be our major resistance level to break. Then once it breaks it, it'll run up and hit 343.58 and pull back and bounce off the 9. So we're going to make this in here a bright yellow. Right there. So if we break that, we'll run up and hit the 21, then pull back and hit the 9, and then come up and break to the hard resistance at 345. Do you understand? And we'll get rid of this. And we'll get rid of that. So, up. Let's do this. Break the 9, come up and hit this. Go to properties. Cut off the right extension. Hit default. And then it's going to come back down and bounce off the 9. And then come back up. And break the 21 and run up here. Do you understand? Man, can't stop winning today. Look at there. Hark the herald angels singing, glory to the newborn king. Washboardjim just broke his resistance. Look at Funk go. We're now at 160. And part of the crowd is going wild here at the sports arena. We're going to hit 64.89.72. Got in at 115. We're now at 165. Can we hit 64.89.72 before I am through? I got my game on. I'm dialed in, you can see. At 175, I think we can run. 180 it is. Tomorrow I'll have my feet in the sand, holding a drink in my other hand. Baby, come sit by me and I tell you a story. I'm a day trader and a janitor at night. I clean toilet seats with a smile, alright. I'm no fool for you, you'll see. Won't you take a ride with me? Our foot in the sand, I will hold your hand. 64.89.72. I won't stop playing for you. Senorita, hold my hand, and I'll walk with you in the sand, with a margarita in my other hand. Whoa! There it is. Oh, $2. Jim, you son of a bitch. La 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 la. Woo! Has anybody ever seen anything like that before? God darn it. 215, 220. Damn, 270. Shit. It went to 270. Did anybody take that trade with Bobo? Please say yes. Did anybody take the trade with Bobo? Oh man. Okay. Well, I don't know if I can stop winning. I can't stop winning. I could buy a gold necklace over that one. Oh. Put a little cream on my feet. I gotta make them feet soft for them ladies. Usually when I go solo. This will be the 4th solo vacation I've took. And I don't mind that. I'd rather take a lady though. Where's my socks? I don't know what it would be like taking a lady. I'd be looking at all the chicks. Last time I went, he said, "Jim, you got wondering eyes." I said, "I'm not looking at your wife." Don't worry about that. I ain't gonna take her. I'm gonna go buy me a silver necklace. Personally, I don't think them NVIDIA earnings are that bad. I just think we've had such a run into earnings. I talked about it yesterday. I said, you know, we were up like 30 some bucks on this thing. A good 20% increase from the last resistance. So I wouldn't be surprised if it pulled back a little bit and then regained its resistance level. So I'm going to go to the mall, go to the jewelry store, see if I can cut a deal. And see if I can find another shirt. Where's my shoes? Where's my shoes? Put these on. Right now we're going to try the Echo. What kind was these? These are the Echo. They're called the Biom, B-I-O-M, from Echo. 170 bucks. Brand new. The only thing I don't like about these here is the tongue. I wish they had a real bit thicker. They got the cushion heel, but they don't have the real soft tongue. And I got used to them soft tongues. What the hell is that? I don't know what that is. It's got the mesh top for comfort, for breathability, and the Bio Loft. Then I got to go later. I got to get all my work done. So I got a pretty busy day ahead of me. And I got to make sure I'm packed. I got kind of packed, but I'm gonna Dillard's has a jewelry department. Let's see if Dillard's. Double topping. There she goes. Dadgummit. Now what are these things at? $3. I just left $3 on the table. I just left $1.10 on the table. Oh, good job. Jesus. $4.10, son of a buck. Magnificent, give me an A+, please. Paging Magnificent. I need your grade pen out, please. If you don't, I will sing another song. You got 5 seconds. 4, 3, 2, 1. I just left $2,000 on the table. If I wasn't putting cream on my feet, I'd still be able. I left $2,000 on the table. 6,500 SPX. I'm sitting here talking smack. I don't look back. I left $2,000 on the table. We hit the top of Funky's orb. I left $2,000 on the table. I didn't see it coming. All I could do was start strumming. I left $2,000 on the table. God darn it. Except MA. Oh. So we broke out of the snake. What'd Jimmy say? Said we'd break out and pull back. We were supposed to go ahead and we got a higher high. But I want to hit the 200 EMA on Tesla by the end of the day, or even break it. Well, actually, there's the breakout, there's the pullback. It'd have been nice if it broke out there, but it did have a higher high. So that's good.
generation, right? Compute generation. Today, it's 980 trillion tokens. So from 9 trillion to 980, it's a 100x increase in a year. You have to build compute in order to do that.
Oh my
so
God.
The world is massively supply constrained when it comes to compute. They're 50, he said yesterday, the world will continue to grow at 50%. So think about this. If you grow, and people asked him, are you going to grow at 50%? He said, well, I think we're going to maintain market share. So the consensus for next year is 250 billion of data center revenue. If they grow at 50%, that's closer to 300 billion, or closer to $8 a share, right? And $200 at $8 a share, is about 25 times. So below market multiples in terms of PE. So here's a company that I think is hitting on all strides, has an incredible leader, I think they delivered the quarter they needed to deliver.
Let's talk about a few of the issues. Jensen Huang said that bringing the Blackwell chip to China is, quote, a real possibility. This issue has obviously been in the headlines lately, enough that you posted on X earlier today that says now is a critical time for the U.S. government to accelerate and U.S. AI companies to rapidly expand and compete around the world, including NVIDIA chips in China. Ceding China and its massive AI ecosystem to Huawei and dragging our feet on licenses will only hand more market share to the China AI stack. I guess after reading that, my question is to you, are you saying that the government is in the way here unnecessarily and needs to get out of NVIDIA's way?
Well, listen, I think over the last couple of years,
this pisses me off. You know what?
Follow the course of act.
We saw the Biden administration put $6 trillion in these big corporate businesses, and I was screaming about it. And they didn't say a frickin' word. I get so sick and tired of the double standard that this channel has. For that, I'd rather look at cleavage.
And they're continuing to gain ground. So if we
they act like capitalists, they're socialists.
And they're going to be the #1 leader by far. So bullish on them long term on this report. Leaning bullish.
It just annoys me.
Uncomfortable with where the price is at.
It has rallied, but your data supports the rally that we've seen here. That last chart that you had, where they've got the lead. Their web visits versus the stock price were above there. One thing that I wanted to ask you about, Landon, and you mentioned it, Afterpay is kind of going away, but Klarna, they're going to go public here. They're taking their Walmart business. I mean, competition coming into the space, is there enough of that revenue growth and GMV that's supposed to continue to expand to support everybody in here and all boats get lifted in that high tide?
I think so. I think that where the consumer's at right now and in the economy, I think that people are looking for ways to stretch their dollars more, especially in a way that just makes sense. It's like, again, the 0% loans. I know what I'm paying. It's not really putting it on the credit card where it's going to rack up 20%, APY. It's just, it feels safer, I think, to some people, and it's starting to gain popularity and gain trust. I mean, this is. This kind of program has been around for a long time, but it's really only started to gain popularity over the last 5 or 10 years. And so I think as more and more people start to do buy now, pay later, the overall pie grows, and I think that they can afford some competition coming in. It'll be interesting to see what Klarna does after going public, and see if they can maybe take a bigger bite out of Affirm. Right now, they're both growing. And they're both large, but Affirm is the largest and they're growing the most. So we'll see. I think, though, to answer your question, yes, I do think there's room for both.
Yeah, buy now, pay later has been, as Kevin and I can attest, this is the layaway plan that we grew up with, Landon.
That's right.
It's just got more fees, I guess. Maybe that's it. All right, great stuff as always, Landon. Appreciate it.
Take care, guys. Thank you.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the positive data once again for Affirm. On this one, Kevin, the option market pricing in about a $10 move either way, but just like
the Biden administration was picking winners and losers, and it's always their corporates. They didn't help me out one bit, man. I'm just so fired up about it. It costs me $1,100 more a month to run my business. I've never had such an increase. I didn't get no bailouts.
One day, and Tom, again, the 1 week, this week, implied volatility, 285, next week, 120. So you're playing the dispersion, and what are you spending? The same as last year. Spending about $1.05. Actually, it's even lower now. It's around 90 cents now. So you can get a double calendar and a name that has a history of moving in both directions for under $1, Tom.
Yeah, let's break this one down. The need a move strategy, I call this one, Kevin, and this is the double calendar, not taking a directional bias. You just want it to move. What the option market's kind of pricing in for the next 24 hours, and it's about $10 in either direction. So let's break this one down. Out in the September 5th, weekly options that expire in 8 days. Buy the 90 call, buy the 70 put. Sell those same option or those same strikes in the August 29th weekly options that expire in 1 day, the 90 call and the 70 put. There's your double calendar position, paying roughly about a $1.05 debit we've got up here. That's $105 in risk. As Kevin mentioned, you can probably buy for $90 right now in risk on that. So low cost entry risk level here to get into a position where you expect the stock to move about 1 standard deviation. Now, I think the key here is, what don't you want to happen on this trade? Well, you don't want the stock to open up around $80, right? You don't want it to open up where the stock's currently trading, or you don't want a 2 or 3 standard deviation move where it moves $20 to the upside or $25 to the downside. You don't want that. Now, the peaks are at the strikes, right? At or near 70 or at or near 90 is where you're most profitable on this type of trade.
We're at resistance.
You still have a range, maybe about 65 on the downside.
SPY's at resistance
you
here.
Go down to, you can still potentially
SPX.
Remain
SPY.
profitable. Maybe about 95 to 100 on the upside is another break even where you could potentially be profitable on this one. But it's really short-term positioning on those short options that have assignment risk into expiration at tomorrow's close. So keep that in mind. But the idea here is you take advantage of, as Kevin mentioned, that vol dispersion, which lowers your entry point and risk on a trade like this, where you don't have to pick a direction. You just want about that 1 standard deviation move that the option market's pricing in. So good look at the double calendar position there in a firm.
I'm going out with a bang.
Based on Likefolio's data, maybe
I'm going out with a bang today. If I don't come back and you hear me stuck out in the middle of the ocean, always remember that Washboardjim had a great voice. And every time he sang, the market ran to the upside. I want that to be my legacy. George. Okay, well, I'll be back. I got a lot to do today. I got to get done here. I got to run out and go to the IRS. Then I got to go to E&M, And then I got to go to SRC, and I got to go to the tanning booth and get my last tan in. I'll come back with a real good tan, hopefully. Not burnt.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Marvell Technologies ahead of earnings, let's get a quick look at the markets, which hit more highs as the show has moved on here. We've got the benchmark S&P 500 up nearly 0.2%, the Dow up only about 30 points, fractionally higher, the NASDAQ 100 now up nearly 0.5%. So we've gained 0.25% since the show started. In big tech, even with NVIDIA down 1.2%, Russell 2000 small caps fading a little bit here, only up 0.1%, but it's had a great run so far in the month of August, getting close to all-time highs, about 3-4% below their record highs. So keep that in mind, the Russell 2000, with the expectations that we're going to get some rate cuts soon. Now let's take a look at that. The heat map's basically showing that most of these stocks are higher, even though we've got Tesla down today, NVIDIA down, and a few other names that are a little bit weaker, but going into a long weekend without a lot. There's the heat map there. Got NVIDIA lower and some others, but Amazon, Google Alphabet, AVGO, Microsoft higher, Apple higher. Yeah, so we've got a lot of big names that are higher today, helping produce those gains. All right, let's get into a discussion about Marvell Technologies. I always thought about this one going into earnings. This was like the mini NVIDIA, that they called it that a few years ago before the AI boom right now. This stock's fallen over 30%, as I mentioned, so far this year going into earnings. The bar is low. Let's bring in George Tilla, Senior Markets Correspondent.
George!
Let's break this one down. George, I always equated this because they've got different silos of revenue generation within, but AI build-out is, part of their theme, their bullish theme here moving forward. But at the same time, this thing is just underperformed, George. What's going on?
Yeah, this is an interesting one because you're right. If you look at the price action year to date, the stock is down by about 30 or so percent. And last year, it's higher by around 7%. So interesting enough, you got to look into Marvell, which is one of the key players, and of course the data center, AI, and networking infrastructure, semiconductor solutions business. They also provide technologies for 5G carrier networks, industrial automation, as well as the automotive market. So competitors, mainstay competitors would include Broadcom in the application-specific integrated circuits. So they provide custom silicon chip technologies to specific end markets and specific users. But AMD is also in that space, NVIDIA, in terms of competition, particularly in the embedded chip segments. But I did notice too, the stock has been down, but I noticed that the earnings per share estimates and the revenue estimates keep rising. So I think this will be interesting. But I think the other thing is the exposure to China, which is actually quite high for Marvell. Around 40% of sales may have actually encumbered the stock, particularly early this year, when we know that tariffs were a mainstay, a headline risk, and that's where we saw the huge price action to the downside from February to April.
Addicted to this
hasn't really recovered since then. So, at least to the degree where a lot of the other hyperscale big names like Broadcom and NVIDIA have recovered since the February correction. But nonetheless, if you look at the EPS estimates, they're actually quite high, expecting 67 cents a share It's basically more than double last year, where the company printed 30 cents a share, and sales are also expected to be quite robust at $2.01 billion for the quarter, 63% higher than last year, $1.27 billion.
Triple top on
So
SPX.
maybe this quarter there is a little bit more visibility in some of the embargoes the company faced for China sales. Like I said, 40% of sales are in China. And so that might be a positive catalyst, I suggest, as we move into this quarter, because like I said, the earnings estimates and revenue estimates trajectory is increasing, but the price action, at least since the April lows, really hasn't participated alongside the rest of the major hyperscalers.
George, I was reading a lot about this today, and in terms of fabless chip design, they're one of the leaders, and they've got big customers in AWS from Amazon and Azure from Microsoft, but 40% in China, and then these two big customers, George. So is the reason that this stock is down is that concentration of their business is in so many big names? China's clearly a problem, right?
No, it's not.
Problem. It's almost like we're
It's not a problem.
biotech company waiting for an announcement on something from China. But then they've got the other big customers.
Okay, I'll catch you all later.
Concentration risk, George, I guess is what I'm asking.
Enjoy.
So there's three problems. First off,
it's open mic tomorrow too.
Customers with Microsoft and AWS. That's certainly a problem. That also might be embedded in what we're seeing in the stock price action year to date. China may end up being a hindrance still, or it could be a panacea. It could be something very positive for Marvell. So I think that's going to be a very interesting component of their earnings announcement. And the other one is the competitive aspects and the less scalable business it has, Marvell now, compared to Broadcom. Broadcom's a major player, much larger company, much better profitability profile. In fact, I was quite surprised to see Marvell. It's got a negative 7.5% net income margin in the last 4 quarters. So there's clearly some problems that I think have to do specifically with China sales, maybe in the last 2 quarters, which really cut into the profit of the business. But nonetheless, that could be improving going forward. So I think this will be interesting, like I say,
just broke resistance.
post-earnings, because it could be a panacea if there's less restrictions on China's sales, more visibility in that country. And again, they're not as big as companies like Broadcom, so they may get a pass when it comes down to some of the sanctions and technology controls against majors like Broadcom. It may end up moving on earnings. I can't say, but I will say if you look at the EPS estimates for the year, $2.80, it's trading at 26 times this year's earnings, 21 times next year's earnings, much lower than the 38 times historical average. So it could be trading at a discount. But the earnings growth estimates for EBITDA, at least next year, are 27%. So it's trading at less than 1 times next year's earnings growth. So for what it's worth, from a PEG ratio standpoint, it's cheap. But again, it really comes down to the hindrance and capacity to sell in China, which is about 40% of sales, as I mentioned.
Yeah, real quick here, George, before I let you go. Price of sales, around 10 on this one, price of sales. Is that pretty normal for this sector, or is it high or low based on competitors?
So, yeah, good question. I think in this sector, it's pretty normal. I mean, these semiconductor names typically will sell at high price to sales ratios. But in the PEG ratio, at least comparing, this is your PE to growth rate, next year, like I said, 27% EPS growth estimates right now for next year, 21 times next year's earnings. For what it's worth, again, NVIDIA, if you look at it from a PEG ratio, is trading at less than half, or 0.5. Marvell's not that cheap, but it's not necessarily above 1 or close to 2. And a PEG ratio between 1.5 and 2 would be considered a little bit lofty, so this is trading less than 1. So for what it's worth from a PEG ratio standpoint, it may appear cheap.
All right, great stuff. Great backdrop for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, breaking down Marvell ahead of earnings. Now, Kevin, I looked at this one. It's underperformed. It seems like, when you see tech stocks like this that have a foot in the door in AI, but some of their legacy businesses aren't doing that well, the China exposure, maybe that's why it's been underperforming at this point. So I looked at a strategy that doesn't outlay a bunch of capital. You can take a directional bias with this type of strategy. The example I'm going to look at is a bullish one. You don't have to do a bullish one if you think it's going to go lower post earnings. But the option market pricing in about a plus or minus $7 move either way in the shares. Kevin, I looked at an unbalanced call butterfly to the upside here, where I'm going to buy the 75 strike call. It's about $1.60 in the money, right? So it's got that higher delta. Buy one of those, sell two of the 81 strike calls, sell two of those, and then buy one of the 83 strike calls. You're paying a debit. I've got $2 debit on here. It's trading closer to $2.15 at this point, but the debit you pay is going to be your risk. So if you pay $2 debit, there's your risk, $200 per spread. That can expand. You want it to go towards 81, but even, Kevin, above the 83 strike, it's still a double as far as profitability goes on this one. And Kevin, that break even of 77 is only about 40 cents above the current share price. So, you know, you don't need a monster move to the upside to get to profitability on this one, right?
Long a $6 call vertical, short a $2 call vertical. So with that, it gives you about 18.5 deltas. This is a bullish play. The risk on the trade is the debit paid, looking for a move towards that $81 strike, Tom.
Yep, and I think if you take a look at this, you know, why do you, when you look at the 75, 81, 83 call diagonal on this one, just for, you know, an example, if you just bought the 75, 81 call vertical, that's going to cost you about $280. So you're doing this for less cost, but maybe the call butterfly, unbalanced call butterfly might be one of those strategies where you're bullish, but hey, maybe it doesn't go up that one standard deviation. Maybe it only goes up $3, $4, $5, right? If you want to pay a little bit more, have a little bit more risk on, maybe you just do the call vertical on this. But good look at offsetting some of the costs on a directionally biased trade on this call diagonal there. All right, that's going to wrap it up for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome to Next Gen Investing and happy Thursday. We are seeing green across most of our major averages. I guess you could call it right now green pretty solidly, although modest moves to the upside. So it does seem like Nvidia, as much of it was a center stage event yesterday after the close and today, of course, Alex, it's actually, I mean, right now seeing some steepening of its pressure on the session, but at one point today I was like, hey, it is a neutral move, but now, I mean, it's down a percent. So I would say clearing a hurdle, though, as far as fears were concerned, with a far better than expected, I mean, maybe on par with what was expected print, which has been read pretty optimistically, but again, that 1% move to the downside today.
Yeah, I would call this unchanged, just given the fact that, you know, there was volatility anticipated. What I would also stress is, you know, they missed on data centers. They gave what I would say is pretty conservative guidance. This could have been a lot worse. It was a lot worse initially out the gate when these numbers hit the tape. So the fact that they've kind of fought this to a draw, you know, it shows that there's still demand for NVIDIA. Another name we're going to talk about in this show is CrowdStrike. Similar story there, where, you know, the initial reaction when you kind of parse through the numbers wasn't a great one. But buyers below, and buyers have stepped in and really stabilized both these stocks, and that's stabilized the market.
Yeah, definitely, and I would say that if anything, this does definitely feel like a clear win, because by no means have we seen this like wide felt pressure on what was a really nice recovery trade. So, I mean, especially even on the week in some of these software names and a lot of everything that has been tied to AI. So in no way is this report, I think, indicative that the health of AI has any concern, but we'll parse through those numbers later on the show. As always, we'll kick things off here with some earnings movers, as well as a broader tech theme really throughout our next hour or so. We'll be diving then into earnings previews, and we're looking at Alibaba today, as well as Autodesk. Autodesk today after the close, Alibaba's numbers out tomorrow morning, and then of course discussing further about NVIDIA and really key takeaways from what is always a very interesting earnings call, especially into insight in like geopolitical situations, as well as these hyperscalers spending. So we'll dive into that with Sam Vadas later on, and as well as discussing some of these discount retailers also having a pretty nice session today. And we'll revisit Cracker Barrel, because, you know, why not talk Cracker Barrel for, I think, now our third day in a row on the show.
Yeah, we're bringing in the big guns, get some expert thoughts on Cracker Barrel, and we'll parse through that. HPQ at the end of the show as well. But let's get to some of these movers as promised. A couple other earnings names. So Snowflake is one of them here, and looking at the stock, very MongoDB-like in terms of its reaction. So kind of a similar name and similar stock price performance.
Okay, that is exactly what I said when I looked at this name this morning, because, I mean, as we know, we saw a huge 30% plus move in MongoDB, joking that like yesterday Okta was so dwarfed by that momentum in MongoDB that it was almost like a nothing burger. But hey, Snowflake has definitely not been that way. We're up 19.5% on the session here, as it raised its full-year revenue outlook late Wednesday, also really solidifying its reputation as a leading AI data platform after solidly beating expectations. I mean, across the board, there was a lot to like. They did still post around 297 million in GAAP losses, but they achieved roughly 129 million of net income. So thus bringing their adjusted earnings to roughly 35 cents a share. That was better than expected. After the results, we saw, I mean, this momentum that has not really waned at all throughout today's session. as they did initially rise to prominence as one of these companies that was migrating data into the cloud, but its growth is now even more increasingly fueled by these enterprise adoption of AI, which is also consistent and reliable. As we talk about, these contracts are massive. They reached roughly 12,000 customers in the quarter, with roughly 650 of those totaling 12-month product revenue exceeding 1 million. So that speaks to, again, those enterprise accounts.
Yeah, and now 4 quarters in a row with, assuming they close higher today, a positive price performance the day after earnings. 32%, 4.5%, 13%, and now almost 20%. So a good little run here for Snowflake. Let's talk CrowdStrike, because it actually had its own little streak brewing as well, but it was a negative one around earnings, 3 straight quarters lower. Looked like we were going to have a fourth, but the bulls came to the rescue at the open today, and this one made a U-turn.
Yeah, because this name initially retreated after its earnings. That, I mean, there's a lot to like. Topped estimates as far as earnings. Revenue also edged past expectations. And their sales guidance now for, I mean, overall the rest of this year is definitely optimistic, as it does, though, seem like there is still a bit of a cloud as regards to its IT outage that, of course, occurred back in 2024, and some of these customer renewals. So they did report, I mean, again, really strong numbers, but they did say that right now there's overall trends in their ARR and expectations that some customers will be seeking price discounts while renewing their contracts to help cover the cost of their business disruptions, as well as, I mean, right now seeing still some fallout as a result of that. So that, I mean, was something of mention. I just think interesting because we were able to brush that off in its share price so well, but financially speaking, that does still have some impact. They also did, I mean, really highlight the fact that they have been really continuing to benefit from these solid ARR expectations and continuing to incentivize their partners to then continue to have, obviously, a relationship with them. So all things considered, there's still a lot to like within this report, but it also initially saw some weakness. So you have to acknowledge it wasn't always just a positive read-through for this company.
Well, I kind of said this about CrowdStrike. I was like, it seems to just see weakness around events, and then buyers step in because of, I don't know, the strength of the space, the strength of CrowdStrike within that space. But it's almost like this is seen as like a must-own stock for somebody, because every time there's a dip, buyers come in. Now, not always is it the same day, so maybe that's a bit of a surprise, but I'm not surprised to see this stock turn around. We talked about this as a potential of something that could happen with Marley yesterday.
Yeah, and that's such a good point, too. It feels like any weakness is seen as an opportunity, and hey, the buyers in this name are definitely active, so turning this thing around pretty nicely today, up 3%. Now, our next name today does not have earnings this week, but next week. That's Broadcom, with earnings next Thursday after the closing bell, and getting an upgrade now ahead of that report. Oppenheimer did reiterate their outperform rating, also lifting their price target to $325 a share, which would imply over 8% upside from where we closed 2 days ago, which is where the read was coming from. But the analysts did say Broadcom remains, in their opinion, the #2 franchise after NVIDIA. This is given its leadership in the AI ASIC, or application-specific integrated circuit market, and these custom-designed microchips are tailored towards AI tasks and optimized really towards specialization and efficiency. So for that reason, they remain long-term buyers of Broadcom, noting the company's core business in networking, wireless, broadband, server storage, and support all really show this sustainable growth and cash return now as we go forward. Pointing also to their projects with major high-profile clients like the likes of Google, Meta, OpenAI, as well as Apple, which they also feel is a tailwind for the company from here. So the Street loves this name. 43 analysts do cover it. 12 rate a strong buy. 29 have a buy rating. There's 2 holds, no bears.
Yeah, this is a stock that really flipped the script on how investors look at it once it became an AI player. This is the name that over the last 10 plus years, its average move around earnings was only about 5.5%. Well, we're expecting, based off implied options pricing, about 7% now. And the reason being is it was actually probably less than 5% before. But 2-3 quarters ago, when it became an AI player, it went 12% upside, 10% downside, 24% upside, 8.5% upside, 5% downside. So it's really become a volatile name because of its AI exposure, where this was kind of more of a value stock within tech for a long, long time. So interesting to see its role shift, and now it's a market leader.
It is, and it also, I do believe, it might still be there, but it did briefly join the $1 trillion club. So it's also, I mean, a pretty lofty company at that,
Yeah, no
and
doubt.
huge. I mean, like, we talk about a lot of these names without giving credit to some of the biggest, and not to say that has like the most market reach, but we still have earnings next week, so I will just continue to be really pumping the earnings events, because I do think it does provide something to look forward to on the calendar. So
Yeah, still one of those big names in that $1 trillion club, and it's the last of the big names to report earnings. We used to talk about Micron and Nike bookending earnings. Well, in a way, big market moving type names. We get Broadcom next week. That's kind of the end of earnings season these days. I know there's still going to be more names trickling in, but it's a late reporter.
it is. It's like Nike and Broadcom, and I think that's
And
pretty
Micron.
much it. And Micron. Okay, and $1.4 trillion. So excuse me, they're well beyond the $1 trillion club. I mean, right now I'm seeing a really relatively high valuation. Now, last name today here is Alphabet. Speaking of high valuations, but Alphabet's YouTube did announce earlier today they've reached now a short-term extension with Fox to prevent disruptions in service for YouTube TV subscribers. The temporary deal does come as the companies continue these negotiations for a new content agreement. That's per a statement from YouTube. And it does follow concerns that these Fox channels would be going dark if the parties didn't reach a new agreement by yesterday. So Fox has expressed some pretty sizable dissatisfaction with their proposed terms, but the short-term extension at least provides some temporary relief for subscribers. And again, NFL's coming up, so you got to figure this out.
College football, too.
College, yeah, you can tell what I obviously primarily watch because I'm just really pumping the NFL. But yeah, college football is also a major concern there. But they also did announce they'll be investing an additional $9 billion in AI in the cloud in Virginia, specifically in 2026. And their CEO did take to X, saying that this is going to be really a new data center in Chesterfield County and expanding their existing facilities right now that they see in the various regions. So lots always going on in Alphabet. I mean, there's always headlines to talk about. It's not maybe the most volatile name, but hey, 2% move today and a huge positive, I think, as far as the YouTube and Fox concerns.
Yeah, I think we kind of nailed that in terms of trying to predict what was going to happen. Just saying like, hey, look, this is going to be a high-stakes game of chicken, but Alphabet's got a little bit more negotiating power than a lot of these other companies do, and it looks like they leaned on that a little bit, and they got the deal, at least short-term, but a win for consumers most importantly.
It is. I mean, and definitely, especially when you already feel like you're overpaying for some of these services, as I'm sure many of us do, because everything right now has gone up in price, that it is nice to at least know that some of these subscriptions will continue to televise your favorite channels. I mean, that's hugely important for the overall brand. But we will leave it there for the top of our show today. Coming up next, it's time to look ahead as we still have Autodesk earnings out today after the closing bell, as well as Alibaba will go overseas to preview really that e-commerce company with earnings out tomorrow morning.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Next Gen Investing. It's now time for the Chart Master. And today we have earnings previews because even though Nvidia's earnings may be now out and well behind us, we still have lots to look forward to as far as the earnings front, although the calendar is definitely starting to wane a bit. So we're talking Alibaba earnings out tomorrow as well as Autodesk earnings out today. So we'll start off with Alibaba here. I mean, so far, I have to say that everything we've gotten from China as far as earnings and some of these companies that are ADRs, obviously, that do trade here in the U.S., but also have massive China exposure, earnings have fared quite well. So, I mean, walk us through this recent chart and some of the trends we're seeing.
Yes, and as you said, this is an ADR, so this chart may look quite a bit more gappy and like there may be some, more space between each candle here. Just something to keep in mind. This is, kind of as you would expect, though. So if we were to look at our price activity here, for the most part recently, price has seen a sideways grind between about 118 to 125 or so. If we were to look back here, that 125 level was about where we had some lows here and here. That was about where we started bumping up against a ceiling here. But we did have some breakout moments there, but we quickly came back to earth. Then 118, our green line here, was an old high, and then a high point there and a low point and so forth here. So those are the current boundaries. They do match up with some older price activity here. For now, though, we can see that we are between two of our moving averages, our yellow 21-day and our orange 63-day exponential moving averages between about 118 and 121 roughly here. So those could be some very short-term areas for traders to watch here. You can see as well, you could draw a trend line starting with this high, going connecting these highs here. Not exactly the strongest, most meaningful trend line here, but we can see that that pattern of lower highs has been broken at this point here. We do have more of a sideways push, but if you're bullish, sideways is better than down, I suppose here. We can also see RSI kind of reflecting the price activity here, not really giving us too many clues about a directional lean at this time here. So perhaps earnings could provide a catalyst that could push us beyond some of these boundaries that have been established.
Yeah, and that is also a good point. A lot of times it's not unusual to see some of this sort of momentum on the session wane, especially when earnings are out in the morning. I know this company does release at strange hours in the morning, so either way, pre-market though. And so what other trends are you watching for, especially because, as we know, while the U.S. and China have seen their own sort of issues, of course, over the last year or so, a lot of these Chinese companies have actually benefited from China really injecting stimulus back into their economy. And so we haven't really seen that necessarily take hold in Alibaba.
Yeah, a complicated situation to be sure, with so many ins and outs to keep track of here. When we do look at volume profile in our standard deviation channel studies, sometimes volume profile shows very clear areas of heavy trading. Sometimes you have many smaller spikes, which are called nodes here. In this case, we have the situation of a bunch of smaller areas that stand out here. So the most important ones relative to where we are now, we are in the midst of this area right here. That matches up with 120, 121 around that point here. Then once we start to get around our old boundary that I discussed, 125, we do see another spike. Once we start getting below 118, things drop off a little bit. Then you can see we have another spike here near about 115. So those would be some other congestion points to watch potentially for this name here. We can see as well, we are below our linear regression line, our line of best fit based on closing prices here. So that would be one notion of fair value for this stock. So it's a bit below where you might hope if you were going by that particular metric.
Yeah, and a good point there, and also a name that's down about 1.7% now on the session today. So all that to be said, as we do think about Alibaba into its earnings tomorrow morning, for example purposes, Alex, walk us through the way you think about this name.
Stock's been kind of stuck in the mud, and maybe you think that's going to continue. Nvidia showed that no matter the hype, it can still be kind of unchanged around earnings. Maybe that happens in Alibaba, and this example trade would benefit from that. It's a short iron condor strategy surrounding the current price levels that we've been in. And what we're looking at in particular here is the 130, 133 call vertical paired with the 112, 109 put vertical. $3 wide iron condor looking to collect $1, creates a 2-to-1 risk reward and 2 break-even points, one at 111 and the other at 131. That's a $20 wide range, where if it's in between that, going out to the end of next week, chance to make $100. Max loss though is 200, so you do take a little bit more risk than reward, which usually means decent probability of success, as there is that relationship between how much am I risking versus how much I can make.
Yeah, and even though this isn't necessarily an earnings pure play, it's also, relatively short term. I keep forgetting that September is now upon us, so not truly just...
you could do tomorrow morning, but that's super short term. So this gives it a little bit more room.
A little bit of wiggle room, yeah, right, and I think well put there. And so now to look at Autodesk, which does have earnings out after the close today. And I know this name actually is one that can be typically volatile on its earnings. It doesn't always garner a ton of our focus, but I do think they give a good read into some of, the technology world that is not really like a hardware or true software necessarily name.
Yeah, so once again, we have a range for this particular stock here. And in this case, it's a much wider range than we were looking at with Alibaba, but it's one that we may be familiar territory. So look here at 281, that's our green line here, a couple of low points here before we had the breakdown. 316, high point, low point before a notable gap to the downside, then another failure there. So we had our tariff news cycle that brought things down to the lows. We had our rally then, but now we kind of stopped at very similar points to what we experienced before, 281 to 316. Once again, price seems kind of stuck in between these levels. We are near the lower end of that range right now. We also can see that we have established a short-term high here near 294, our red line there. We are below our orange 63-day EMA as well. We are pushing above our 21-day in yellow there. So those would be kind of an odd coincidence to hear that the price action is stuck between this very narrow boundary. Once again, just as similar to our last chart, that was the same situation here. So 294 would be the area where we would also see our trend line coming into focus here. This shorter term trend line starting with our recent highs and connecting these subsequent highs here. So that area around 294 seems notable in terms of looking for a potential breakout. But to the downside, there's a similar confluence here. We have this, you could draw a trend line perhaps, you could just use the horizontal level. Either way, it's kind of the same general point near about 280, 281. It also lines up with our purple 250, 52-day exponential moving average, our long-term moving average here. So that could be another noteworthy level of support if it were tested or breached here. RSI, we can see a bit of a breakout though. Price hasn't quite broken out yet above our trend line. RSI is breaking out not only above its own trend line, but also above the 50 midline here. So this could be an interesting situation here if it continues. We do have earnings coming up though, which could rewrite the story.
Okay, so what else are you keeping on your radar here? Because again, with earnings out after the close, not a whole lot of RSI to read off of. And I mean, this name has been pretty unexciting as far as now just looking at its recent sort of choppiness.
Unexciting, yes, but as we say, low volatility can often be the precursor to high volatility. Then you might get more excitement than you bargained for in some cases here.
It's very true.
Hopefully it would work out in your favor then. But we can see if we are, once we start looking above that 294 level, we can see that that's where our point of control is, our heaviest trading area according to our volume profile. That's also where we can see, once again, our linear regression line, our line of best fit. So that area above that, the recent relative highs, up until you get to about 297 or so, seems like an important upside area to watch out for. To the downside, volume, we have a bit of a node right here near around maybe 283, 284 perhaps here. But volume really starts to dry out once you get below our recent low area here, 281. Doesn't really pick up again until down here near 270. So that could be an area where if we do start to break to the downside, we could see fast moving prices.
Yeah, and this will definitely be one on our radar as we have had a really tech heavy in some of these like third and fourth tier names that are trying to really buy into AI like Autodesk. So up 2% today with some overall market enthusiasm, but appreciate that, Rick, as always, for all of the insight on the technical front. And now, before we go, as we look to Autodesk here ahead of earnings, Alex, walk us through example trade, really your strategy here.
Yeah, this is for someone who maybe thinks the stock has a little bit of upside, maybe not fully to the extent of the market maker move, but maybe a move to, let's say, 300 a share or so. It's a call calendar spread, bullish strategy. Again, not looking at tomorrow's expiration, but selling next Friday and buying the following week, so it gives it some time for that to happen. Looking to spend 75 cents for a debit on this trade. If you do, that means that's your max loss. Max loss, 75 bucks. Very customizable trade, though. I thought Rick talked about a lot of different things about what could happen with this name. So if you have a different idea of where this stock might end up over the end of by the end of next week, perhaps you could look to this strategy, but move it around to a different level. But again, looking for a move to 300, that's where the peak of that mountaintop is, and that's the risk profile, Jenny. We've talked about throwing the dart. Well, that's what this one is.
Okay, and this one does have, I mean, again, not truly an earnings pure play. It does have a little bit more time of wiggle room and that flexibility, but not expecting a ton of catalysts next week either as far as just the calendar is concerned. So gives you maybe some breathing room depending on, of course, how these numbers do fare. We will leave it there, though, for Chartmaster today. Now, coming up next, how could we not discuss NVIDIA for FOMO today, as it's been our discussion of the week, definitely of the day. And so we'll dive into some of perhaps the optimism, maybe the more caution weighing on shares today. We're down about 1.1% on the session.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl,
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the story of the day, although it's definitely not the mover of the day, that being NVIDIA, because actually right now down less than 1%. So joining us is Sam Vadas, of course, contributor here for the Schwab Network. Sam, I mean, there's so much to get through. First of all, I've spent like the majority of my morning reading through all these various notes and opinions, and all that to be said, it's actually a pretty quiet day at NVIDIA.
Yeah, that's right. I mean, under pressure a bit today, suffice to say, off those lows. But I mean, as you say, I mean, there has been a mostly sort of bullish reaction as far as the analyst notes that have been out. I mean, there's no shortage of commentary coming out today as to, you know, what people are saying about, you know, the fact that we did continue to see an earnings beat, revenue beat. You know, most analysts are bullish despite the fact that we did see that data center miss as well. So, I mean, if you look across the spectrum as far as what many of the analysts are saying, I mean, you've got Bank of America reiterating NVIDIA as a buy. You've got Dan Ives, who is bullish. You've got those over at Alameda Capital saying that this earnings was a banger report. You've got Stacey Raskin over at Bernstein upgrading this. It's interesting, though, because you do have sort of diverging views out there. Not everyone is bullish. It's been particularly interesting looking at the folks over at Seaport who are taking a little bit more of a contrarian view here, pushing back on that bullish narrative. You've got others who are a little bit more cautious as I look through sort of the analyst notes, Deutsche Bank, D.A. Davidson, HSBC, just to name a few. But by and large, it does very much look like the takeaway from all of this is that the AI investment thesis and the case is very much still intact right now. I mean, those were UBS's thoughts as well. I mean, you know, if you take a look at what Dan Ives has had to say, I mean, you know, he's very bullish. I mean, that's no secret. We've known that for a long time. But, you know, he just says that the AI infrastructure investments are continuing to grow. You know, he's obviously taking into consideration the China story. But if they manage to be able to clear up some of those geopolitical hurdles, then, you know, this could be very much an opportunity for them. And Jensen Huang talked about that. I mean, he was talking about this being a $50 billion opportunity. And, you know, we know that he is reportedly in talks, as he says, with the US government about potentially, you know, the next gen Blackwell chip for China. Interestingly, I was talking to Paul Meeks over at Freedom Capital Markets earlier this morning, a long-term sort of tech investor. And, you know, he was talking about the fact that, and this is what we've heard time and time again, you know, you've got that $54 billion that they're guiding ex-China. So even without China, I mean, still things are looking okay. Revenue still strong despite China. So obviously the 90-day extension, this is what Paul Meeks was saying, on that trade truce creates a little bit of a lack of visibility because, you know, NVIDIA has really been seen as a somewhat of a political pawn in all of this. And, you know, this is why it's facing challenges with some of the export controls. Interestingly, because we heard about the H20 inventory as well, the fact that it actually went to another customer. Well, Paul Meeks was suggesting to me that, you know, this could have been a customer like Singapore, for instance, that could have snapped up some of the H20. But, you know, as far as the overall China story, I mean, even if the Blackwell is able to get to that market, I mean, the big question still, and this is what many of the analysts have been pointing out, is that, you know, China is still encouraging its domestic firms to buy Huawei and SMIC. So Paul Meeks has said to me that basically, even if they come out with a dumbed down version of Blackwell, that's his words, I mean, it would still be better than a Huawei, but, you know, they are still closing the gap. Now, where China is up to as far as closing that gap, well, he said that, you know, NVIDIA is a year ahead of AMD, and China is a few years behind AMD. So that just gives you a little bit of context as to how people are feeling about this whole AI race. But then you've also got this other situation where NVIDIA is also awaiting the US government on the 15% pay for play plan over in China as well. And I think that was something that Dan Ives raised too. If they're going to be able to get over some of those speed bumps, then I think, things could potentially look good because, they're still set to benefit from, the huge amount of AI infrastructure spend over the next decade.
Sam, is it safe to say too, though, that within that guidance, you said it's all ex-China, like the China story can't get worse than no money in terms of revenue. So like, I could say that this is still pretty conservative guidance, assuming that they have any business to China, going forward.
Yeah, no, it's interesting because, they factored in the fact that, $54 billion ex-China. That's still the sort of numbers that most companies would dream of. So, even without China, things still look robust. But, I think the way that Jensen has been handling things, we've seen him, he's been sort of described as, taking a very diplomatic approach to how he's dealing with the Trump administration and also the Chinese. No doubt, there is a push and a desire to continue to want to get that stuff to China, and that's why those negotiations are still happening. So that sort of presents a huge opportunity that's not really being factored in here. When we take the guidance for last quarter, what they, the revenue for last quarter, it's very interesting as to, whether those earnings were sort of factoring in the Chinese market, the revenue and the sales as far as the analysts were expecting were factoring in the Chinese market as well. So it's a bit unclear as to what the street was thinking about the China market now that the H20 is allowed to go back, but now obviously they've hit a couple of speed bumps more recently. But yeah, no, it's very interesting whether the Chinese self-sufficiency story is actually going to push the likes of NVIDIA companies like that to actually force them to find, other markets to make up for that shortfall if they are pushing ahead with the Huawei's and the SMICs of the world. That's another story, I think, to keep tabs on.
Yeah, I totally agree. And I think that there were so many interesting read-throughs. You just illustrated so perfectly about even outside of NVIDIA, because right now it has such broad implications on everything that is growing in AI, everything that is tech related. It's somewhat the centerpiece of so many other major industries that, yeah, there's so many good read-throughs, I think, that would actually illustrate strength. If you were really honed in on some of these details, as of course we are, I'd say you are pretty optimistic walking away from this report. Despite, of course, today's move to the downside, which we are actually erasing modestly in real time. We're down about now 0.8%, but so appreciate that. Really great insight on what is really moving the overall needle today, which is NVIDIA. Sam Abadas, of course, contributor here for the Schwab Network. And now, as we do look to trade this name, difficult because we have earnings behind us, but also we've been talking about how there's been this profit-taking mindset. There's been this somewhat of wait and see type of just overall commentary regarding NVIDIA because it's gotten so big. So now, at least this hurdle's been cleared.
Yeah, so much passive money goes into this, every other week or, every week, depending on pay periods, just through 401k plans and other retirement services. So it's definitely got a passive bid into it. I don't think this changed much. I don't know that this was an overly great report. I don't think it was overly bad. I think that the reaction being kind of unchanged makes a lot of sense. And we're just going with the trend. The trend's been neutral to bullish, and we'll continue to look that way with this example. September 19th, 170, 167.5 short put vertical, looking to collect 50 cents, so creates a 4-to-1 risk reward, risking 200, chance to make 50 per spread. Elongated Z risk profiles on this one. And the break even's at 169.5. So Jenny, you got a little bit of cushion here as the stock's back over 180. Higher probability of success on this one. Not a super long-term trade, just goes out to the middle of next month. But, absent some sort of major, I guess, sell-off in the AI trade, it's hard to see anything derailing NVIDIA at this point, given the fact that it just had, earnings that were mixed, and it kind of took that in stride.
I know, because we've been saying the risk of this earnings season right now for a lot of these tech names has been not just being able to clear the bar as far as top and bottom line, guidance, expectations. It's also been then you have to put up, something phenomenal for the street to reward you. So, or it feels like the outside moves to the downside have been
really felt like this could have been a report that was punished.
Yes, it does. And I was like waiting for every single word. I mean, like words of caution, words of uncertainty, which were mentioned. I will say the earnings call to me was one of the more uncertain that I have heard in recent memory, but hey, not resonating hugely today with price. So I think the fact that we're down 0.8% today, I mean, is a clear win here. So we'll leave it there for our NVIDIA discussion, although I'm sure you'll hear some NVIDIA commentary throughout the day on the Schwab Network. But coming up next, time to talk discount retail, as we do have still retail earnings to parse through this week. We heard from Burlington, Dollar General, and Ollie's, all these names seeing some nice strength today on perhaps better than feared reports.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to check in on retail, as we've been very tech heavy today, but there's still earnings moves that are definitely occurring today in the retail world, a lot of them being primarily in discount retail. Joining us now is Diane King Hall, the host of Morning Movers. So Diane, we have Dollar General, Five Below, Burlington, also Ollie's. I did see making some nice price activity today, all resonating pretty well with the street here. So walk us through what worked, what didn't, what to look forward to in these discount retailers.
Yeah, well, it looks like they are just winning in terms of this environment where you have a value-conscious consumer. That's a theme that I see across the board with Dollar General, Burlington, Five Below, all those shares moving higher. Dollar General had been bouncy today, but look, to be fair, it's been an outperformer year to date in terms of how that stock has performed. It did do better than expected in its most recent quarter. It beat on both the top and the bottom line. Net sales were up 5% year over year, topping $10 billion. I mean, this one is a big one. As you know, Jenny, it has a huge footprint across the U.S. They talked about the value-conscious consumers, and it's not just about their typical core consumer. There, they'd had, typically they'd had the lower-income consumer, but now you have consumers, middle income, higher income consumers who are seeking value, and so they're going there to a Dollar General. And the thing with Dollar General that works very well as well, more than 80% of their sales are from food and consumables, right? So those are a need to have, not a nice to have. So you are seeing value-seeking behavior accelerating within their core demographic and beyond that. And similar things that we're noticing in terms of patterns, for instance, at Five Below, that stock also moving higher today. It's also been an outperformer year to date. It's up 4% today. Before today's move, it was up more than 30% year to date. For Five Below, they boosted also their full year outlook. They beat on both the top and bottom line, and revenue topped $1 billion. So that's a milestone that when you want to think about that company. Tariffs is something that's come up in conversation, right? And they've been managing clearly the tariff risk there. One of the things that Five Below talked about on their earnings call, the CEO talked about, is just getting the price to where consumers just find it acceptable, and then sometimes just making the price $5, as simple as that. People are like, okay, that's the price, we'll pay that. And one of the things that I noticed when I've walked into, for instance, a Five Below, it's very bright, so it's inviting. It doesn't have that dark, dismal feel. So they've got that, and I can see why young people like this, because younger people like to go to Five Below. They had strength in school supplies. That's something that they talked about. They leaned into more recently. They have room decor and toys and games. They also said there was some strength in toys and games, back-to-school items, seeing a lot of focus there, backpacks, and there's some licensed backpacks as part of their strategy recently that they've leaned into. But the one thing that I also found interesting, Burlington, that is having a big move today. The stock up more than 7% at my last check. They did better than expected. EPS coming in at $1.59. Revenue came in at $2.7 billion. That beat estimates for Burlington, and they talked a lot about tariffs on their call. Comps rose 5% for them, and they talked about just managing tariffs and how they manage that well, especially given some of the turbulence earlier this year. They said their buyers pivoted fast, because that's the thing with these discount retailers. They could say, oh, we're leaning into another segment to make up for the challenges that have more tariff exposure. So you think of like a Burlington, a TJX, etc. So he talked about their buyers being able to pivot quickly to sectors with less tariff impact and stronger and more reliable supply, because they said, look, earlier this year when you had that hefty tariff on China of more than 145%, there are certain things that you get from China that you really can't get anywhere else. There are a few alternates, they said, but for their buyers to be able to pivot and find, let's get decor from somewhere else versus the cookware and toys that come from China, their buyers did well, and they did well in this most recent quarter and raising their guidance.
Yeah, and really great, really breakdown and summation of what we're seeing, across the board. And I agree. Something you mentioned was the back-to-school season. It seems to be just off to a fire. Yeah, I guess kids are already back at school. And to me, it's like perpetually summer until it's not, obviously. But I will say that the trends of back-to-school have been far better than feared. That's been echoed now across all of these retailers. So maybe we're still discount and bargain shopping, but we are obviously having to, supply our children as they go back to school, which has been echoed across the board. So great breakdown, Diane King Hall, of course, host of Morning Movers. But now to shift gears entirely, I'd like to talk all things Cracker Barrel. This is our third day of discussions regarding Cracker Barrel and some of the major blowback and really, I'd say, social upheaval regarding the logo change that now has been resorted back to the old logo. I'd like to welcome in Adam Porlock, the founder and CEO of Pinnacle Public Relations. So Adam, thank you so much for joining us. But first, let's start with, was it really even about the logo?
No, and that's the thing. This was not about the logo to begin with. What Cracker Barrel did, unfortunately, and they're reversing course now, is take a sledgehammer to their brand identity. Their brand identity, which includes the logo, but also includes the nostalgic feel of their locations, their stores, they really hurt it. In not just the change of the logo, but the change of the inside of the stores, everything that they were trying to do with the rebranding. Time will tell whether this is just a bruise or a break for the brand. It seems as though they're getting back on track, reversing course on the logo and a lot of the brand changes. The best thing they can do now, which they should have done before this, was listen to their core customer base and determine what is going to keep them to continue to come into their stores, continue to bring their families, etc. So time will tell. They're on the right track now, but as fast as this story is moving, that could change by the end of the day again.
Adam, as someone who works in public relations and has, you know, kind of the ear to the ground here on this, I'm sure you got some insights. Like, how did we get here? Like, that's the thing that, like, how is this a national story? I get the, you know, political tribalism things, like how it blew up to here, but how were you so out of touch with your core consumer? How was your plan so off base? And why were these changes even implemented? Like, are they struggling to begin with, and they're trying to flip the script? Like, how did we get here?
Of course, I wasn't in the room with the C-suite, but I've seen this a lot, to where they panicked, essentially. They were looking at spreadsheets and metrics. They were concerned, obviously, about an older, aging customer base. And the thought process behind this, it seems, was how do we appeal to a younger generation? How do we get younger families and younger people into our locations? And it just was the wrong approach. The spreadsheets, the metrics should not have been the only factor in the decision making on this rebrand. You know, having a clear customer research strategy to determine what's going to keep our core base here and then what's going to add value to expand our base should have been their approach. Unfortunately, they didn't take that track. Let's hope that they do now.
Okay, so to broaden out here, just outside of even Cracker Barrel, but fitting with this theme of this public blowback, and we obviously follow, I mean, like the market news, but then I follow a lot of the social news that is still amongst like my social media feeds, and there's been a lot of overlap, like with the Sydney Sweetie, American Eagle, Target, DEI, the Bud Light, all these things to be said. I mean, why are companies making these, what to me seem like just egregious mistakes when not knowing their audience, and it feels like it's happened more frequently as of late?
It is, and you begin to wonder how much of that, you know, how much of the customer experience, customer research, just how much is the C-suite actually getting into their locations to really understand the core of their customer base? It seems that this disconnect continues to grow between the C-suite and their core customer base, and more brands are doing it. Now, some brands, let's take Starbucks as an example, was on a similar track. They were losing sight of who they were as a brand. They were making the assumption, their former CEO and others, that any growth was good growth, and so let's just overwhelm each location with customers and mobile ordering and the rest. Now they've made that change. They made the pivot. They now have a new CEO, and they're getting back to Howard Schultz's original idea of being that third place between your home and your office. Cracker Barrel could do something similar here. They're starting on that process. Their last statement they put out is good. They're talking about how they're listening, how they want to get back to their core base and their customer base. But the next steps is that they need to get, you know, it's great to start putting it out there that you're listening. Now, what are you doing after that? And it's a great lesson and case study for other brands. You mentioned that there's others that keep doing this. You know, this is a great framework of what not to do and just how important that customer research truly is.
Yeah, I mean, I couldn't agree more. And I mean, I know it's difficult to always make everyone happy, but it's just like, you know your audience, really simply put. Yeah. So we're in total agreement there. But so appreciate your time and bringing all this insight into what has been a surprising stock to cover for the last, several days. But now shifting gears here, and coming up next, we are looking at HPQ earnings. And this name, we are seeing some overall really optimism following this quarterly print. So we'll dive into why shares are up 2% coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into HPQ and some of their third quarter numbers that were clearly optimistic. We're up about 2.3%. Joining us now is George Chilla, Senior Markets Correspondent for the network. So George, walk us through what resonated well. I will say not a huge pop, but finally seeing at least some positive price activity post-earnings for these names that have not really seen favorability in the last year or so.
Yeah, I think, if you just look at the composition of HPQ's business, it's just traditional personal computing devices and printers and imaging technologies. But, there may be some positive catalysts in this space. You got to think about changeover in technologies, at least from a desktop or notebook standpoint. Artificial intelligence enabled technologies and computers maybe a next wave of secular growth for HPQ. But overall, it's been a business that really hasn't grown all too much in terms of sales and earnings, somewhere in the mid to low single digits. Not necessarily a bad thing. It's just not been a growth story. And I think that's why the stock itself has been down. Having a nice day today, but it's been down about 23% over the last year, even 12.5% this year. But if you look at the numbers, they were actually pretty good. In terms of being in line with EPS at 75 cents a share. But you have to be mindful that was actually lower, Jenny, than last year for the same quarter where the company earned 83 cents. So it was down about 9.75% in earnings. Sales did beat estimates by over $250 million, but that was higher by only 3% to $13.93 billion. They did increase slightly their guidance for the fiscal year, both in sales and earnings. But, obviously you're seeing a positive reaction on a positive quarter for the business. But I think the challenge really has been for a business like Hewlett-Packard is there's really not been a lot of growth in the PC hardware space. We know there's tremendous growth in GPU accelerator chips, which of course are embedded in Hewlett-Packard's computers. But nonetheless, it's really a steady state business that has a pretty much a large market share in the PC markets like Dell, Lenovo. Those are two major competitors. With growth really in the mid to single digits, with a stock that's trading at essentially a PE ratio of around 9 times forward earnings.
George, do you think, given kind of the changes and rotation that we've seen in the market, this is one of those names that could see a little bit more of a bid, given these earnings were a little bit, better than they have been, and this desire to find things outside the mega caps?
I think so. The reason I say that is, you have to look at some of the core technologies within computers, PCs, and notebooks. You look at memory chip makers, storage chip makers. So look at Seagate, Western Digital, Micron. For the most part, those companies have done well. Intel, we got to put that aside. That's a different story altogether. But AMD in the CPU space and the GPU space also doing well. Within computers, NVIDIA in the GPU space. So I'm not saying that Hewlett-Packard Company, HPQ, will perform like those names, but the components within computers are generating good margins for those other businesses. So it may be suggestive of a PC cycle upgrade. And if you think about artificial intelligence and all the computing power that's needed, there'll probably be a big upgrade cycle coming in the next maybe 2 to 6 quarters, and that could certainly be a short to near-term catalyst for HPQ.
Yeah, and definitely seen as a win today as we are not up hugely, but I would say definitely clearing at least a hurdle for the near term. Appreciate that, George Tillis, Senior Markets Correspondent, for providing all that insight on HPQ. And that will do it for us for Next Gen Investing for this Thursday, with markets looking pretty unchanged from where we started just about 57 minutes ago. Now the watch list is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange. We have a big show for you. Of course, we'll talk about NVIDIA and the back-and-forth action that we are seeing, and it's looking like another winning month on Wall Street. We'll take a look at crypto following the recent weakness in Bitcoin and legislation surrounding that asset class. We'll break down everything in the market's concentration in technology and look at one way of investing beyond the tech sector. And, of course, some details on NVIDIA's earnings after all the latest and the news and the outlook, right? And the Blackwell chip going to China. we'll break that down for you as well. In the meantime, let's take a quick look here at the markets. As I said, we've had back and forth action right now. You are seeing up arrows. The S&P 500 hit a record, yes, a record day on Wall Street, hit an intraday record high. Right now it's at 6,498, up 16 points. The NASDAQ 100's up 0.5%. The Dow is up 21 points at 45,587, and the Russell is gaining 2 points. Oil and gold are both higher. Gold's up about $27, sitting at $34.75 a troy ounce, $64.38 the barrel. That's up slightly. 14.16 on the VIX. The 10-year bond yield is at 4.21. I see 4.22 on this chart. And Bitcoin 112,505, and that's up about 0.25% today. So we're covering a lot of movers and story stocks as well, and all the big news. Kevin Hanks joins me, host of Fast Market here on Schwab Network, taking a look at some of the biggest stories on Wall Street. We'll start with that GDP print of 3.3%. What are the takeaways here?
Interesting, yes. This was the first revision of second quarter GDP. Remember, it jumped from negative numbers to 3% in the first look. Well, this one revised up to 3.3%. Personal consumption expenditures, the annual number revised from 1.4 to 1.6. But when you dig into the numbers, Nicole, this number gets even better. Why? Well, the upward revision to 3.3%, up 0.3%, upward revisions to investment and consumer spending, very positive for the U.S. economy. What the detractors were, think about this. The detractors were government spending lower and higher imports, which actually take away from GDP. So better investment, better consumer spending, lower government spending. Really good news inside the numbers for GDP. This was an even better number than it looked like on the surface, Nicole.
And look, we'll get that big PCE print tomorrow. Waiting on that. We got the jobless claims in. We saw those go down week over week, and the continuing claims coming down. So some of the news has been pretty decent. How about we look at a name like CrowdStrike? I saw it up briefly for a little while. Where is it now, and what's the latest?
CrowdStrike up about 4%, but if you look, when this company released earnings yesterday right after the bell, the stock traded down as low as $387, now trading almost $440. So over a $50 flip from the initial look on CrowdStrike to where it is now. Here's the numbers. Beat on earnings per share, 93 cents versus 83. Beat on revenue, 1.17 versus 1.5 billion. 1.15, sorry. Revenue growth, 21%. ARR 4.66 billion plus 20%. These are all good numbers. That number, that average recurring revenue, or annual recurring revenue, sorry, that was a strong number. That means that subscription revenue is kicking in, and the fact that that's growing 20% means that this company's the footprint that we learned. Remember when they had that outage on the software update, we learned the massive footprint of CrowdStrike. That footprint just keeps getting bigger, Nicole. So great numbers out of CrowdStrike, shaking off the original dip when the numbers came out, now up 4%, trading just under $440.
All right, Kevin Hanks, great to see you there at the CBOE. Much appreciated. A good luck each day. Thank you. Now let's take a look at the bigger picture. Max Wasserman's with us, founder, senior portfolio manager of Miramar Capital. Thanks so much for being here. I mean, the market action, you see back and forth and even some records this week and last week, and the Fed is standing by to make some decisions. How do you feel about the market? And then I want to ask you about the Fed, too.
Sure. Thank you for having me on. How do I feel about the market? And it ties into the Fed. It looks like you have a Fed that's going to have a put option that basically the earnings are good. Inflation, they appear to be under control, and the Fed looks like the pressure to cut is so dramatic that we anticipate them to cut interest rates. But the earnings are substantial here. They're very good. They're solid. And right now, technology, again, AI is leading the way. And if you have AI exposure, if you have technology, you're winning in this market right now.
I thought you said 50 to 75 basis points the Fed will cut between now and the end of the year. You think they'll be trying to use labor as the issue, why they would justify cutting?
Well, I think we wouldn't recommend they cut interest rates. We think the economy's fine. We think there's embedded inflation. We think the pressure here to cut is going to be so dramatic, and they see a slowdown as we do coming in the second half of the year in growth, and unemployment should start to rise a little bit. So they'll use that as an excuse. They just did that explanation last time Powell spoke. He brought up unemployment and slow growth, which is a change. So we think with the Fed funds rate about 4.25 to 4.50, inflation around 3, that gives them room to actually cut 125 basis points or even more. So we think a beginning of an easy phase is going to happen, whether it's September or the next time, we're not sure, but we expect them to start cutting, which will give a lot of fuel to these multiples right now.
We talked about AI still driving everything. What are some of the best positioned names in the world of AI that you like?
Well, we're dividend growth investors, but our top positions right now are Broadcom, Microsoft, and Alphabet. We think they're all big beneficial winners. They've really grown in our portfolio. We like them. But we're a diversified investment manager, so we look outside, but we still like those stocks, but they're not cheap. They're trading at 40 times, 30 times earnings. Actually, Google, Alphabet's trading at less, at 20 times. So we like them. We think they're going to benefit from all the AI spending, but it's reflected in these multiples. So we think the real fuel for AI spending is going to be a Fed cutting interest rates, which will allow these multiples to be sustained at this level.
I see. And then when you talk, so these names are your tech picks that you like. You mentioned Broadcom, Microsoft, and Alphabet. Do you have other sectors or names that you do like as well?
Sure. If we go under the assumption that the Fed is going to cut interest rates, we think that's going to lower the dollar. And a lower dollar usually benefits oil companies, oil stocks. So we do like the energy sector here. Again, they're paying us very good dividends. We have investments in Chevron, which gives us a 4% dividend. We have One Oak, which is a pipeline that gives us over 5%, and EOG exploration that gives us 3.5%. So we think as the dollar lowers, that should benefit oil stocks because oil is denominated in US dollars. And we also like Home Depot and McDonald's here. If the Fed starts cutting interest rates, we think that will give a jump start to the housing market over the next 3 to 6 months. It's going to take a little while, but we think they'll benefit from that. And the market discounts so quickly that if the Fed started a major easy cycle, we think Home Depot would be a big beneficiary.
On PCE and inflation, and I mean the tariff talk is still going. Some are worried that inflation will rear its head once again. Is that something you're worried about?
Nope. Well, we think inflation's embedded. We don't think the Fed should cut, but it doesn't matter what we think. We think the consumer is tapped, though.
Doesn't matter what we think.
$1.2 trillion in credit card debt. We're starting to see some delinquencies start to tick up
back.
a little bit, and we think unemployment's going to pick up. So there's going to be a balance here of trying to counter inflation with a slowing economy. And we think the shift by the Fed is going to say we don't want a slower economy and unemployment start to rise. Even though we believe there's almost a stagflation coming, they're going to cut interest rates. We just think the pressure's too much on the Fed, and the Trump administration is, whoever he puts in there, they're going to be cutting interest rates, and you can't fight that.
And what do you tell people when they ask you about the other Mag 7 names?
Well, we tell them for us, they're good companies, right? They're all very good companies, but the multiples are so rich. You have to understand that as soon as the rate of growth starts to decline a little bit, you're going to pull back a correction. And remind people, back in April of this year, the NASDAQ was down 20%, right? So that means NASDAQ had to go up almost 40% to where it's at right now since April 8th. So we tell them volatility is here, and while the momentum carries technology, we remind them what can happen. Look in 22 when the NASDAQ was down 30%, and look at just in April. So yes, we want exposure there. Yes, we want growth, but you've got to manage downside risk here, so you must diversify away.
Does crypto have a place in the portfolio? Are you a fan or not so much?
Not a fan of it. For those, we don't invest in alternative investments like that. I like gold, but we don't invest in gold directly, no.
Yeah, no, I understand. And last but not least, when you look at the year ahead, any final thoughts, as we get into 2026? I mean, you said the earnings have been looking pretty good overall.
We think earnings are probably going to start to peak in technology, right? So when
we're
going to be looking for other parts of the market.
You're thinking wrong, buddy.
And with the cutting of interest rates, I think you're going to see that happen. So the other parts of the market, like consumer discretionary,
You're
like
wrong.
energy, like staples, those things should benefit. Again, imagine for a moment that if the Fed does cut anywhere from 100 to 150 in the next 12 months, people are going to be looking for alternative yield plays, and we think that plays into dividend stocks because money markets are giving you about 4%. So imagine if they're cut down to the 2 range, people are going to start looking for other things. So we think there's a lot of fuel that can come into this market outside of technology.
All right, Max Wasserman, thank you, founder, senior portfolio manager, Miramar Capital.
You are
Great to see you.
wrong.
Thank you so very much. Coming up, Options Corner. Tom White standing by. He'll highlight unusual options activity from the day, how investors are looking to trade on recent news of Occidental Petroleum, Salesforce, and Broadcom. Those are coming up. We'll be right back.
We got a rising wedge. I'm back. Tesla, how you doing? Technology's over body says. Oh. Uh-oh. What'd Jimmy say? Anybody remember? Woo! Jimmy's back. He went to the mall. So I'm sitting here. I went to J.C. Penney's just to look. And I wanted to go up. I wanted to go down the elevator. Not the elevator, but the escalator. And I heard this big boom. Down at the bottom, this woman fell down on the back of her head and cracked it open. I said, so I was at the top and I said, we need help over here. That's the first time I've ever seen anything like that. I mean, if you can't get on an escalator and get off of it, you don't need to be on it. Now, I know a guy that does real good on the escalator. I mean, she was knocked out cold. I wasn't the first one there, or I'd have been down there helping her out. But the time I got around there, I heard the big boom, and there's already 2 or 3 people around her. Uh-oh. Funky's here. Nope, he says. I heard you.
My God. I can't believe you're not taking me with you.
You can go. I'll take you. You'd have your freedom for a little bit.
I don't think I have enough liquor to have me and you both.
Probably not. I don't plan on drinking too much.
I don't ever plan on it. It just happens.
Oh, yeah. Oh.
I needed more of a pull back than that. Come on, man. Shit. This thing's strong.
Feels good to have that chain around my neck again.
That's what she said.
Yep. Oh yeah. Well, if we don't hold to 63, you'll get your wish on that /ES on the 1 minute. I think you'll get all the way down to 65.04 if that happens.
I have found the coolest trick on TradingView.
Oh, let's see it.
Oh my God. You're about to wet your pants. Hang on, let me take the VWAP off real quick. Alright, so let me share my screen. See those 3 lines on my screen?
Let me see. Yep.
This is the coolest. See how they're being respected?
Yep.
You know what they are? This is the coolest shit. If Toss had it, oh my God. I have 3.
Bollinger Bands? I mean, alligator bands?
I have 3 200 EMAs, but they're set to different time frames.
Oh.
So this is the 1 minute 200. This is the 5 minute 200. This is the freaking 15 minute 200.
Oh,
I
interesting.
have 3 200 EMAs, and they're being respected. Like even if you go days past, they're always being respected.
Yep.
When you get knives, the 15 minute 200 EMA grabs it.
Did you hear that? He's using the EMA now.
Dude, this is so cool.
Yeah,
the
it
knife
is.
we had this morning, guess what grabbed it? 15 minute 200.
Huh.
Swap it over to a 1 minute.
Toss don't do that, huh?
Then your freaking 1 minute 200 comes in. Toss doesn't do it, no. The knives this morning pre-market, guess what? The 5 minute 200 EMA was catching them. This is a really cool setup.
Would displace have anything to do with it?
I got no idea about that one. Gotta add my VWAP back.
Yeah, that is cool. I wouldn't have to move back and forth, but I'd have so many. But I'd have so many. I have to move back and forth time frames.
I love it.
Yeah, I'm almost convinced. I mean, it took me forever to figure that out. I would have never probably figured it out till you told me.
And it doesn't even matter what time frame I'm on. Like if I swap to the 2 minute here, they're still being caught at one of them. Swap to the 1 minute, they're being caught. Swap to the 5 minute, one of them's catching them.
Yeah, that's cool. I'd have to say.
TradingView is such a better platform for charting. glad I turned that on just now. We're at the top of a rising wedge and a double top. These AI chart patterns that it draws for you are legit.
$125. There we go. We're just now hitting, breaking new resistance.
Give it to me, SPX. Give it to me. 6,500. I want it. I called it.
Very good.
Do it.
You did, I remember.
Do it. Don't make me a liar. Don't you get the 64.99.90, whatever the hell that was.
6.
Better get your ass up there to that 6,500 mark.
I'd say that's close enough.
I mean, it wasn't even a guess. It was where the freaking gamma exposure was. That stuff is like a cheat code.
I gotta go right at 3.
Yeah, I do too. I got a customer thing. I'm buried in work these days.
It's very good to know. Mister's pulled back.
Go. Go, 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 go. Oh my god, it hit 99. Are you kidding?
He says, I ain't giving it to you.
Oh, this little tease. It was a penny off. Are you kidding me right now? A nipple necklace.
He called it a nipple necklace. It was 20-inch, Michelle. I thought they were 18-inch, but no, it's 20. Uh-oh, Sue posted something. Video.
Damn.
Boom. This market's very bullish.
Dude, ES can go all the way to 65.22.
I'm afraid to even look at my calls. Well, they're not up as much as I thought they'd be. Huh. They've been losing value.
Mm-hmm. Yeah, they decay really quick at 1 o'clock. Or 1 o'clock Central.
Yeah. The video just broke my resistance. 180.58. Not know when I put them on there.
I definitely got out of my 6500s too early, as usual.
Yep.
I'm at 310 there at 490.
Well, they popped up there. I think I'm gonna go make another cup of coffee. I'll be right back. I still feel like I've got a lot to do. I don't think I'll ever be done.
Dude, I got so much packing to do that I've been putting off.
Yep. Because you're moving?
I freaking hate moving.
Yep. I went over to a girl's house last night. She started, Jim, will you help me move?
Yeah, that sucks. It's not what I'm here for, baby.
No. If you don't help me move, you're not going to get no dessert.
Oh man, where do I put some? I don't even think I'm gonna buy any.
There it is, folks. My pennant, my silver pennant. Someone in the room called it a nipple. I got that at the Grand Sunset Princess in Mexico.
And I gotta find some resistance. Oh, never mind. There's no resistance because we're in clean air now. Hmm.
The video's improved. Intel Snow up $47, 23%. Jeez. It's under $200 yesterday. I didn't see that one coming.
Oh.
Oh, that reminds me, I gotta get cash.
Do they take American dollars?
Yep.
Really?
Yep. Dominican Republic does. Jamaica does. Mexico does. I think they all do. The tourist destinations. I'll be handing out $5 bills to everybody. Here, man, make sure you fill my refrigerator with water. That's all I need. I don't want no soda, just pure water, and I'll give you a 10. I don't want to have to ask again. Hey, honey, I'll give you 5 if you make sure I get my coffee on time filled. Room service. I want it now. One guy said he had to wait 2 hours for room service at this resort. I hope that don't happen to me.
Yeah.
It'll be the first time I ever have tofu. I think it's tofu. Fondue. That's another thing I gotta do, I guess. I might go do that right now. Get the money. Because I got a lot to do after 3. I'll be back. I'm gonna go do that.
Oh, you ain't gonna miss nothing.
No. You gonna be on here?
Mm-hmm. Yeah, till 3. Then I gotta get on with a customer.
Okay, because I'd turn the TV on if you're... I know you don't like that thing on, so...
I can see if we get one pullback before the end of the day so I can catch another long,
but I gotta get that cash. I'll be back.
Watch this next 5 minutes. Got 2 black crows on the 5. Let's see if we can get a third black crow on the 5 that pulls down to the 9. Then I'll take a long.
Oh, I left it on AMD. I'm back. God, new high. SPY.
Yeah, it just keeps going. I can't stop it. I've tried to stop it. I can't stop it.
What's that?
I said I've tried to stop it. I can't stop it. It just keeps going.
Jeez. What are these things worth now? I don't even want to look.
$1 billion.
650. I think that's the most cash I've ever had in my pockets, and I don't care, 8 years. No cleavage on Jenny today. I like her top though. This girl dresses, I mean, she has 101,000 ways of dressing. Never the same. This girl's always the same. And that makes her, I mean, she looks like a babe there. Okay, first pullback. We respected the 50 SMA earlier, so I think that's what we got to do.
I got my eye on these 6510s if we pull back far enough.
Let me see here.
Because I can see what the orders are on the book map for ES. It's all the way up at 6522.
It's 6 minutes post power hour.
Mm-hmm.
Be nice to get back to 6,500. And then hold that support level. Yeah, she's using that number because it's a major break. I've heard a couple fat cats call it out. Snowflake rallies to more than a 3-year high. Are you serious? I thought that was, I think she's wrong. No, she's right. Two-year high, baby. Not a 3. Damn, that'd have been $100 a contract right there on the 6500s. $650 had been $140.
Oh, it's okay. I bought the 6500s earlier for $190. This thing's going to be stingy and not give me another freaking play.
We're thinking that the SPY might keep running.
All I wanted was RSI to come down here. Did you try that RSI thing that I made for toss?
Not yet. I saved it.
It's badass.
I saved it. I got to remember what number that was. I got to learn how to change the names on them.
An RSI that uses candles and a moving average. Oh my God, it's so badass.
Huh.
I love it.
I used to only trade with the RSI.
That's all I have on my screen right now.
Yeah.
Let me
Would you
screen up.
I tried to private message you once. I don't think we're friends anymore.
Oh God, we have to be friends. Did I really take you off?
I think, well, you had some kind of...
No, you had so many imposters. There were people, I almost fell for one of them.
Oh,
I
yeah.
deleted everybody that said Washboardjim.
I
literally almost fell for one of them.
They had another... Well, the only way you're going to get a message from me is if I say, bitch, how you doing?
All right, I sent you a request. It's a lot safer when I send it to you straight in the Discord. I wish I could remember it. It was Washboardjim with like a dot behind the name.
There's so many of them. I mean, the guy messaged me yesterday. Guy messaged me yesterday. Jim had a double, had on Stocktowitz. You have so many imposters. I said, it sucks to be good.
I couldn't see which one was the real one until you gave me mod, and then I could go into the users panel and look at all the fake ones.
I accept.
Accept your challenge. But no, like, you see my screen?
Yeah.
You see my RSI thing? Like,
Oh,
watch
no.
what happens every time this sucker comes under this 20 mark. Bounce up. Under the 20 mark, bounce way up. Under the 20 mark, recovers. Like, literally, every time you come under this 20 mark, just sit in a freaking trade.
Yep.
Because it's coming back up. Under the 20 mark. Huge rally. Like, this is freaking legit. I don't touch anything in this area, this blue area. I wait for it to come down under the blue area and then I get in.
Trying to remember.
As long as I see these wicks.
Weighted VWAP or...
No, this is, it's called RSI Prime. Or Smarter RSI, that's what it is. It's called RSI Prime and House.
Yeah.
But I mean, I run it in toss as well. I just like TradingView better. Like, I don't even have toss charts up. I only have the active trader screen up so I can put my orders in. But I do all the charting on TradingView now. Now, if we start to knife or something, I'll pull this screen up from the bottom because that's where all my price action is, so I can see my moving averages. Like I said, I got these 3 200 EMAs. The 1 minute, the 5 minute, and the 15 minute. One of them's going to catch that knife, so I ain't got to worry about that. I don't have to change time frames like I do in toss.
Keep it simple and clean.
Yeah, but for the most part, all I'm doing is watching this RSI, waiting for it to get out of that blue area. Then I might take a peek and see if we're sitting on a major level. But regardless, I'm going to get in the trade if it comes down here because I know it's going to bounce.
We're at the 21 right now. If it doesn't hold to 63 at 648.84, bigger knife coming. I'm really done for the day. I need to be back there reorganizing my suitcase. Holding the 50 so far. I'll be right back.
this trend line. It's holding it. Seconds to close. Let's see if it closes under or if it actually opens. It doesn't look strong. It should be bouncing off that trend line better than that. Yeah, almost it.
Here we go, 63. Do or die here.
Yeah. Yeah, it just lost the trend line that I had drawn out.
I don't know if I want to do it or not. I don't really want to. I think I'm going to wait.
Why is that the crossover? I'm looking at the damn time frame. Wrong time frame.
Damn.
Good. Look at that. I was looking at the wrong time frame when it hit the damn 20.
Well,
It's supposed to be on the 1 minute.
I was looking at the. We just hit the 21.
Yeah, but shit.
See, this in here had me a little bit nervous. There's $150 right there.
But just goes to show you it worked again. Anytime it comes out of that freaking blue box, this some bitch wants to run back up.
Let's see if they really wanted to.
Gonna retest?
Yeah, I was going to say, let's see if they really wanted to hold here. 420. Randy, your number's up. Mine's going to be here shortly. 401. I'm afraid to get in it. I really am. Because I think we could go a little bit lower. There's 400. We got over there. I see. We got that. I just now noticed that one. We're right at support. Let's go for it. I'm going to go for it.
Boom.
420 to 460.
In one candle.
Come on. Damn, you're lucky, Randy would say. Come on. We've got a wall to break. I might join the weekends here in a second. Because we are kind of, huh?
As long as you hold this little 65-1650 support, the last 1, 2, 3.
Oh hell, I'm looking at the SPY. Fuck. I'm looking at the SPY.
God.
That ain't right. That was a bad mistake. Come on.
See some big bottom wicks.
Yeah, that's stupid. So this was my original, when I called this thing out down here, my original support line. From that snake this morning. So it's... And I got a huge wall in front of me.
Literally only going to look at my RSI candles.
There we go.
Exactly.
470.
RSI candles jumped above the moving average.
It's 480. I'm going to go ahead and get out of it here. Whew. 470. Come on. Now they give it to me. Can we break the 50? I don't know. I'm going to get out right now at 480.
We just broke above previous resistance on these RSI candles.
I'll take that to the bank. Out at 470 and 480. Once I hit that 50, I said I'm done.
He's done, ladies and
go get my coffee.
This is looking pretty weak. Not gonna lie. The RSI didn't bounce near as much as it should have. That was a weak recovery.
Glory, glory, hallelujah. I got 3 jobs I got to do tonight, and I told every one of them I'm doing them half-ass.
I mean, at least you know, let them know ahead of time.
Mm-hmm. I'm gonna miss working. I think it's kept me out of prison. That was my mindset anyway, and it's kept me out of relationships too, though. I got one right now wanting to tie me down.
Hey, see if we can hit this 65.13 with RSI out of my blue zone.
Hope you ain't listening, Patricia.
She can't hear you from the kitchen.
Well, that's Nancy.
I'm gonna get my ass kicked in here one day. Shell's literally just gonna show up at my door and hit me with something.
I've never had a woman that could cook.
Me either. Nah, I ain't gonna say that. My mom could cook the hell out of everything.
Yeah, but she's not your mother. I mean, she's not your woman.
You said you've never had a woman.
No, a woman. I wouldn't call. Okay. Well.
What was your mom? Was she not a woman?
I used to call her Bull Ramus.
Just say you ain't never had no lady that could cook.
I never had a sexual relationship that could cook.
There you go. This looks a little bit interesting to me right now. My RSI candles are consolidating. And there they go. Right as soon as I said that shit.
There's $100 contract on that dip. There's $4.90. That would have really took the trade. $5, dadgum. Oh well.
It's going higher.
I would have got. Yeah, I would have freaked out though once it got down there to 360, 350.
That's how they shake us out.
Mm-hmm.
550. My damn 6505s went from 160 to 220.
I just left $140 on the table. Guys, how many girlfriends have you had that could cook? Johnny Ringo, does your woman know how to cook? 580.
I swear to God. I didn't even get it out of my mouth good.
At least I took the trade.
This looks interesting. Like 1 second later.
At least I took the trade.
You did.
Randy, can your woman cook? Johnny Ringo says she's the best cook. He got lucky.
Yeah, but his name's all white. How much can you trust somebody like that?
Yeah. Gunslinger. Get in there and learn how to cook or I'll shoot your head off. Shoot your feet.
That was my entry that I wanted. Now they're just going to run this pitch. Oh, no, they won't. They're going to run it up to the friggin' 65. There's all those orders. Oh my God, they've moved them. Now they're all the way up to 65.30. These people are real damn bullish.
That was your number, Randy. You could have got in there. I'm getting anxious. I hope I do everything right on this trip. Last time I left Springfield, they almost strip searched me.
Was it the nipple necklace?
I think it was because I was stoned.
Oh yeah, they didn't frown on that. Well, they used to. So much. I think half the people that served me my damn food are eyes cut.
He looks high. Did you sniff him? He has a little too much cologne on. I accidentally left a bud in my suitcase on the way back from Jamaica. I found it just like a month ago when I went to clean up my... And that was years ago, 2015. I said, I said, damn, I put that in my suitcase. And I took it out when I was in Jamaica and put it in my safe. But I didn't take it all out. There's $6.10. That'd have been $400 almost. 400 right there. I've had a pretty good day. Besides that first trade I got, that second trade I got in.
Oh man, I think this. Oh God, I wish I just had limitless money.
How long you?
Just
How
be
long
like
you?
a fun trader and just play with other people's money.
I'll give you some.
Because what I think is about to happen is at this 10-minute mark, this bitch is going to scream.
At least get to a double top. SPY's almost at a double top. I can't believe I was looking at that.
God.
Boom, there it goes. It'd been $600. 720. Randy, I said 420, didn't I? It's your lucky number.
It's not done yet. God almighty.
I don't think Michelle can cook either.
I don't know how much more popping there is, Bobby. Like, literally, dude. Let me take a look at the book map, but, I mean, holy, where'd they park us at? Holy shit, they've got the orders way up at 65.30 now.
Oh God, you've traded nothing today? After everything, are you scared?
God.
Randy.
This isn't...
You know why we're bullish? Because I played music today.
Is that what it is?
Yep.
God dang, look at the volume on the freaking 6510s moving. They're buying them hundreds at a time. $249.
Yeah. You know what's going to happen when I get back?
You're gonna be sunburned.
I'm going to be sunburnt, but I'm also going to be worth about $400 and some million.
Okay. I can go with that.
Yep.
Ed, is that you? Ha! She has a little extra. She can make you laugh while she's fixing sandwiches.
Bologna sandwiches to boot.
Hey, there's your mark. There's your 50. Whatever's gonna do it, better do it quick. Yeah, do that. I'm gonna play again.
Hello, Libby Goose. Hope you have a nice weekend, and thank you for bringing pleasure into my life with your music. I want to hear a good one when I get back about my trip in Punta Cana and the $40 prostitute I'll be picking up.
Well, at least Michelle's meme is relevant now. Why are y'all going on vacation? Y'all not work? Jesus Christ. Am I the only guy around here that has worked 16 jobs and move a house? I ain't got time for no damn vacation. Crackers. Got a big bottom wick here. Steps.
So when's that Canelo Crawford? Oh, September 13. I got my money on Canelo. If he can handle and keep him cornered. If you can keep him up against the ropes, I have Canelo. There's another nice bounce with that hammer. 3 black crows. It's been like that all day. I mean, perfect. Well, YouTube won't be on tomorrow. Hope you can live without me. Martin Breck says his wife can't cook. Hey Jim, how do you think NVIDIA will finish this week? Let me look. I think we're going to consolidate after earnings. And then Monday, we'll find out if we can break resistance. But if it goes up, it'll be 183.60. Are you there, Martin? 183.60. $183 something, 183.50. And support. I think it's going to take a couple days to change a few minds. And support to hold, has to hold 175.60. And I did call the 172.12 and we hit 171.86 before earnings. So the pivot point is going to be right around 177.32 area. 177.50. That's going to be your pivot point. In fact, I'm going to put an alert right on that blue line. So I think we're going to consolidate, not break out. We'll break out in a week or two. Takes time. We've already had a good run, so it's just going to... They'll talk about it a little bit more. And I think the only negative about it is that when China finally figures out the chips, that they won't be buying any of our chips anymore. Just like everything else. Once they figure it out, they kind of drop us. Start building them their own. So it all has to do with China. Are you there, Martin Brex? Probably not. And I want to give thanks to Richard Nixon. He sent me some money for my trip. I think we're going to consolidate. But if we're going to break resistance, it's going to be 183.60. And we could double bottom at that 172. But that's a major support. 170. What'd I say? I thought I had 172 on here. Oh, yeah. 170. Oh, shit. Yeah, 172.12.
Gotta get on a call with a customer. Have a good trip, buddy.
Yepers, thank you.
I'll be in the room tomorrow, but like I said, I got to work it around the movers and all that stuff. So.
Yep. It's all right. I won't be here. So it's get on when you can. Okay, well, I gotta go do my duty. So I'm gonna get out of here. I'll come back a little tanned. I make sure I had plenty of suntan lotion.